coming off, and the oil was high, and their stocks were reporting on that. Now you've had this seesaw action, and then they're going to report earnings again. What do they say? I don't know. You got PG, you got UPS, some of these other consumer staples names we've been talking about. MasterCard, Robinhood. Obviously, we know what's been going on with trading. I watched that stock. Actually, I was thinking about selling a put in there this week. That stock was down like 6% the other day. So like things like that. It's going to be Roblox. How much money is that thing taken away from parents? That company, things like that, man. What's that over there? That's Coca-Cola. So yeah, it's going to be, again, there's going to be a lot. And these are just a few of the names. There's going to be a lot of questions answered this week.
Yeah. Also get a look at Visa, MasterCard, a little consumer credit situation. So yeah, I think it's going to be wild. And the market is certainly not giving us anything other than the fact that we're expected to have a pretty wild week with 128-point implied move this week in SPX expiring on July 31st. So that is the biggest we've seen in a couple of weeks here, but for good reason. We have all these tech stocks. We have the Fed announcement as well. And I just looked at the CME FedWatch tool, and that thing is not decisive at all. This is the first time in a couple of weeks where I feel like, or I should say a couple of decisions where we have not seen a 99% leaning in one direction, 1%. We're not, hiking or cutting. Right now it's a 70-30 with 2 days left.
That's very indecisive for sure.
But as Mr. Vecchio has said many times, they don't like to give you surprises, which makes a lot of sense. The surprises are the ones that really rock the market. And we've seen that happen before where you have a 50-point move, implied move in SPX. There's some surprise, and then we have a 200-point move in either direction. So I doubt they'll surprise, but still interesting to see that we've got a 70-30 split with 2 days left for that Fed announcement.
Yeah, kind of is interesting. And meanwhile, all we've seen is interest rates going higher most days, more than not over the last couple of weeks. So there is starting to be some building pressure with regard to rate hikes.
Yeah. E-minis at 62, up 62, sitting around 75.10. Nasdaq at 28.6. So yeah, really strong morning here. We were just talking pre-market that we might want to be looking at a super bear here. Just throw on a little downside delta. We're going to open around 74.80-ish. You can see that here with the similar price puts and calls in SPX. So going up here for the one-day cycle is where I was looking, maybe like the 7,500, 7,510. That would bring us up another 20 points, which means the E-minis would be close to being up 100 points today on just a really strong morning session. But
that's actually where I looked this morning when I briefly checked it out before I came in.
Yeah.
And I know I just want to read off. I'm going to read off this poll real quick. We got a poll in the chat. Biggest week of the summer. 4 of the Mag 7 report. The Fed decides Wednesday, and we get GDP and PCE to close it out. We listen. So tell us what you guys want to see. So far, leader in the clubhouse is earnings and how to trade the moves, 35%. Macro week, Fed, GDP, and inflation, 29% next. Strategy and premium selling lessons, 20%. And live trade breakdowns all week, 16%. Guess what? We do all 4 anyway. So, I mean, it'd be great.
True. But yeah, we will definitely have earnings and how to trade them. Also, check out the News and Insights tab on tastylive.com. We'll have some written earnings previews as well with some information that you should be paying attention to for each particular stock, and then a little look at the implied volatility environment there too. So News and Insights tab on Tasty Live. We'll have a bunch of content for you this week. But we got Chris Vecchio on the line. Chris, happy Monday. Hopefully you had a good weekend. How you doing?
I'm doing great. My war on plants is winning. It's turned the corner.
Love it.
They're dying.
Amazing.
Yeah.
It's like the band War on Drugs, but you are the lead member of War on Plants.
I know, right?
Yes. We've won. They're in retreat. They're dying off. Chemical warfare has succeeded.
Congrats on your win.
Thank you.
Now you need to
Now,
go.
is it officially over? I mean, there's a lot of wars these days that aren't officially over. Not to make any light of anything. I'm just making light of media more than anything.
That is true. So I think President Trump has a 16 war is over lead on me right now. But I will be back to declare the war over again next time on air.
Okay,
so we'll start catching up.
Got it.
Perfect.
Yes.
Yeah, we're looking at these markets up 63. E-minis up 63. Nasdaq up 370. I have a super bear routed here. I'll see. It'll be interesting if we get filled here. 5-point wide call spread to buy a 15-point wide put spread. Just because I'm right at the money with the short call spread. I was just filled. There you go.
I was telling Mike, I think I'm going to put one of these on just about every day this week.
It feels right into a 60-point rally pre-market. I don't know. I just don't see it going significantly higher than this. But if we do, it'll be good for all these other positions I have. And it's really not that much risk. $450 in the one-day cycle. But if we do reverse, I've got that 15-point wide put spread that will appreciate quickly.
What's the long strike on your put spread?
7,400, 73.85.
Got it.
And then a 5-point wide call spread, pretty close to the current market price. So, nice.
Like that.
I like it. Chris, what do you look at?
Yeah, you know, you just had me, piquing my interest here, thinking about the SPX 0 DTEs right now, because the move is pretty wide. I mean, we're trading 74.11 there.
Yeah, so the implied open is around 74.80,
74.80 or so.
I'm going to go a little more aggressive. I'm going to go 74 quarter. 74.25.
Well, look, rest of the day today, and I remind people, I want to start with the Fed on Wednesday real quick, because there is this tendency in the market, what's known as the pre-FOMC drift. The New York Fed's Liberty Street Economics blog has documented this tendency in markets over the years, where the market tends to just basically calm down. Pre-COVID, it was more like the market would just rally into the Fed meeting. Now it's more just like the market just drifts into the Fed meeting aimlessly, and that's usually the 24 hours ahead of time. So once you get to the European close tomorrow, the market then kind of calms down. So I'm trying to envision what's the catalyst map between now and, we'll call it, noon Eastern tomorrow, right? And the answer is not much. And so kind of like Friday when we were looking at the 0DT SPX short iron condor, we've had the move for today by and large. Is oil going to decline another 6 or 7% here? Mike, as much as I hate your super bear for my own biased book positioned reasons, it does make a good deal of sense, like what's going to kick us up the next notch. So not only do we have the Fed Wednesday, of course, we have these major tech earnings coming up as well. This feels like a reaction bounce, but quick little peek there at the SR3 contract. Rate hike odds are not going down. They've given up all of their retreat overnight. So how much more does this equity market can yields really run today? I think if we're looking for market to get pinned or pull back in, that makes a lot of sense from where I sit.
Chris, I mean, how do I put it? I have never deployed a trade so much that I want to lose every time. Like when I put on a super bear, I want it to lose. I really do. I have no desire to win on this trade. And the best part about it is that when you are winning, you're like, I'm glad I put this on this particular day because we're down 70 and this actually really helps out today. That's always my thought process.
Yeah. No, I get it. I'm thinking, look, we've had the big earnings or economic report of the day and the durable goods orders. Has the market done anything with it? No. Oil's still down 6%. Right? Let's just keep those two things in mind right now. How much further does oil need to fall to keep spurring on this rally?
Good question.
The question is, to me, is how are you guys playing oil here? Because that's obviously the most interesting mover today. There are some pre-market movers, SK Hynix, Shell, Chevron. None of them are moving as much as oil, though, which that's rare. Rarely do we see a semiconductor not plus or minus 10% in the pre-market these days.
I love that question. I'll let Mike go first.
Yeah, I've had some positions in oil into the rally. I sold an iron condor that was leaning a little bit bullish. So I had the 70.95 short options, and then defined risk half a point wide. That was a $200 credit, so risking 300 to collect 200. This is coming in nicely today with the sell-off, but this is really my big position that I have. I moved out to the V contract in MCL, which is trading around 81 right now. I have the 80 strike straddle with 11.75 in credit, so this will be looking good. Really, I I needed to not have this thing go up to like 120. So this sell-off is nice for both these positions, but that's how I'm positioned here. I'll just keep this on. And looking at the crude oil curve, you can see we have lost a little bit of backwardation, and the back months have dropped quite a bit. These were at 74, 75 last week. Now they're at 72, 71. The 200-day, 300-day cycles, but still pretty elevated regardless over the next couple of months here.
Mm-hmm. I did three different trades actually in oil last week. All of them centered around our trade of the day segment, which, by the way, that starts at 11:30 a.m. Central Time today. Myself, followed by Mike, followed by Errol, and then also we have a guest trader for that trade of the day. But the first trade I did last week was a strangle, the 80. It was actually the 75.95 strangle that I eventually turned into the 80.95 strangle. But then the best trade actually occurred maybe on Thursday, I think. I did a ratio spread. I did a 1x3 ratio spread. I bought one, and this is all of these are in the August 17 cycle. I bought an MCL. I bought one of the 80.5s and sold 3 of the 75.5s, and got an 81-cent credit for that. And then I said I'm going to also buy a put spread. So kind of similar to what I did a couple of weeks earlier to the upside, did it to the downside. This time I bought a put spread, the 78.76 put spread in regular CL for 48 cents. It's now trading 67 cents. And so as soon as those headlines hit, like Friday, I think it was, I retweeted those headlines out and said, this is possibly, once again, the headline that leads to some de-escalation. And somebody said, that is the kiss of death. What do you mean? Why would you do that? And this morning, I just responded with the Justin Timberlake gif, where he just stares at the screen and they zoom in. Really, dude?
It's Jeff.
Yeah, it is.
Yeah. Whatever you say, dude.
Yeah, whatever.
Is this like a Midwest, East Coast thing? Like you guys say GIF, we say GIF?
Yeah, sure. Anyway.
Okay.
GIF. That's right, GIF. I don't care what you say. You're not going to change my mind. But yeah, I just responded with that and just, really? Come on now. I do this, guy.
Well, Friday, President Trump is talking about he had a big surprise planned for Iran. And, he's going to destroy them in a way that they had never been destroyed before, which seemed like the ending civilization comment that he issued at the end of March, which preceded, of course, a ceasefire, something that we commented about here on air. So, yeah, I mean, I'm still leaning long a 98, 97 put spread here. That is doing a little bit better today with a decline of 6%. Short iron condors, there's some stuff sitting out a little bit longer dated. Somewhat funny, my thing that's sitting at 52 days to expiration, the short call spread side of a short iron condor is still underwater. Just goes to show that maybe I put that on a little bit too early before the vol inflated. So even though prices are off 6% today, it's not exactly that leg of the trade is not in positive here. But I think we should just continue to operate in oil the way that we have. Chasing it to the upside right now in the short term, probably not going to work. I'd remind people what happened in June where you got that 4 or 5 day run where oil peeled off like $13 once the market saw that tankers were making their way through the Strait of Hormuz again. So if you're trading oil, dare I say, you need to keep on your AIS trackers to see what ships are actually transiting the straits here. Because if that oil flow picks up again, then, Mike, that backwardation that had crept back in, it's going to get crushed out of this market once more.
Yeah. I think it's behaved very well in terms of what you would expect to happen, which has been nice. So, yeah,
orderly,
very orderly.
Could I pick your guys' brain here? I was going through the top tickers that are being engaged with on Reddit this morning. Some interesting names on there. Top one is Micron, SPY, HBM. Hudei Bayes Materials, HBM, apparently is something. Hudbay Minerals, excuse me. So much for me doing my research ahead of time. I've never heard of the ticker.
Isn't that a type of chip too, though? HBM? Just curious. Right?
Yeah, high bandwidth memory. So it got me thinking maybe some folks are buying HBM because they think it's a semiconductor stock.
I know, right?
SpaceX, Microsoft, CME clocks in as the 6th most upvoted ticker on Reddit broadly. This isn't just Wall Street bets. I look across stocks, investing, everything. Yep. I know that single stock futures have started to go live here, Mike. I'm curious what your thoughts are on these and what place they play in a active trader's portfolio.
Yeah, I think it's the future is everything instantly. Like that's what it is. So anything that these big firms can do to give us more accessibility, and when I say us, I mean retail traders, the better. So global trading hours is going to transition in. Global trading hours in the indices is going to transition to global trading hours for equities and the option space. It's going to change the whole landscape of how you know how to trade options, because now, or I shouldn't say now, but in the future, you'll be able to actually trade Nvidia earnings and get in and get out as it's happening. You won't have to hold it until after the close or the next morning. Like how many times have we had a calendar spread that right at like at 3:30 or 3 o'clock, the market moves to the calendar spread, and then by the time we wake up the next morning, the entire move has been reversed. Like that.
That's how I felt at diagonal last week with now. It's like, all right, we're up to 100, we're below 108, but the long call, and then I come back the next morning, I'm like, what the heck is this?
Yeah.
What are you doing to me?
Yeah, that's exactly it. I mean, when I traded at a firm, you could trade stock market. You could trade stock in the after hours, and you had the size and the ability to do it. But everybody doesn't have the ability to do that, and most of us have to wait till the open.
Yeah. So once that goes away, it will be a whole new world.
Right now it's 50 large companies. It's not every single stock out there. So you mentioned Nvidia, sure, but if you're trading something like Corning. GLW has earnings this week. I don't know if Corning would be one of the names that's initially up on the board.
Probably not, unless they use it as a test pancake.
Yeah, right.
No, they won't do that.
I mean, I'm guessing if you said it's 50, Chris, so I mean it's probably the top 50, and right.
It's probably the
top 50 by market cap.
Like it's definitely going to be your household names, which will be good.
Has to be.
Yeah,
it sure is pretty green this morning. As I'm looking at the heat map here, just you know.
Oh,
the only red.
I think you said my shirt's pretty green this morning.
No,
Jermal, this is like salmon at best. You gotta go get those eyes checked, buddy.
That's for sure. At least I don't think I am. No, I was just looking at a heat map. It's pretty green out there, obviously, except for the little small quadrant of energy. Exxon, Chevron, ConocoPhillips. Almost forgot what the name of that company was. I was like, COP. I haven't traded that thing forever. Yeah, it's pretty green out there today.
Very green out there today.
Lots of earnings here this week, and just looking at, we can sort by the last price.
So I mean, we're all in agreement. It's going to get really, and just so people know who watch the show. I'm go on record saying right now, it's going to get really slow and quiet on Tuesday, right? Like Tuesday mid morning through afternoon to the rest of the day.
I'm saying like Tuesday afternoon is tomorrow afternoon is probably going to be dead as a doornail. But Jermal, you just mentioned this is a big sea of green here. We've got 71 companies in the United States that have market caps $200 billion or more. 7 of them are trading in the red this morning. So most of the market here is up. Right, 63 of those 71 are positive. 1 is flat. 7 are down.
Yeah. Join us on the YouTube channel. If you haven't already, you can throw in your trade ideas and questions along the right-hand side chat. It's going to be one of those, it's probably going to be one of those days today and tomorrow where we are just looking for trade setups. And I feel like that's going to be how a lot of people are operating, waiting for these Wednesday reports, especially with the big names. But you still have some that are reporting like after the close today. But tomorrow morning, you have some creep in here. Boeing, tomorrow morning before the open. Any interest in these kind of stocks, or are we sticking to tech?
I mean, last week I put on the 78.80 short put spread in Coca-Cola because it had taken a little bit of a dip back towards its 50-day. And it was after that hack-related news, which to me doesn't... Okay, whatever. So that seems to be perking up here a little bit in the pre-market. I think 82, 83 right now. That Coca-Cola, I was looking for exposure in names like your Procter & Gamble, Kimberly-Clark, the non-tech consumer durable in the event that the market is trying to rotate and get out of tech, but stay into the market itself, a little bit more defensive. These aren't the sexiest names on the board, but they ultimately are names that don't move around a lot. So when you had that volatility spike and a little bit of a pullback here, maybe it's an opportunity. 87 IVR in Coca-Cola. You're not going to find a super high raw volatility there, but maybe still some things to chew on the edges about.
I'm with you. I still have the Costco. I still have the Walmart. These are, part of the portfolio. Pepsi, Colgate-Palmolive. Kroger, Fox A, Constellation Brands, STZ, Procter and Gamble. So I'm with you. I got some of these scattered throughout the portfolio.
Yeah, Mike, it's not just the tech midweek. Just STX and Clack have their earnings tomorrow as well, which semiconductor companies, chip companies they've had quite a little bit of a pullback here. I think Clack's down a third of its value since its highs last trading day of June. So it's been a fun month of July here.
What's been working is the butterflies, and I've been doing them in Micron and SanDisk. They have worked out well. I had a call butterfly. I had a call butterfly in both Micron and SanDisk. I took the Micron one off for more than the amount of the cost to put both of them on, and I left the SanDisk one on for a while. I probably should have taken it off on Thursday, but what I did do is put on a put butterfly on Thursday into Friday, and they both slid. That worked out really well. Nice little win there in Micron.
Yeah, I mean, Micron's been absolutely chopping around. This looks visually narrow, but it is absolutely not. This is 1,000 point. This is 1,000 price point down to 800. So you have a 200 point range where every single day you've been basically getting a 30 to 50 point range and realized move to the upside and downside. So yeah, the butterfly is a great way to take advantage of that volatility. SanDisk is going to have a similar chart here.
I mean, they breeze. You buy them for like $400 to $500, and you're able to, no joke, you're able to sell them for like $1,500.
Yeah.
Say what?
The call butterfly for this week for the upside call butterfly in Micron. So 1025, 1015, 1035. Max lost $20 against the max profit of 980. That's just at the expected move. So
yeah, I got one on right now. The 1,000, 1,100. Wait, no, I got $50 wide. 1,000, 1050, 1,100, and I paid. I just bought it late on the day. I $460. So $4.60. I paid for it. $50 wide butterfly. Come on.
Quite nice.
Yeah. I tried to get one on SanDisk, but it was too expensive. My similar deal. I tried to get 100 point wide. You got to. I mean, in SanDisk, it's got to be 100 point wide. It can't be 50. It's not gonna. But it's.
Jermal needs to take me out to dinner when I'm in Chicago next week. Come on, make it happen.
Heck yeah, nice. But it's. I was trying to get it for, like $700 or something. It was stuck at 900, 1,000. It's a little too expensive.
Yeah, Micron sitting at $920 price point, so a little bit more narrow is okay, but still 50 points wide for $500 is a really nice risk reward there. Sure. Boeing's up $3 pre-market. I think this could be an interesting one, especially given the crude oil situation, but this is still not that high of implied volatility. 11-point implied move on a $200 stock is on the lower end of the range at like 5% notional. But you kind of have your classic 2 times the earnings week. You go out to September. So 20-point move there, 11-point move for the week. You can set up something nicely here with a 37% IV in the back months. You can afford to do so, like upside or downside diagonal or calendar spread. You're going to be able to reduce basis pretty dramatically here. Even if you did a calendar spread near the stock price, you're picking up $600 for this week on a $13 debit, $13 raw value in September.
Actually, you know what's funny? I wasn't even interested in this name. And then look at the chart. Look at Boeing's chart. This happens every time, right? You see the chart, right? And then I just remembered LMT had earnings last week. Look at that LMT chart. So I think we might be playing Boeing. Like, look at that.
Yeah.
Huge move last week. I remember that. Forgot about it until just now.
Yeah. Lockheed Martin. Good old military.
So
okay.
Yeah, it's going to be one of those weeks, let me tell you.
Yeah.
A couple of days.
Oh, yeah.
But yeah, Boeing.
Good.
Boeing is going to be something to keep an eye on, especially with the information we got in LMT. Love it. Anything else?
That's too bad we're out of time. I could say, Jermal, we could talk about Vin Diesel, but we'll save that for another episode.
Table that. Yeah.
Got it.
It's an interesting day today. E-minis up 65, Nasdaq up 400, down the Russell up 1% as well. Chris, appreciate your time. We will see you a little bit later.
See you shortly.
See ya. Join us on the YouTube chat. Give us all your trade ideas for any of these stocks reporting this week. There are hundreds and hundreds of stocks reporting, whether it's tech, whether it's Boeing, whatever you want us to look at, we will do it. We're going to take a quick 90-second break. We'll see you on the other side. You're watching Tasty Live.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Get live trade ideas,
Technical analysis,
earning setups,
option strategies,
macro insights,
and real positions from traders putting capital to work
in real time.
only at Tasty Live.
Only on Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
What's up, Tasty Nation? Welcome back to the show. E-minis are still chugging along, up 66 now. Nasdaq up 414. Jermal, we've got some questions from the YouTube chat. Thanks for joining us there. Just head over to the Tasty Live channel if you haven't already. Throw in your trade ideas, questions in that chat, and we will get to them today and tomorrow. Most likely, it's probably going to be a kind of a slow, quiet couple of days here ahead of all these tech stocks.
Yeah. So first question is first-time viewer here. Thanks for watching the show. Glad you're here. Hope we don't go too over your head today. But we appreciate you showing up. Thanks. Hopefully there's more of you. Can you define what a super bear trade is?
We sure can. We sure can. So super bear and super bull. A super bear is just a bearish version of it where you're selling a call spread to buy a put spread, and you're buying the put spread. You're getting into that long put spread for a credit because you're selling a call spread that's worth more than the put spread you're buying. Same thing with the Super Bowl. It's the exact opposite where you're selling a put spread to buy a call spread, but the call spread is worth less than the put spread you sell. So if we isolate this one-day trade that I have here, you can see I've got a 5-point wide put spread here, 5-point wide call spread that I sold to buy a further out of the money 15-point wide put spread. So the super bear is a 50-cent credit in the middle. That's what I would collected. So if all these options expire worthless, I have a 50-cent gain. My max loss is $450 through tomorrow because I have a 5-point wide call spread that I sold and collected 50 cents. So just like a traditional short call spread, you have that credit that offsets some of your risk to the upside. But I have a lot of convexity to the downside and gamma to the downside because I have this long put spread that's currently worth a very small amount. But if the E-minis sell off and we go from being up 60 to only being up 30 to only being up 20 to 10 to 0, like if we somehow flip this and we go down red on the day, this is a $1,500 max profit winner. So the super bear and the super bull are trades where you're giving up some of that credit in just selling a call to buy a put spread to increase your max profit. I'm talking like 10x, literally. So in my mind, it's one of these questions. We've been answering emails and talking to people for years and years and years. And one of the big questions that people have, or one of the issues that people have, is like, I'm selling this premium, especially defined risk premium, because undefined risk premium, you have so much. You can flexibly maneuver those strikes and the strikes, the expirations, like the MES and M&Q positions we have on. Like we can do whatever we want in those things, like literally. But if we had defined risk counterparts, we cannot do that. Like if we want to keep our risk defined, we really are limited in what we can do. So with that said, a super bear and a super bull in the same light is a way to increase your max profit on the days where you're really directionally right and still give yourself that neutral premium if you're slightly wrong. And really your risk you're taking on is only like another $100. Like if I sold this call spread by itself, I think it was trading for $1.60 or $1.70. I'm giving up $1 of that to 10x my max profit to the downside if we get a really aggressive move down. So I think it really helps answer the question or solve that riddle of, I have all these winners, but they're small winners, and a couple of losers that I've accumulated in a row really wiped me out. You need to have some kind of offsetting component, and I think this is one way to tackle that.
Well, and the big thing too is that typically when you buy a put spread, you have to subtract that value from your expected win. I should say the difference between the strikes, right? So in this case, you could potentially make $1,000, but if you had paid $3 for that put spread, then your max profit is only $700. By selling that call spread, we're able to reduce that, right?
Yeah.
But of course, it doesn't come without potential loss. When it moves to the upside, there's an extra kicker of potential loss on the upside, right? So it's just a trade that we've learned. I would say the other thing too, the biggest question I feel like I get a lot about this trade is when to take it off. I get so many questions about that. A lot of times, like I kind of joked about earlier, I'm willing to lose all of what I paid on this trade, mostly because I'm aware of the market such that when SPX is above 7,500, I have a lot of positions that are doing well to the upside. So I'm comfortable. Matter of fact, that loss that I'm losing on the super bear is hidden in my portfolio for the most part. And I think that the answer is kind of personal for a lot of people. I mean, it really is. Finance is personal. People say this all the time. It's definitely the case with this trade. If you make $100 on this thing, you might be glad to take it off because you don't want to deal with the potential reversal and upside risk. I mean, some people are willing to hold it for longer. I will say, in the event of what's your max win on here is like what, $1,400, $1,500?
Yeah, $1,500.
Like we'd have to really have an aggressive move through all those strikes, and even then, you're not going to be looking at a $1,500 win until the day is almost over. There's plenty of times where we've had the aggressive move to the downside through both of my long and short put strikes, and I potentially have a $1,500 gain, and it's only about $1,100, and I just take that off, and I'm just like, because I know I have much more risk of this reversal coming, and I'm losing that kind of gain versus potentially making another $300 or $400. So I think the answer is different for everybody. That's why it's hard to give any one answer. I know a lot of people are usually trying to figure out, okay, when can I put this on, and what kind of stop loss or something can I put on to take it off after, or potential closing order. I really think it's different for everybody.
Yeah. And to your point on profit targets, I think if this was, because this is defined risk, like we know how much we can make. We also know, to your point, you're not going to get the max profit until literal expiration. And you can see this here. I swapped this zone over to Theo. I would really encourage everyone to learn how to use the analysis tool if you have not already, just to mess around with theoreticals. So SPX closed at 74.11 on Friday. We are up 62 points in the E-mini futures right now. If the E-mini futures go flat and we erase the 60-point sell-off, we will be right back at 74.11 in SPX. And the P&L Theo is telling me if I don't change implied volatility at all, and this is just intraday, that'll be a $500 winner if we get a sell-off that much. This position has a max profit of $1,500. So if that did happen, also, I have all these other bullish positions on in my portfolio. So I might be inclined to leave this on if we did end up selling off, and let's say crude oil ripped higher, and there's something was happening, and we could clearly see that something was happening, I would be probably inclined to keep this on because I know that it's an effective hedge against the rest of my portfolio. But if this was just like my only position, I'm just looking for like a 20% or a 20-point sell off, 30-point sell off from here, and I would close it for $300, and that would be my day trade.
Yeah.
So it's different depending on the situation at hand. But yeah, hopefully that helps. Really, the strike selection in this case is we kind of just go to the expected move or around the expected move, which you can see on the orange bar here. If you look at the trade tab or the table in the 0-day and ES, you can see this here. SPX, we're working on getting some more indicators for pre-market movement so you can clearly see where the market is. But this is where we kind of go. So like in ES, I might look at selling the 75.35 for 70 cents and then buying the 74.90, 74.85, something like this. Really, the important thing is routing it for a credit. If you route it for a credit, then it doesn't matter what happens in the middle here. You still keep that premium. And in this case, it's 80 cents or 80 cent credit, which is 40 cent extrinsic value.
So now while we're here, let's address the other question that we have here where they're asking, why do you always put Super Bulls or Super Bears on 1 DTE? What's the logic behind that? Why not 0 DTE or why not 2 to 3 DTE? Which is a great question. I mean, I would say, I know recently we've kind of gotten caught up in kind of having fun with doing kind of 0 DTE on these, but we definitely pay attention to DTE with this. We definitely will look at when this is a great week for it, where you can literally do these on Wednesday night ahead of some of the earnings that are coming out, or I should say after the Fed. You could do it for Thursday night after the earnings that come out on Thursday. So, I mean, it's definitely something that we often look at doing. It also, things change a whole lot too. Obviously, the way skew and volatility work as you start to go out just a little bit, even a couple of days or maybe even a few weeks, you'll start to see it's a little bit harder sometimes to line it up with a credit. I mean, it's always possible, but I would say, in my mind, like I'm always doing these around major strikes, at least for put strikes, right? Like right now, I just lined mine up. My put spread lined up to 75.25, 75.10. Because again, I lined it up on those big strikes. So whether it's 70, you have yours around, I'm sorry, I lined my 74.25, 74.10. You lined yours up around 74.100. We're usually looking to do things like that because you do see some convexity at those different strikes in the S&P 500 at plenty of time. So it just does depend too. I'll let you address.
Yeah, I think it's the nice thing about these trades, and it doesn't help give you a definite answer, but the nice thing about these trades and the difference about these trades versus a 0-day iron condor or a 1-day iron condor, like a 1-day, if I'm doing an iron condor where I really want to get all of that premium today, then I'd have to go with a 0-day iron condor because I know that if I throw this on and we chop around here in SPX, I'm going to be able to keep that premium, and the premium decay is so aggressive that I have the ability to really withstand a lot of movement if we just chop around here for a couple of hours at 65. Like I'll get a lot of that premium immediately. But these trades are not necessarily premium decay trades like an iron condor. They're more directional trade, much more directional trades. So yes, the fact that you can buy a put spread for $1.85 and then you can go up here and sell a call spread for a little bit more and route it for a credit in the 2-day cycle, this is really a directional trade, and you can see it in your curve analysis. Like an iron condor, you just have flat neutral premium, but this kind of trade, if we zoom out here, you have the ability to make all that premium in the middle. So if I route this for credit and I flip this over to expiration, you can see, yes, I'm collecting a credit, and that's great for the 2-day cycle if we just chop and I'm directionally wrong. But if I'm directionally right, I can make a lot more than just the call spread. So with that said, expiration is really your choice. Like what zone do you want to what zone do you want to encompass in SPX? Like for me, the reason I went to the 1-day is because I'm thinking to myself, okay, we're up 60 points right now, 65 points right now. It's a really strong open. Like we haven't seen the market open like this in quite some time. And I think in this situation, it's like, well, if we continue higher and we're up 100 points, I would hate to have a max loser and then watch us be down 30 points tomorrow. Because these are directional trades. These are speed trades. They're not 0-day iron condors where you want to collect, that premium in the first couple of hours of trading. We want to see directional moves in these types of trades. So I've gone to the 0-day and I've realized the max lost, and then I came back the next day and it was completely reversed. So because I have the ability to go out 1 day or 2 days or 3 days, if you're trying to encompass all the earnings and you think all the earnings are going to be net negative, then maybe you go to the 4-day cycle and go to Friday and make it nice and wide. Give yourself a nice credit in the middle, and that way you can still make the money if we just chop around here. But if you're directionally right to the downside or upside or whatever your assumption is, you can keep that premium. I have one in SpaceX that's 2 years out because it's the same story. I sold a put to buy a leap call. Like that's it. And I know that in the middle, I'll make $350, but I'm really playing for a big move to the upside. So these trades are really flexible. I think the most important thing is staying in a reasonable range where like we could reverse down 60 points. The probability is low, but like I'm not putting my put spread 300 points out of the money to the downside like that.
Yeah,
there's no reason to buy that because it's not really going to move.
That's throwing money away.
Exactly. So, I think going to reasonable levels, sticking to round numbers, and then choosing an expiration that fits your assumption. And there's no wrong answer. There really isn't. Because these are directional trades. They're not trades where you need the market to decay in a period of time. But hopefully that's helpful. Thanks for the submissions. And I'm sure we'll continue to get questions on these because we've been doing these much more regularly. But I think they're really strong trades because they're still high probability trades at the end of the day. But we're going to take a quick 90-second break. We'll be back on the other side of it. You're watching Tasty Live.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
Hello, everyone. Welcome back to the show. My name is Mike. I'm here with Jermal. We got Liz Dierking on the line for some overnight move analysis. Liz, how was your weekend?
My weekend was great. I spent it with a lot of girlfriends from college, so
Nice.
not too much drinking, but it was fun.
Those reunions are fun, for sure.
Yeah, it was fun. We get together a little too often now that the kids are older, so we're gonna have to rein that in at some point. But it was a good weekend. What do you guys think about these crazy markets?
I think it's, I don't know, it's ominous. Very ominous.
Jermal, do you still have, do you still have the natural gas? Because tomorrow it expires. You have a completely risk-free butterfly that you took in a credit for that expires tomorrow.
Yep.
And you could pin this butterfly.
Yeah, it's close, right?
I think your middle strike is, what is your middle strike, 80?
280. Yeah.
Yeah.
It's I have the 285, 280. When originally it was the 265 butterfly, and then like Liz told me to do, I put in an order. Yeah, you forced me to put in an order for the to sell out that 265 and buy the 275 and make it an asymmetrical butterfly, and it's risk free. And we are sitting at 278 right now in that contract, and my center strike is 280. So could be good.
Perfection.
Yeah.
Yes. But once again, these are, and I'm just giving from experience. A tanker of natural gas will not show up at your house. In my opinion, I've never had one delivered, so I leave these.
Yeah, you're right. These are financially settled, as they say. So we're good to go. I also have one in, and again, this is one that expires tomorrow, and then I also have one in the August expiration, similar way, and that one is 20 cents wide, and I'm long the 3 put. I'm short 2 of the 280s, and I'm long 1 of the 250s, and I've had an order to
Butterfly it off.
Yeah, buy that, sell that. Buy that put spread. Excuse me. The 250, 260 put spread. I've had it out there for the longest time, but it has not gotten hit because we drifted lower. So.
Yeah. I mean, I really thoroughly do enjoy trading natural gas. I love it because you can trade it at all hours of the day. And when you put that order in to butterfly it off, I usually will get hit in the middle of the night.
Mm-hmm.
So yeah, hopefully, fingers crossed, we pin that butterfly today. I mean, if it expired today, we'd be in great shape. It'll move a little bit, but it's okay.
Nobody's paying attention to natural gas right now.
The way that I trade it, and this is a shout out to some of our old viewers, I have a forest. So you can see I downside ratio, butterfly off, downside ratio, butterfly off. So I have peak, 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 peak. There's nowhere you can hurt me in natural gas tomorrow.
I feel like there was an Omaha in there, but I'm going to let it go. Yeah, it's a great trade. It works.
Yeah. These especially these high flyers, high implied volatility products that are chopping around. But yeah, this thing has been pretty range bound actually for the last couple of months here, but still very volatile. 3.4 to 2.7 is a big move. Absolutely.
Yeah.
Are you positioned for any sort of SPX pre-market action? We have some super bears on because we were like, I don't think the E-minas are going to go up 100 today, but if they do, the rest of the portfolio will be just fine. So we put on a somehow 5-point wide call spread to finance a 15-point wide put spread for a 50-cent credit.
And you did that today?
Did it today. Mm-hmm. We're right at the money.
In tomorrow's. I was listening to you guys answer the question, and I thought you answered it very well. But the reason you're going to go a day instead of the 0 day is you do get a lot more credit by giving yourself that extra time.
Yeah, 100%.
Well, there's 2 reasons I'm going today. I mean, one, because of the move of where it is right now as opposed to going tomorrow. But honestly, I would rather... what I feel is going to happen is tomorrow's going to be kind of quiet, and that's going to give us the opportunity to, well, who knows where we end up trading today? Who knows which strikes are going to be what strikes tomorrow, right? Who knows where the strikes make sense? So by towards the middle to end of tomorrow, I would think I will probably put one on for the next day, maybe. I don't know. It just really all depends on how we're trading. You know, if we're trading different than I think tomorrow, then maybe another one is in order. But if we're really quiet, we're not really moving, I doubt I put one on in a 0 day for the 28th tomorrow, and I just do something for the 29th.
Well, yeah, because Wednesday's got the Fed meeting. So this is a fun week. It's really fun. I love trading. I do. But it's fun this week because we've got the behemoths of earnings and you've got the Fed on Wednesday. So, and we also have the ability to trade SPX until 4 o'clock. So all those things kind of add up to that you can do something after the fact. If you push it a little bit farther out, if you think either the Fed or the earnings announcements afterwards are going to move the market, you have the ability to trade it now.
Yeah. Like this one we put on for tomorrow is like right at the implied open, 20 points higher than the implied open at 7,500 with SPX closed at 74.11. We're up 60 points. So we're going to be right around 74.75, 74.80. You can see this here with the similarly priced at the money options. So we're right there. But to your point, Liz, if we go to the 4-day, I have this butterfly on, but if we go to the 4-day, the 7,500, I don't need to go there. I can go all the way up to here, like 7,550, 7,555. This is a similar credit that I collected on the 1-day, but another 50 points higher. And then I could go to the same level here. Maybe I got to go a little bit lower, but still, you can see if I do a 15-point wide or 10-point wide spread, I can still get this on for a credit. If I do,
which is amazing.
Yeah, as long as you have to go further out of the money, but you don't need these things to go in the money. That's another aspect of it. You can have these things be out of the money and still appreciate because you have a short call spread that loses value on the way down and a long put spread that gains value on the way down. So, yeah.
The power of options.
Yeah, really. Yeah, we got Microsoft, Amazon, Meta, Apple earnings. We also have, obviously, the Fed decision. We have a BOE decision on that Thursday. After the Fed, they always go usually after us. And you got to remember, BOE was like one of the ones when we raised rates in 2022. They were the ones that were raising rates prior to us. So you wonder what's going to happen there. Like if we're not going to do anything and then BOE comes out and raise rates, I'm curious. Again, that could lead to more market volatility. So this is that type of week for sure.
Yeah, this is the most exciting week of the year, I think. We'll see. Who's to say? And what do you guys think about this gold move? We're all gold bulls, right? We're all on the same side?
We're gold.
Yes.
I'm gold agnostic at this point. I don't have anything on in gold.
I'm a gold bull. I have a GLD all diagonal spread on at the 380, 390 strike. So this is good. I like it.
This is good. These are good moves in gold.
Yeah, I got nothing. I could really care less right now. It's just been in this range, and it really hadn't moved much, honestly. 4,000 clearly was the bounce area. It hasn't been able to break 4,200. Obviously it's a decent area, like you're doing to sell some vol here, but
you and I both know, like I like what Jermal said. He's got the diagonal. And am I a gold bull? Yes. But am I using it? Am I using the power of options to make a smart trade? Yes. I've got a downside broken wing butterfly or actually it starts as a ratio spread. Then I butterfly it off in GC, which is a big animal. So will I make money if it goes down? Yes. Will I make money if it goes up? Yes. Because very similar to your super bulls and super bears, I'm taking it a decent credit. So I want it up. I don't want to be tested because it's broken. The wing is broken. I don't want to be tested to the downside, but if it goes down, I stand to make a lot more money.
Yeah. The
so
omnidirectional trades.
yeah.
But we can say, but I do have an opinion, right? So yeah. I'm out there. I say it all the time. I am a gold bull. Hi, my name is Liz, and I'm a gold bull. But I don't go out there and buy gold.
Yeah. You're just trading the futures.
Yeah.
Yes.
Just
trading futures with options. Futures options.
What strikes do you have?
So in GC, I have Q and I have V. So in Q, which has 1 day to go, that's a moot point. That I'm going to get all my collection. I collected $200 on it. So in V, I have the 3960, 3950 put ratio spread, and then I broke it, but I did what I did in natural gas, where I started with like the 20 and I moved it all the way up to the 40. So I now have a butterfly on.
Cool.
So I have this butterfly on that I have taken in $110. So when you look at something like this, if I have $110 credit on this, would you say I'm bullish or bearish?
I would say you are bearish.
You think I'm bearish because I have no risk, right? I have no risk.
Yeah. That's the only reason I would say you're bearish.
I don't care where gold goes, but I originally put this on with a bullish intent, and then I butterflied it off.
Mm-hmm.
Yeah. So you're down here. This is what you have. A nice little $1.10 regardless, but a little $1,000.
So look at this. I always say you're bullish because with such a big product, $4,000, look at how little that peak is.
Yeah.
Yeah.
This is why you need to build a forest. This is how you get a forest here.
Yes, you need to build a forest.
One tree. This is one tree of the
and
forest.
This totally reminds me of, what is it? Not Austin Powers. So you're saying there's a chance.
Oh,
that was
Dumb and Dumber.
Dumb and Dumber. Thank you very much.
There is a chance.
There is a
chance. Might be small, but it's there.
When you look at the gold futures, when you look at the regular expirations, it's a trip how just calm it is, though. I'm looking at it here, and it's a contango. It's really not that much difference between them. It's pretty small. You have to go all the way out to February, the J contract, which is April contract, but the February options to see that it's trading 4,200 or higher.
Yeah.
Pretty narrow in between there. It's quiet. Yeah. Unlike it was last fall, that's for sure.
Okay, and I know we're supposed to talk about trading, but the chat did ask. The Odyssey was awesome. Have you guys seen it?
Oh, you saw it. Oh, yeah, was it? Yeah. No, we saw that. We're actually going
go see it.
Thursday. I just remembered that. We're going Thursday. We're going to go to just a regular IMAX.
I couldn't sleep. It was so good at the end. One of my son's friends had a Whoop on, and it looked like she had run after the movie because your heart rate goes up so much. It was really good though.
I love it. Yeah, I have not seen it yet, but I'm definitely going to.
Yeah, we're gonna go see it. I think in a regular IMAX. I know we were trying to make the 70 millimeter, but we talked about that on Friday. That's the most diabolical plan ever. That is fantastic. And do you know that after they're gonna stop their run soon in the 70 millimeter IMAXs, and then after that, they're just gonna come like every so often, like pop-ups without telling anybody.
Really?
Yeah.
Ooh, smart.
Ain't it though?
little supply and demand game.
Yeah, a little supply and demand game. Exactly.
Yeah, I like it. I like it a lot. So how much time do we have before the open? What are you guys doing on the open? And are you playing any earnings trades today?
I might do Boeing. I think Boeing could be interesting.
Yeah.
On the open, not really looking at anything. I have that super bear on and really just waiting to see if any of these markets move in my favor. But yeah, that's usually what I do. Just look at the P&L day on the open and then see if anything moves me into a positive P&L open and then see if we can make an adjustment or close it. But I'm always drawn to the largest P&L day on the positions I have, and then just do a quick analysis to see if there's anything I need to do.
Yep. I mean,
Right.
looking. Oh, go ahead, Liz.
But you both don't really manage too much on the open, do you? You're intraday traders.
Yeah,
Depends.
I would say mostly it's observing on the open and then trading a little bit later.
Yeah, it depends. I mean, it really does. I mean, there's not much to manage on the open. I mean, a lot of times, like it just really
Unless
depends.
it's an earnings trade.
Unless it's an earnings trade, yeah, and you're up like big money, you need to close it out. We don't have any of those this morning. There's nothing coming in with earnings that was interesting. Tonight after the close, nothing interesting at all. Tomorrow morning, we got PayPal, Boeing, as Mike mentioned, Coke and UPS, and Corning. Probably Boeing is the one I would play out of that because of what LMT did the other day on earnings. That was a huge move.
What did LMT do? Talk to me.
Bam, right there. There you go.
70-point rally.
Yeah, I think that was earnings. The first big move was earnings, and then the one was the next day on a follow through. So I believe. So that's interesting. And Boeing has a similar chart right now, so maybe it does a similar thing.
And I'm regretting what I did in Boeing because if it's going to skyrocket, my trade is not going to work.
I'm sorry. I didn't mean to ruin your morning. Yeah, that one looks interesting to me. Look, Corning, I'm not really playing. I mean, Corning's been moving like an AI trade, and from what I saw, from little stuff we've seen in the last 2 weeks here, the AI trade on earnings are going to be quiet. I don't think they're going to have the same type of movement until one of them proves me wrong. We'll see. Intel, that faded. I mean, we saw Google, we saw Tesla. I don't think I'm playing these names to the upside. If anything, maybe I sell vol in them because vol is actually high. You could probably find some ways to sell vol in some of these tech names for earnings because I think they're going to be inside
I feel like is it the 90s again? We're all talking about Corning Glass. That was the hottest ticker on the trading floor back in the day.
I heard about that.
And now, I mean, and then it lay dormant for a couple of years, and now we're right back at it.
Yeah. Dormant for a lot of years. You're being nice.
Yes.
You're being nice.
And I thought it was cute that, we're open. But I thought it was great that Mike had to type in Corning, like GLW, that ticker is
yeah, I know. I know. I noticed that day too. I know.
What is this ticker symbol again? I think another thing is like, it's interesting because we've seen last week we were really weak in the E-minis and Nasdaq, all these earnings, like nobody really blew it out of the water except for Lockheed Martin. And now the E-minis and Nasdaq are up substantially, up 1% pre-market. Like, that's another reason why we went with the super bear because nothing has changed from these tech stocks and these earnings. It's really a reaction move on the crude oil move. So if we do continue to see weak earnings, the E-minis and Nasdaq are not going to trudge higher.
The other reason too, Liz, you know why we kind of wait in the morning too? I like to see what kind of day is it going to be. And by that, I mean, are chips going to be up? Right? I've been saying this for like almost a month now, but it's every day. Are the chips going to be up and the software and the consumer staples going to be down, or is it going to be vice versa? So as of right now, I see consumer staples up.
Yeah. Microsoft is up $10. Interesting.
Actually, everything is kind of up today, though. We said that pre-market with Chris, and it's still kind of looking like that. I think there's going to be a change at some point, but
Intel.
I haven't looked at. I want to see where VIX is actually right now because VIX is only down 77 cents. I guess it's 4%, but so VIX is down with the market up. VIX is only down this much with the market up, which tells me that we could get a reversal today.
Yeah, you would expect VIX to be back in like 16.
Yeah,
16 handle ish.
Exactly.
Yeah, you got airlines running, of course, because oil is down, so that's happening. Micron is positive right now. Chips are positive, but so is Lowe's. Lowe's is up $4. I have that in the book. I have the diagonal in there. Lowe's is up $4. What is that about? Is something going on? Is it the commercials with no wait, was that Home Depot? Who's the one guy? God, what's his name?
Home Depot's up 3% too.
Yeah. What's
Yeah,
that guy's
I mean,
name?
those are
Josh something.
pretty correlated.
Yep.
Are you guys trading Coke on the open tomorrow? So it's tomorrow morning. Now, this is a very serious question.
Josh Lucas.
Because we're children of the...
Liz, do you know who
Are you
Josh
guys
Lucas
Coke-
is?
Are you guys Coke or Pepsi people?
Well, if I'm on a plane, I get a Coke Zero.
I would get a Coke too. Yeah.
So if you have the choice, you go Coke over Pepsi.
Probably.
Yeah.
I do like.
But I also lived in Atlanta, so I mean, I probably shouldn't even answer the question. Like
True.
Atlanta's
True,
our
true,
headquarters. I mean, that's all they fed you down there.
Okay, fair enough.
Do you know who Josh Lucas is?
Why don't I know the name? I think.
Okay, I was just curious. I was just wondering. Just doing a little test. No, he's that guy in the Home Depot ads. I was just curious to know.
I feel like I know the
women
name.
readily
And when you-
recognize him. You'd
So,
know him.
Jermal,
He was
when you-
what's that movie? Sweet Home Alabama? Sweet Home Alabama. You ever seen that?
Yes,
Reese
I love Sweet Home
Witherspoon?
Alabama.
See?
Yes.
That's the guy. That's the guy that she married, right? When she's trying to get a
Yes.
divorce from. It's him.
Yes,
And he's in the Home Depot commercials.
So do
See,
you know what's
I never
funny is
bring you
when you say a name, I assume that I know them from the trading floor. There he is.
See, there he is. See? You know what I'm talking about now, right?
So I assume that I know people from the trading floor because it was so packed tight down there with the face recognition that I always assume I know him from the trading floor. Did you ever hear the story about when I was with my husband, we were walking through like Viagra Triangle, which we all know is those restaurants that are like right there in Rush. And some guy gives me like, he went like this to me. This is back in the day when I was very young. Goes like this to me. And I was like, so I just kind of went like this back to him. Hey. And Dan's like, do you know that guy? I was like, yeah, I work with him. He's like, you work with that guy right there. I was like, yeah, I work with him clearly. Like he must be from the trading floor because he acknowledged me and I acknowledged him. He goes, that was Ice Cube. I was like, oh
That's amazing.
So every man you think you know in the trading floor got it.
yes, I do.
Including
it
Josh
was
Lucas.
Ice Cube.
So good. Just giving Ice Cube a little head nod. Yeah.
I
he's a trader.
totally did. I walked in like I owned the joint. I was like, hey, because I had the facial recognition, but I didn't have anything else.
I was just filled on this Boeing call diagonal spread. I bought the 215 in September at a low 37% IV. Very little implied volatility crush potential here. Maybe this goes down from 37 to like 33 or 32, but all these are kind of baseline right now. So I think we'll be okay there. But then I sold the 4-day, which is the pure IV exposure to the earnings announcement. Sold the 225 for $1.50-ish. But whole package got in for $968. And it's a 10-point wide diagonal spread with $200 almost in the short option. So if we do get a rally in Boeing from 212 to 220 or 225, this will be a $300-400 winner, I would say.
I like it.
Yeah.
Can I say, I got to say this out loud. Maybe people are making fun of me in the chat. I'm a little disappointed in myself that I actually know Sweet Home Alabama and that this guy is in it. I really,
Don't you
I can't.
dare. Don't you
I can't.
dare.
I
I'm
just
very
got
proud of you,
useless
Paul.
information in my head when it comes to movies. I don't even know why. I really don't.
Don't you dare. I love Sweet Home Alabama. Now, do you notice the person who's not piping in, Jermal, the blonde to the next of you, has never seen Sweet Home Alabama?
No, yeah, I don't. I'm sure I have.
I've never seen Sweet Home Alabama, to be honest with you. I've seen like maybe a few minutes of it here and there. I've never watched the whole thing like that.
Yeah, I
It's
can't
a
say that I've
sickness,
seen
man. I'm
it.
telling you, I just can't help it.
It looks familiar, so maybe, but you just never know these days.
You never know these days.
NDX. So we've got these downside hedges.
what's the deal?
We've got the NDX butterfly short options at 28,000, which is only 400 points away. I like that because that's just a reversal of today's move.
Mhm.
And then SPX, we also have a 4-day butterfly with the short options at 7,400, which again is just a reversal of today's move. So I feel really good about the positioning of this portfolio leading into questionable earnings announcements after last week's duds.
Same, absolutely. Feels pretty good. I'm making some pretty good money today, which can only mean that software names are up. This is because I do have some of those on. Still have some of those. I moved them even further out, but yeah, Microsoft is up today. I assume Palantir and some of the others are up as well. So that's working out.
Yeah, I think I need to close this calendar here. Let's see.
Yeah, Microsoft.
Yeah, the 460, 450. It's just such a short time frame.
I know. I got it. I think I have to do some stuff in here too because there is a decent amount of August in my positions.
Yeah. Actually, yeah, I forgot they have earnings this week, so I'm going to leave it on.
So you have an earnings setup calendar on, meaning, right? So you have that calendar through earnings.
I do, yeah. Short option, for this week, long option, 25 days out. So this was the setup to where like I can always just bail myself out potentially on an earnings move. But I don't expect this to go in the money, but that'd be great if Microsoft ripped up to 450, 460. But I have this long-term calendar spread on that I put on a long time ago, 125 days. And I'm going to leave this on just in case we do get a nice big reversal here. But yeah, I'll leave this on. This will be my earnings trade for Microsoft, 450, 460, call diagonal.
Yeah, we did get a peek at software earnings in that we had CRM. Wasn't that last week? I mean, it's been so busy, but I think we had that, right? Sometime in the last week or so. And that one faded. So if Microsoft doesn't do it, you can forget about Palantir and anybody else doing it on earnings.
Yeah.
Yeah, true. Mike, I've never seen such a long-term calendar ever in my life. What do you have in that? What is it?
Well, we put that on
It was a while ago.
to this sell-off. So wait, what's 120 days? April?
Yeah.
I guess I could just look.
Yeah,
We do
put it
have
on
that
a while ago.
ability.
Yeah.
Speaking of, this is also kind of roll week, right? For some of the traditional tasty traders out there. This is pretty much roll week. We got, we got a lot of things right now for August out of 25 days. So I know I got a decent amount of things to be rolling over the next few days here.
Yeah. So
And what does Chris Vecchio say about end of month on Friday? Because it's the 31st.
we haven't brought up this question, but the question is, have we gone up this month? I think we have.
I don't know.
I don't know. It could go either way.
Ever since expiration, which we faded into expiration, he hasn't really talked about much about July seasonality. Actually,
Yeah, let's look at the one.
Because July is supposed to be up, and I know August is supposed to be down. But end of month, I think end of quarter, end of month is bigger than just end of month, and this isn't end
Agree.
of quarter.
Yeah.
Just EOM. So
I mean, I think SPY is up 1.5% for the month so far, so very slightly, which makes sense. I mean, we've moved back and forth quite a bit throughout the month, as you see here.
yeah.
It's pretty flat. Pretty flat.
But it is relatively flat, right?
Yeah.
So relatively flat, and we're up 1%, and the VIX is 17. All's right with the world.
Yeah.
All is right with the world.
So yeah, Microsoft, I put on this long-term calendar spread when Microsoft was at 375. And we were trading this when it was at 350, 360. So we were just like, hey, I don't know when this is going to recover. This was in the heat of the war situation, right before the reversal happened at the end of March. But we looked at Microsoft. It was down 150 points from the highs. And we were just like, listen, at the end of the day, this is a Mag 7 stock. I want to get long-term exposure here to the upside. So I just went to the 500 strike, which is 50 points lower than the recent high at 550. And I bought this long Jan short SEP. And that was a $5 debit. It's up $300 right now. So we were just like, the whole narrative here, and you can see it in the comment, the more these things get to multi-year lows, the longer term positioning I want to put on. Just because the probability of a reversal over that period of time is significantly higher. I just don't know when it's going to happen.
Mm-hmm.
No, I don't disagree with that. I've just never seen someone use a calendar in that capacity where it's so far out in time.
Yeah.
How much did you pay for it?
$500, $580.
That's not bad.
No.
So it was cheap. So I was like, hey, if I'm wrong, it's whatever. But if I'm right, it'll be multiple.
And again, it's not going to
Right.
the way that this thing's been trading, it's not going to jump $100 like that. I mean, it's just going to slow grind back. It's actually a great idea to play it. And just have some exposure and keep an eye on it.
Yeah.
But I do like seeing your positions because you guys trade a lot differently. We all trade similarly and different at the same time. I've just never seen that done before where I'm going to go out that far. And it makes sense. If you're going to get a reversal, it's a $500 shot.
Yeah.
Oh yeah. When I came in, I was like the first person really buying stuff. Like nobody was really buying stuff in that manner. But
I'm still a seller. I'm an old school seller.
That's the best thing about it. I really was good at buying things and knowing when to buy things and pay attention to inflection points. Sometimes to a fault. Sometimes the one thing that I would do was get too aggressive. I think the one thing that Tasty helped me with is to get smaller. I was still trading like I was trading a couple $1 million book, and you just can't do that. And then the other thing I think I learned how to do is incorporate like selling strategies into my portfolio. That was something I never did trading on my own. I mean, I didn't sell anything. Like everything I traded was bought. And so that's kind of been the nice thing.
For Jermal, it's interesting though because you had like a big portfolio, right?
Yeah.
So you trade differently. You said you were trading a couple $1 million. You trade differently, but smaller.
Yeah, no, you should. But initially, I wasn't. I was still like, ooh, I like this trade. It's a couple months out. I want to buy, 50 of these, 25 of these. These are $1. I want to buy 50 of these, 1,000. I mean, that's $5,000. I can make a $5,000 bet for the 3 months out. Like, why not? And some people can, but honestly, like it's just kind of big. I realized that was too big for what I was trading. I eventually realized that. I had to come to that realization.
Where we just filled on.
SanDisk, another call, Butterfly. Yeah. I tried to get it on Friday, but it was too expensive. But now this thing is tanking. So
yeah, I think we could really see this market just fade right back down to flat.
Yeah, I bought the 1600, 1700, 1800 call Butterfly for this Friday. So it's trading $13.90 now. We'll see.
1500,
1600,
1700,
1800.
100 points wide.
Mm-hmm.
Boots are only up 50.
Yeah, SPOO's only up 50. We're selling off 49. I just saw it. 49.75, 49.25. Do we have 48.75? There it is. 48.75.
48.75, 48.75. Can I get it?
Yeah, I could never do that job. Lots of training would have to go into that. But yeah, it just feels like this is, to the naked eye, this rally is nice. But when you think about last week, when you think about everything under the hood, like, this changes nothing. You still have all these tech stocks that are going to report these numbers and expose their expenditures. And I think we're going to see a little whiplash this week.
Mm-hmm. And
the Fed announcement, that's still a 70-30, which we haven't seen in a long time. Normally by now, 2 days before the announcement, you've got a 99% probability on one side and 1% on the other. So the fact that it's 70-30,
this is different.
It's crazy. But Liz, appreciate you. We'll see you a little bit later today.
Thanks, guys. Happy trading. See you later.
You too. E-mini selling off here down to 46, up 46. Nasdaq cut in half, only up 160. Crazy moves in either direction, but we're posting these trades to the follow page. If we haven't already, we'll do it during this break, but we'll see you on the other side of it. You're watching Tasty Live.
Putting on strategies, that's easy. Taking off strategies, that's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. We got E-mini sliding, only up 46 now. They've sold off about 20 points from the open. Nasdaq's been cut in half in terms of the opening print of like up 300, only up 160 right now. Feels like a day where we could go red, but we've got E on the line, live from the Cboe floor, and I hear some chatter. What's the noise level over there?
Yeah.
I'm going to give it a 7.5, which is pretty good considering how loud it was last week. I'm going to give it a 7.5. I had seen some gentlemen running around a little bit here too, so there's a little bit of volatility this morning. I see the market's selling off a little bit more now. But what I've actually been most excited about is the fact that Oracle has finally seen a little bit of an uptick. So that's what's on my plate today. But good morning, guys. How are we doing today?
Fantastic, my friend. Fantastic. Did you get long Oracle like last week, or is this a trade you've had on for a while? I have had one for a while.
This one is one I got on. I think I got this one on last maybe Tuesday. And then the next day we put in lower lows and just kind of sustained that consistent downtrend we've been on. So it's only been about 4, 5, 6 days, but just those 5 days, it felt like 3 weeks. So, I mean, that's a testament to how Oracle's kind of been playing out. But again, nice to see a little bit of an uptick. It's been a difficult trade. It's been a tough trade, man.
Funniest thing ever. I pulled up E's follow feed, and it's just the Nasdaq.
I know. It's amazing, right? I know.
I gotta update that. I'll get that updated today, so we'll see some more fresh trades coming.
That's what's up.
But,
That's what's up. Showing his scalping skills.
Nasdaq for sure.
Dude,
that's funny.
You complaining about Oracle is funny to me. Okay, I've had this thing on for like 3 months. I've been dealing with this name
it
for
feels
a
like
long
it's been 3
time.
months already,
Oh
Jermal.
God,
it feels like 3 months.
I've had countless Super Bowls and whatnot, and closing and opening. It's just, it's you're right. Finally, it's getting some lift here. We'll see if it's meaningful. It is in that space today. We were talking about Microsoft and Palantir and CRM and those names, and there seems to be a little bit of lift there today, which must mean chips are down, because that's the only time it seems to work that way. So I think SMH is down at the moment. You see these names are down. So it's funny how that capital flows back and forth between these sectors.
Yeah, and it's not even, it's just because that's how things are right now. It's like there's no rhyme or reason. Like the amount of money that flows in and out of SanDisk and into Microsoft, it's just like the coin is flipping every single day. And nothing has changed in that regard. But yeah, E, what's your earnings report you have your eye on this week? You got a ton to choose from.
You know what? I'm going to go with QCOM. I'm going to keep an eye on Qualcomm. I believe they report Wednesday. I need to double check on that, but Qualcomm wasn't one of the tickers that were in like my basket of tickers that I typically trade, but I like the volatility on it, so I might set something up around there.
Yeah, Wednesday
after the bell. Yeah, Wednesday after the bell. So yeah, Qualcomm. I mean, I've seen some other names as well. I think it's going to be interesting, like Apple, right? We got some bigger names on the board there, but
Boeing.
Probably just going to be sidelined for most of them.
It's already up there.
But what are you guys excited about this week outside of Qualcomm?
I think Microsoft, like all the Mag 7s, I want to see what happens there. Microsoft specifically, because we have a bunch of positions on there. Apple, Amazon, absolutely. I think we'll be able to get some information from like Visa and MasterCard in consumer credit, I think we'll be able to see what kind of flows are going into products like Coca-Cola, UPS, P&G, like that sort of sector too. So I think we have a nice sector diverse week for earnings, but this week is always one of the biggest weeks for earnings with a handful of Mag 7s, Microsoft, Meta, Robinhood, Qualcomm after the close on Wednesday, Apple and Amazon on Thursday. You just have so much. And now with crude oil, you've also got Exxon, Chevron.
Yeah.
Where's BP? Somewhere in there it's got to be. So I think this is going to be BP's August 4th, but those two will definitely have some moves based on what we're seeing in crude oil. So you just have everything happening. And then, by the way, a Fed announcement on Wednesday with
there
a
we go.
30% probability of a hike.
Yeah.
I don't know.
About it.
That's the cherry on top. Yeah.
Indeed.
No, but I mean, coming into a week like this, it's going to be nice to just manage the positions. I don't think I'm going to get too aggressive, especially directionally, because of the earnings, and then especially because of the Fed announcement on Wednesday. So it's not that I'm going to not pull the trigger, but I'm going to be a little bit more thoughtful about the sizing and how directional I'm getting, at least at the beginning of this week. So I think it'll be a fun one, though.
Yeah, I think that's smart, E. I mean, you got to see how the week ends up playing out. You know, we had somebody asking us this morning, why don't we, you look at Super Bulls and Super Bears, why do we do 0 DTE versus 1 or 2 or 3? This is the type of week where you could probably go a couple of days out if you want. Again, we're going to be doing these actively because we trade actively, but for some people, you could probably go to the end of the week. Say you're very bullish on the week, but you're worried about how the week may play out. You could go out to this coming Friday. It's the end of the month as well, end of the month flows. Or you could go to Monday if you wanted, August 3rd. Like, however you want to play it. That's the great thing about these trades. But I think this is that kind of week where, God, just about every day there's probably a catalyst, honestly. And the next day, honestly, not even so much that day, but whatever the next day may be for any of these trades.
Yeah. And I think this sell-off that we're seeing is something we were talking about right in the open. Like, I was shocked to see us up still 60 points from yesterday's open, overnight open. And really, I think the fact that crude oil is down big and the market's up, it really doesn't change these tech stocks and the earnings that they must report and the capex that they're going to expose. And I think it's going to be a really choppy week.
Yeah, I'm hopping that boat as well.
I'm just getting filled here on these calendars in Boeing.
Nice.
I don't love doing it with the stock up 2% already, but whatever. I did the 225, 230, 235 calendars.
11-day, 4-day?
Yes. 11-day, 4-day, correct.
225, 230,
Is that
235.
headed into earnings tomorrow for Boeing?
It's earnings, I think, tomorrow morning.
Yeah, I like it. Yeah, so you're basically collecting half the width, half of the value in the long options with the sale of the short. So buying the 225, 230, 235, the 225, you pay $3 for it, you collect $2 in the 4-day. The 230, you pay $2 for it, you collect $1 in the 4-day. And then the 235, you pay $1.20 and you collect 60 cents in the 4-day. So lots of cost basis reduction. Any kind of rally is going to be good for that.
Yeah, I did a total of $2.55 for these three calendars.
Nice. Like it.
Yep.
But yeah, this Nasdaq intraday movement, you saw this little snap up right on the open, but ever since then, we've sold off 200 points, and now we're sitting at the lows of the session. Where do we go from here?
That's a good question. I mean, we have a pretty large gap from over the weekend. I mean, if we sustain this weakness, I think we could definitely see some last week lows potentially. I mean, as you've seen, we've kind of been trading within that range. It's looking like we're getting a little bit of volume as we try or attempt to break out of that range, but it's really difficult to say considering the fact that we have FOMC this week. We have so many important earnings, so that can just shift sentiment at any moment. But the way things are looking right now, the market looks really weak. I mean, we have a really large over the weekend gap, so we'll keep an eye on that. But maybe a little bit more downside, but maybe nothing too crazy until some of those binary events come into play here. But it's going to be an exciting week nonetheless.
Is there a level that you watch? I mean, obviously I know there is because the way you scalp. I know you definitely got a level in mind. I mean, this 28.5 seems like something.
Yeah. No, I mean, if we keep selling off to the downside, like I had taken a little bit of short this morning, but if we keep selling off to the downside, a further target could be around 28,300, which is just around where the market closed last Friday. So the targets aren't too aggressive, but they can feel aggressive just considering how much we gapped up. But it seems like that trend might remain for the time being at least. So we'll keep an eye on it.
Gotcha.
Yeah, market has erased all of its gains here, sitting at the session lows. E-minis only up 39, Nasdaq only up 100. I think we tick red here in the next couple of minutes, next couple of hours. It just feels like one of those days where the euphoria on the open is gone, with crude oil still down this much, and I think people are realizing still got a lot of question marks that have not yet been answered.
You know, I just know it was pointed out to me by our guy on the street. We should start calling him like Frank on the street, you know, like Billy on the street. You guys ever see that? You guys don't know what I'm talking about. Billy on the street was hilarious, man. This dude would go on the street with a microphone and go around and talk to people and ask them questions. But it was like he had his own style the way he did it. What do you think about traffic? And he's just like, it was crazy. Anyway, he mentioned that we have a 2-year note coming up, 2-year note auction at 10:30 a.m., I think, our time. So that's... again, 2-year notes are related to the Fed's rate, so we'll see if that means anything, if that does anything. A couple of other ones too, but the 5-year note is 5-year note auction is also notable at noon. So see if those mean anything.
It's gonna be wild.
Sounds good.
It's gonna be wild. Yeah. Nasdaq
Looking
only up
forward to it.
90 now, 80s. We are selling off pretty hard here. E-minis up 30. We've erased tons of that gain on the intraday.
SpaceX all-time low, 110.60, 110.21.
Wow, this thing is just sliding. Craziness.
IGV up 3.5% today.
Wow.
Software.
Yeah, look at this
Hey, look,
reversal.
Oracle's up on the day. That's all we
Software.
need, and we're good to go.
Look at this sell-off. Wow.
Yeah, it's getting
Crazy.
aggressive here.
Yeah. I think we're going flat. I think if we go flat, I'm just going to close that super bear because I have those other butterflies that could really work well into the continued sell-off. But yeah, crazy to see here. We've had almost a 300-point reversal here. Actually, we have had a 300-point reversal here from
we go
the
flat.
open.
I'm definitely closing mine.
Yeah. Because if we bounce from there, you could just re-enter.
Yep.
Also.
Yeah, 100%.
28.6 to 28.35. Insane move to the downside here. We're still net green, but it doesn't feel like it's going to last for long.
Does not.
Yeah.
E, appreciate you. We will see you a little bit later. Enjoy the rest of your day at Cboe.
Thanks, guys. See you in a
See you,
little
man.
bit.
Okay, got it. Yeah, craziness here. E-minis only up 25, Nasdaq up 60. We are selling off aggressively. This is a 1-minute chart we're looking at on the show here. And yeah, it's just been red, red, red. I don't know what else to say about this market, but we do have another guest on, Mr. Dr. Jim. Maybe you've got something to say about this market. How you doing?
Man, what's going on? I'll tell you what. I mean, markets move and things change, right? Markets move and things change. And I'll tell you what, it's almost like nobody knows, man. Like it's almost like it's all random and unpredictable. You know what I'm saying?
Well, I would say we knew this morning because we said this thing's going to reverse. And
well, of course we know.
Yeah,
but
yeah,
I'm talking about the common peasants out there that don't know. They don't know. But we know, of course.
You know, and you're about to show them how much you know.
I mean, I'm
right
about
now.
to show them. I'm going to show them a trade that's going to work with about a 30% confidence interval. So stick around for that. I'm very excited about this trade that's coming. But speaking of markets moving, things changing, Mike, I mean, we're in it together now, man. How about our Red Sox 15 in a row? They almost did it, man. Almost had the longest win streak in franchise history, but it got snapped last week.
Listen, it's the year of the Sox. The White Sox just destroyed Houston yesterday, up 12-3. Like, it's just nuts. It's the year of the Sox.
Year of the Sox.
But yeah, I like the Red Sox. I love Boston. I always go to a game whenever I'm there. So I'm rooting for you as well.
I appreciate you, man. A Red Sox, White Sox. Let me think. That would be ALCS. I mean, that would be some crazy stuff.
That would be wild.
It's in the cards. It is in the cards. Dr. Jim, we're going to let you take over in a couple of seconds here. But yeah, E-minis sliding here, up 20, Nasdaq up 30. Jermal and I are going to take a quick break. We're going to be back in about 25 minutes. But yeah, join us on the YouTube chat if you haven't already. Feed us those trade ideas. There's going to be plenty of volatility this week. But Dr. Jim, have a great show.
All right, thanks, guys. Yeah, so inside the trade, so the market is sliding, right? Mike and Jermal and E gave you guys a bunch of things to consider, a couple of ideas to kind of consider putting on your portfolio, what have you. We're going to go in, I don't know, maybe a slightly different direction. So I was kind of thinking, let's go ahead and What if we take the contrarian route? Like, what if we remember that at the core, we are contrarians? What if we remember that at the core, we kind of like to fade short-term market movements? And so I'm kind of thinking, what if we go into the Qs or MNQ, kind of wherever the wind might blow us? What if we're a little bit bullish on a day like today? Now, I understand, I mean, there's blood in the streets. I understand, I mean, it's almost, 4% off of all-time highs, 5% off of all-time highs, or actually maybe 10 or 11% off of all-time highs right now. So there is indeed blood in the streets. But what if we fade that and play it to the upside? So bring us into the market here, there, Ben, just in case we aren't. You got EME S&P's up 28. You've got the risk-free instrument, also known as the Nasdaq futures, extremely high-risk product, up 45 on the day. You got the Boomers up 475, and you've got the Russell 3000 up 31 on the day. So what I think we're going to do, let's go ahead and let me know in the YouTube chat. And in my preparation this morning, I totally forgot to bring the YouTube chat up. And so I can't see what you guys are doing, but let me know in the YouTube chat what you guys are doing this morning. I will check it after the show. So let's say you want to play the market to the upside. But let's say you're not really sure if you want to do it with defined risk or you want to do it with undefined risk. I want to show you guys a way that you could potentially do it with defined risk and then a way that you could potentially do it with undefined risk. So let's go into the Qs right here. So I've already got my Qs pulled up. What if got the Qs up $1 today? If you look at the chart for today, you can see that they were all the way up to, is that a daily chart? That is a daily chart. Wow, look at that, man. Now that is a candle. They opened them up around 691. They got to 692. They are now down to 684. So if I want to fade this and I'm going to do it with short premium, I'm going to do it with high probability, I'm going to do it with all those things. What if I go ahead with a simple short put spread? So let me go in here. If I sell a 680, 675 put spread, it might be a little bit low with my credit collected, but it also might be doable. We can kind of see where the wind blows us with strike selection here in just a couple of seconds. But the nice thing about this trade is a couple of things. So number one, the probability of profit is not super high. It's only 53. I was kind of hoping it might be a little bit higher than that. But this is one of the things with put spreads specifically. Sometimes they're lower probability trades and sometimes you don't collect as much as you would on the call side. This is oftentimes a product of the skew that might exist in the marketplace. And so we can take a look at all that here in the next couple of seconds. But the probability of profit is only just over 50%. The probability of making 50% over the life of the trade is in the 70s. So now we're 70, 75, 77, 79. It's floating around as the market moves, of course. The delta is going to be slightly positive. My theta is actually going to be a little bit negative, which is sometimes surprising with something like a vertical spread. But remember, with the vertical spread, what is the largest gimme that you are going after? What is the largest gimme that you are getting? It's going to be the defined risk, right? It's going to be that safety net in place on the trade. And so you give up a lot in exchange for having that safety net in place. And so by having that safety net in place, which of course is incredibly advantageous, you're giving up the unfiltered exposure to the Greeks. Like I'm giving up being super bullish. I'm giving up getting a lot of positive theta decay working for me. Those are the biggest gotchas that you have to absorb, with that gimme without question. So having theta be, somewhere around neutral, having theta be slightly positive to slightly negative on entry for a vertical spread is not that surprising when it comes to especially a short put spread where you're in the indexes. You typically get paid on the call side with your spreads, not as much on the put side with your spreads. And so having something that's slightly negative makes sense. But remember, if we think about this trade, like if I just scroll down a little bit on the screen, in fact, hold on a second, hold on. We can actually do, guys, we're going to do it. We can pull up the curve view. We can do it. I mean, they can't stop us, can they? I don't think so. So if you look at the curve view, it's beautiful. Look at this thing, man. It's just beautiful. So if you look at the curve view, this is a little bit foreign to me. I'm more of a table view guy. If you've watched my show for any more than, I don't know, maybe 2.5 days, you know that I'm more of a table view guy. It's just the way that I learned, and you can't teach an old dog new tricks and all the stuff everybody already knows. But if we look at the Qs at 684, so I got my Qs at 684, I got my strikes at 680 and 675.
So right now you can see that my theta is slightly negative, which again, that could be a head scratcher, right? That can be like, wait, that doesn't make any sense. I'm still out of the money. Why isn't time working for me? Blah, 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 blah. And right now in this very moment, it is not, but that is going to flip. So that is going to change. It's not static. It is very, very dynamic. So remember that. As long as the Qs stay above 680, you are going to see that theta turn positive. You're going to see a moment in the life of the position when the theta on this trade has to be positive. And the reason why this has to happen is if the options remain out of the money, then they have no choice. Excuse me. They have no choice but to finally get to a spot where the extrinsic value is gone, right? Because remember, at expiration, all the extrinsic value goes away from the options. Now, sometimes, not maybe, every single time. And so keeping that in mind, it's like, okay, right now, the stock is 685 and my strikes are 680 and 675. Right now, the theta is slightly negative, but theta is dynamic, just like everything else in the marketplace, just like delta, just like gamma, just like buying power, just like stock price, of course, implied volatility. They're all moving around. And so right now it might be slightly negative, but I don't know when exactly it's going to happen, but maybe tomorrow, maybe the next day, maybe later on this week, you will see that theta turn positive, especially if the Qs do rally. If the Qs do rally from this point, then you'll be in a situation where the theta will turn positive more quickly because now time will be working a lot harder on your behalf because the options are further and further out of the money. And so right now, because the stock is down a little bit closer to where the actual strikes are, it's not going to be as, let's call it clear cut, that the theta is going to flip positive quickly. But if we get a little bit of a bounce in the Qs and a little bit of a rally, then that could absolutely happen. So I'm going to do this trade. I might do both trades today. They're both going to be in the Qs. And so not exactly a diversification, not exactly a hedging mechanism, if you will, but what could possibly go wrong? So if I do, because now I'm very curious, I want to be able to follow this guy and give you guys, obviously a reason to watch inside the trade and even from theory to practice later today at 2:30 because your boy needs that watch time. But if I go ahead and sell this guy for, it's right around a third the width of the strikes, I would usually collect a little bit more. But man, we've done so much work on this trade. I mean, we've invested at least 3, maybe 4.5 minutes of our lives that's never coming back. Let's go ahead and just push this guy out there for, $1. Let's do $1.83. Let's see if they get us. They give it to us. And then I want to do a second trade in the Qs, but this one's going to be undefined risk for all my shooter McGavins that might be watching the show this morning. So can't get $1.83. Let's try. Okay, $1.81. There you go. Okay, so we're in a Qs spread. Okay, so now what I want to do, I already have one MNQ position, and this guy is slightly in the money. And so now if I go to a second MNQ position, if you want, so maybe you have a clean book, maybe you have no Nasdaq exposure, maybe you're looking for something, to the upside, what have you, this could be something that would fit that bill. So from an MNQ standpoint, the nice thing about MNQ is it is a futures options product. Futures options oftentimes have much better buying power than the equity options. And so this is one of the most favorable aspects of futures options, the buying power savings that you're able to grab on these products. So if I go into MNQ, I'm already in this 25-day cycle. So I'm not going to do that again. Let's at least layer in at least a wee little bit of diversification, at least across the calendar. We've already got the QQQ spread now in the 50-day cycle or whatever. We've got MNQ that's 25 days away. Let's go all the way out to September. So this guy is also going to be 52 days in duration. And the nice thing about MNQ, which is what I really wanted to show you guys, is the buying power savings. So you might have, let's say you've got a $40,000 account. Let's say you've got a $50,000 account. And you're like, man, I want to do something undefined risk in the indexes, but, I'm not really comfortable doing something naked in the QQQs. You shouldn't be. I'm not really comfortable being naked in SPY. You shouldn't be, because they're huge products and they can put you in the hurt locker really, really quickly. And not even Jeremy Renner can save you at that point. And so I think with MNQ and MES, These are products that we can use that can allow us to save the buying power and get even smaller on position size. Because generally speaking, MNQ is going to be about 80 to 85 beta weighted delta, whereas a QQQ is maybe 105 beta weighted delta, so maybe 110 because it's a slightly higher beta than the overall market. So it allows us to shrink our size down at least a little bit while also saving a tremendous amount of buying power. So if I go into the 52-day cycle, let's just say I did like a 35 delta put. So if I go in, man, look at these markets though. What is up with MNQ? Man, I feel like this has been, the tail of the tape for quite some time now. Look at this. Who's running these markets? Vinny Batista still running these markets? Man, look at this. 35 delta. Man, maybe we'll get a decent fill in here. But that's a little pause for concern without question, because this isn't SanDisk, right? We're not trading Micron this morning. These are the MNQ micro Nasdaq futures. I'm excited. If we could veer off a little morning tangent for you guys. I'm excited about the single stock futures, just like everybody else. I don't remember when they're coming out. Let me know in the chat. I'll check it after the show. I can't see it. I don't have it up right now, which is my failing. I didn't get it set up before the show, but we were having Teams problems, and I was trying to communicate with Ben, and there's all kinds of problems. But anyway, the single stock futures, I think, are going to be amazing. Because why would I only buy Nvidia? Why would I only sell puts in Nvidia when I can also add on top of that a long futures position in Nvidia? So now I'm long stock, I'm short puts, I'm long futures. What could possibly go wrong? A lot of things, just to be clear. I think that the single stock futures could have really, really bad markets. And so I'm a little bit kind of hesitant to get overly excited. Like, I don't really want to get out of my shoes. Like, it's not like we just won 15 in a row. Like, it's not like we just took 2 out of 3 from Toronto. Like, it's not like we just got some no-name second baseman from the Washington Nationals, RIP to Connolly Early from the Boston Red Sox. It's not like any of those things. It's more like, I'm just going to wait and see. I'm just going to kind of wait and see. Let's kind of see how this guy goes and what have you. But anyway, when I look at the MNQ pits and I see these markets being so wide, it makes me think about, the 24-hour trading, the single stock futures, blah, 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 blah. It all sounds amazing in theory. Like, it all sounds incredible on paper. But again, when you try to go from theory to practice, things change, right? Things are different. So if you guys happen to know of a guy that could take us along that journey, let me know, man, because I need it just as much as you guys do. So if I go in here, though, if I do like a 35 delta short put, it looks like my mid price is 723. And so if I do a mid price of 723, then maybe we'll get filled at 723. That doesn't look too bad. Oh, actually, hold on a second. You guys see the buying power? Let me actually delete that because I want to make sure you guys can see the buying power here, because that's what I really wanted to focus on. So if you look at my buying power here, it's only $2,600. Again, if I did a naked put in the Qs, we'll set one up here in a second just so you guys can see. If I did a naked put in the Qs, I mean, it would be multiples of that. I think it might be like 10 or 11,000, maybe 12,000. And so just significantly more. So if I do, let's do like 713. Maybe we get filled. No takers. All right, so they're running a kind of they're running a hard bargain? No, driving a hard bargain. If you're working on hard bargains, you're moving faster than just on your feet there. So if I do, let's do a 710. Let's run for this hard bargain. We got filled at 710, so that wasn't too bad. I mean, we had to give up a couple of points off the mid price there because the man has got to get paid. But that really wasn't too bad. So let's look at I want to show you guys, just for completeness purposes, from my vantage point at least, the educator in me really wants to kind of tie this thing off and wrap it up with a bow. If I go to the Qs and if I went to September and I wanted to sell a 35 delta put, I haven't looked at this before. I'm going to say that this is going to be 13,000 in buying power. That's my guess. 35 delta put, buying power, 11,002. So that's pretty close. I mean, it's good enough for government work. So it is good enough for us. And so, yeah, I mean, 11,000, 12,000, whatever, that's significantly more, right? So 2,600, it's like, man, I mean, we're working with 35,000 here. It's like, yeah, that's 7% of the account, 7% of the account. That's fine. I mean, from a position sizing standpoint, I think that's absolutely okay. Again, you have to make your own decision, of course. But if you're in a 30, 40, $50,000 account, you can't do this trade. Like $11,000, I mean, that's way too much in terms of buying power. There's way too much in terms of size. It's just not going to make any sense. And so that is why I like the futures options. And so a couple of ideas, a couple of options, pun intended, for you guys here this morning. QQQ short put spread and MNQ naked short put. We went inside the trade not once, but twice this morning, and we double dipped George Costanza style. And I will see you guys later this afternoon, 2:30 Eastern, 4 from Theory to Practice.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
What's up, Tasty Nation? We are back. We got E-minis sliding, only up 15. Nasdaq is big red now, down 60.
Big red.
The prophecy has been fulfilled. The sell-off is happening. I think it's a wild day so far. We got a wild week, but we got Tim Knight on the line.
Got giggles and laughs.
I know. I hear him
in the background.
He's so joyful.
Euphoria.
These big moves. But Tim, how you doing?
No, look, this is a two-way street because let's explain. All right, for years and years and years, I've had a solo show. I haven't had to interact with anybody, so I can just monologue my way, as much as I like. And now I'm faced with the prospect every morning of possibly feeling shame and regret and having to explain myself. And that's tough. And but it is maybe character building. And so last night, of course, we tacoed again. And war is off for the next day or two, and everything was blasting higher. I was like, oh, here we go. But I happened to flick on a Band of Brothers, and I watched the episode where they're flying over Normandy, getting shot out of the sky, and see men burned alive in fuselages. I'm like, Tim, strap on a pair. It's just numbers.
It's just numbers.
Don't stress. Don't worry about this. And the cold fact of the matter is, every single time that I've gotten scared over the past few weeks and chickened out of anything, 100% of the time I've regretted it, because the charts have been right every single time. And I've second-guessed myself, and I've lightened up, or I've covered, et cetera, et cetera. I've been wrong every single time. So I'm just trying to trust the charts. And because God is munificent, we have seen this absurd taco rally get blasted away already. And it is a glorious sea of red right now. So I'm feeling better. No shame this morning.
First of all, great call out on Band of Brothers. That is a phenomenal was like a mini.
It's amazing I took this long to watch it. It is ridiculous. I don't know when it was produced, but it's like, this is exactly the kind of thing I like. I've heard about it, a gazillion times. Like, this is the greatest thing ever made. And finally I'm watching it. It's like, geez. But yeah, finally getting into it.
Yeah, it's really good. Second of all, we love hearing your perspective on here because we tend to lean pretty bullish. But we also have find other ways to offset that. But it's always good to hear you. And case in point, this chart you got up right here, you were spot on this one from the beginning. Tell us about that one.
Well, this is crude oil, and this is an interesting thing. And the thing with charts is that you must not get hung up. The proverbial you mustn't get hung up on like if it crosses like 1 pixel, it's all over, etc. These things, they're not iron rods, they're rubber bands. And so like the trend line on crude oil here, we see that on Thursday it pushed above it. But what was interesting is instead of following through on that on Friday, it got repelled, it kind of got dragged back down. So if you think of this as like a sheet of rubber instead of steel, we got pushed back on Friday, and sure enough, boing, down we go today. But I like to think of this as like it's a little bit of a tell, I believe. The fact that oil had enough strength to pierce it in the first place, repelled or not, indicates that, not to anthropomorphize the instrument too much, but it wants to go higher. It did push above that. It's trying to go higher. I would not be at all surprised in, say, a month from now, even 2 weeks, for this to be a meaningful, maybe in the triple digits, So it's a failed breakout, but it's still, and it's not clear enough for me to trade it. I'm still not touching energy because, obviously this is loaded with uncertainties with the Iran situation. But if pressed, I would say this is more likely to be up than down in a couple of weeks.
I touched it because when it hit 93.5 and it faded and it couldn't hold, I was like, you know what? That might be it. All we need is some news. Well,
yeah. and weekends are prime time for news. Speaking of news, I wanted to just touch on our poor beleaguered friend SpaceX. This poor thing, goodness gracious. And it's funny too, because you guys lean bullish. I obviously lean very bearish, and I've never shorted this thing. Even though it does nothing but go down. But the funny thing is they're just dying for some good news. And on Friday evening, and I was born in the 60s, so I'm like got NASA and spaceships like fused into my head. So anything to do with rockets I'm interested in. So I watched the launch on Friday night, and it was a great success. And I figured, the poor fellows are probably going to get a break. We'll probably have a little rally to celebrate on Monday. Nope, more lifetime lows. So this thing can't cut a break. Talk about a trend. That is just smooth. We're going to be in double digits for long if this keeps up. It's just sad.
Remind us of those dates again, because like Chris Vecchio said this recently, nobody wants to be exit liquidity in this name, but due to August.
Right.
That's kind of what we're seeing,
yeah.
Right?
So the key dates are next Tuesday, the 4th. After the close, they get earnings. And August 11 is when I thought the first lockup was. Our family's financial advisor said the 6th, which I don't think is right. And the reason where there was a discussion is like, do you want to sell any of this stuff? It's like, no, this poor thing, not at these levels. So, but I think it's the 11th. And the funny thing about that day is that, it's 20% will be unlocked. And had the stock been above, I think 170, it would have been a 30% unlock. They're not going to have that problem because in the first few days when it did blast higher, it's like, wow, 30% will come free on August 11. That's not the case. But this could be, this could be one of those weird situations in which it's kind of like the converse of sell the news, because everyone knows that unlock's coming. That's part of the selling pressure, I think, just this fear of like, holy God, everyone's going to just cash out. It could be odd. I would not be at all surprised to see that lockup date come and the stock rally just out of the blue. Just because that's, markets, it's like the old saying, if you want to make God laugh, tell him your plans. It's kind of like that with the stock market. I wouldn't be at all surprised to see the unlock date come and it actually goes up just to mess with people's heads.
Yeah. I think we could easily see something like that. We've seen crazier things before. But yeah, in the short term, it's creating a lot of anti-buzz for long-term bulls.
Yes.
But yeah,
oh yeah.
We will see.
I got a perfect chart to kind of, and I did a little video on this recently. It's like, when's it going to stop? When's it going to stop? I don't think it's going to go to $5. I don't even think it's going to go to 50. But I think in terms of perspective, and I when I did that video about SpaceX way before the IPO, the only analog I could come up with is Meta. Because it's like charismatic founder, everyone's talking about it, everyone's excited about it. It's a big part of the social culture. What did Meta do? They bombed. They came out at 45, they went to 17. And it took about 17 months for those who bought at the IPO to even get even on their bet. And so Meta sucked. It lost about 2/3 of its value in the first few months. It's like, well, wow, Zuck's really a genius, huh? Well, you know what? Long term, it went up 4,200% after that. So this is kind of what's going on. This is kind of what I thought would happen with SpaceX, because like you don't get this kind of hype. You're not going to go from 135 to 500. And so we're seeing that. I mean, it's sucking wind just like Meta did. The question is, when does it finally bottom out? And I imagine, as with Meta, there'll be someday, it could be several quarters from now, where they come out with earnings that's like, wow, and then you gap higher, and then kind of there's no looking back. But I certainly think it's going to keep going lower for a while and probably won't bottom for many, many months.
Yeah, you're right. It does have that similar look. Before you leave, we got to get your thoughts on today's move. I mean, this is quite the reversal.
Oh, sure. Glad to. Shall I just hop to the NQ? Because that's kind of my go-to chart these days. This is really interesting stuff. Whoa, okay. Yeah. See, I didn't even see this happen yet. All right, let's review. So for a while there, we were trapped in these ranges, particularly this range. And the big shift happened on this day. We finally cut below. And again, going back to my point about like it's not exactly to the pixel, there's some violations here and there, but on the whole, 90% of the trading activity was between this kind of orange and blue level here. It finally pierced it here. And since then, we've been banging between these two levels. Now, what happened on Friday, and I talked about this in my afternoon show, was we were right at the cusp of failing support. And I'd said facetiously, well, no, semi-facetiously, that this might be a great time to just run around and buy every tech stock with the ticker symbol because we're at support right now. And for the first half hour, that was absolutely true because it wasn't an hour ago. This was a big old green bar. We went roaring higher on this, and you can see we were higher today than we were on any time on Friday. But what's happening right this second is we have broken support for the first time. So we're trading the same levels now that we were trading early in May. So this failure, coupled with, if I do switch charts for a sec here, coupled with SMH, I think can lead to a really potent potential because I'm doing some crazy things. I mean, you guys are options guys. You're going to smack me across the face with this one. I bought STX puts last week. Is that stupid? Paying sky high volatility, all that. It's like, but it's doing great. I probably will scurry out of it before earnings tomorrow. But there's some really serious breakdowns going on now. Look at WDC. Look at SNDK. On and on. All these like exceptional stocks that did nothing but go up until about a month or so ago. They're getting, bombed right now. So yes, we failed the NQ and we are about to fail SMH. I don't know if you gentlemen saw it, but there's a story this morning that, there's all this circular financing, and the latest one is Nvidia is saying they'll backstop $250 billion for OpenAI to build out their data center. So the house of cards is like in the ionosphere right now. It's really one wrong stumble, and wow, this is a really big deal what we're seeing.
Yeah, SMH is sitting at the lows of the last couple of weeks here, pretty close to it at 540-ish. And yeah, the Nasdaq and E-minis just ticked red. We were talking about it this morning that crude oil being down and the E-minis and Nasdaq ripping higher doesn't change the fact that all these tech stocks are going to give us their CapEx this week. And I think that could move the needle. And it seems the market is well aware of that. Right?
Well, green as the morning was, and I was scared to pieces. It's been worse, but I had 43 positions. I got stopped out of two. And it was like, all right, that's not too terrible, but it was all green, and now it's almost all red. So we're definitely, I don't know what happened in the past hour. There may not even be any news driving it. I think there is. But we've seen you don't see shifts like this hardly ever this quick.
Yeah. What a wild day. Tim, love your insights. Appreciate you. We'll see you a little bit later.
Okay, see you guys.
See ya. Yeah, E-minis down 5 now. Nasdaq down 200. Jermal and I were both filled, I believe, on the SPX trade. So I closed out of mine for a $500 winner. You were likely a very similar price point. So we will post those to the follow page. But yeah, wow, what a reversal in the first hour of trading here.
Yeah. I mean, we could kind of feel it this morning, and this is it's clear too. By the way, that the Russell and the Dow are still up. I don't know if this is a potential interest rate situation. That's usually what we see. And you see that bifurcation with Nasdaq and S&Ps down or up, and Russell and the Dow doing the opposite. But one thing is clear: people are de-risking a little bit ahead of what's going to be a huge week of earnings and of macro events. So that's definitely the case.
Yeah. Absolutely nuts. But this is the crazy week that we expected. Join us on the YouTube channel if you haven't already. We're going to take a quick 90-second break. We'll see you on the other side of it. You're watching Tasty Live.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
All right, so I've got some good news, and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, is not going to work out. That's the bad news. The good news is at Tasty Trade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
Hello, everyone. Welcome back to the show. We got a market measure sponsored by our friends at Cboe. We got Julia on the line. Julia, it's been a wild morning. Have you been trading this craziness yet, or are you holding tight until a little bit
Kind
later?
of holding tight. And this is now the second time this has happened where I had kind of like a longer dated position on in one of the market indices. This time is the Nasdaq is betraying my trust, but it hit like 30% profit in the first like 3 days of holding it. And I'm like, I could get 50 out of this. And then it just completely reversed. And now I get to hold on for it even longer, which is great. The fun of trading long-term positions in this market. So that, and then IonQ, which I've been holding on for a while now. Some of the quantum stocks are having a little pop today. I don't know if you're looking at those at all.
We haven't yet, but yeah, seeing a nice little pop here. It's sold off from the recent high, about 2 points higher, but yeah, we're seeing some craziness. I mean, E-minis and Nasdaq down, Dow and the Russell up, Bitcoin up, crude oil down 6%. It's a really interesting day here.
Natty gas down 3%.
Mm-hmm.
I say either love natty gas or you don't, and it's kind of like tequila in college. It kind of depends on how it went in college.
Yeah, that is
the only person that I know that actually loves natty gas is Liz. Other than that,
I haven't been burned yet, but like I don't know. I've had some good experiences with natty gas, but I don't trade it a ton, which is probably why I got some confirmation bias there.
I might learn to love it in the next 24 hours here.
I mean, yeah, you're right at 2.8, exactly at 2.8,
Yeah.
which is where your short strikes are in that butterfly. So that could be nice.
Could be.
It could be nice. But Julia, what do you got for us today?
Today we're talking about zero DTEs. We're looking at some zero DTE options. We're going to be talking about how delta changes risk, and specifically, we're going to be looking at the zero DTE scale, just because with zero DTE positions, like the position sizes are a lot smaller, so changing that delta has a bigger impact on risk and reward as well. So and just volatility overall. So we're going to be taking a look at it. Kai did this piece, Options Kai over on X. If you want to give him a follow, we're posting long form content more actively too on the research team. So, but yeah, that's what we're going to be talking about today.
Awesome. Affectionately known as the General, Kai.
The General Kai.
That's true.
Correct. But that short delta, whatever you set up, in a short premium trade, that short delta has a very large impact on your overall risk profile, probability of profit, as well as like the overall volatility of the position, changes a lot with that short delta. So that really is where a lot of that strategic flexibility with wing width, that's where a lot of position sizing comes in, changing your position size it doesn't change a ton when you're changing that short delta. That's really where that long delta comes in, but where that short delta comes in is really your position volatility. And in a lot of in a lot of respect, your pop. So just in this comparison, we're looking at like 5 delta versus 50 delta. That win rate changes so much when we're going very tight versus very wide. And then the credit obviously changes quite a bit. So here we're going to be looking at like a wide spectrum of short deltas when it comes to zero DTE strategies. And we're going to say, what are the benefits of going to kind of either extreme versus maybe going more towards middle of the road when it comes to choosing a short delta. And here we're going to be using $20 wide wings for all the positions that we're testing. And we're holding to expiration looking at SPX.
Sweet. Okay. Check it out.
Cool. Let's do it. Okay. So the first one, so higher delta trades collect more credit and they use less buying power. So your return on capital looks very attractive, right? Just like, on its face, noting that like obviously what you're giving up when you're choosing that higher delta is probability of profit, and you're taking on more volatility typically when you do that. But the maximum return on capital makes it look much larger just because you're collecting so much more credit relative to the buying power that you're kind of putting up for the trade. So especially from kind of more speculative trading where pop is maybe not as much of a concern, that tighter delta shows a pretty remarkable return on capital just looking at, at face value.
Yeah, absolutely. And I think there's going to be some lessons to be learned here in the appeal of higher delta. But there is a rule of thumb that I think we'll reveal at the end.
Yeah, I think you got pretty close to the punchline on that one. But then likewise, when we're looking at like the super wide delta, we saw that 92%, win rate in that first slide, just in that little teaser for the 5 delta. But the buying power that you're putting up between a 5 delta and a 30 delta doesn't really change that much. But the credit that you're collecting really drags down that return on capital. So when we're looking at kind of either extreme on the scale, you can see that return on capital really changing, noting that like that's not always the best metric to use. There's a ton of metrics that we want to use when it comes to short premium positions. But it's pretty interesting to see that between that 5 delta and then that even like 20, 30 delta, it's pretty comparable amount of buying power that you have to put up between those trades, even though you're collecting significantly less capital in the 5 delta case.
Yeah, I think the risk reward and probability lesson here is going to be very strong.
Yeah, that's a biggie. So if we go over to the next slide, this is kind of where we're actually like starting to break down return on capital. Because a lot of the time you might be setting the trade up and you can see, the maximum profit of the position can be quite high. And especially in that 50 delta, it can be over 100% of the buying power that you have to put in. But when you look at the average realized return on credit, just from tail risk, just from not collecting the full amount for the majority of the trade, and this is where POP, really drags that value down, you can see that the averages, there's actually the biggest gap the tighter that you go between the maximum that you can collect and the average of what you wind up collecting versus, the very wide positions, which is much less of a gap between like what you, see as face value, the maximum that you could potentially collect versus the realized value of what you wind up collecting. And the middle ground of that 15 to 20 delta is really where it's a little bit more reasonable, specifically around like the 15 delta range. But that 50 delta, that kind of, Mikey, is what you were talking about. That return on capital can be very deceiving on its face. And that's when you account for volatility, when you account for POP, then what you actually realize long-term over time gets reduced pretty significantly.
Yeah, because there is no difference between a 50 delta iron condor that's 20 points wide and a 20 point wide butterfly. It's basically the same thing.
Right.
So you have a nice high return relative to risk, but to realize that reward, you have to pin this very narrow window, and that's why your average is so low.
Right.
And holding things at expiration, you're always there's a lot of variance that can happen when you hold these trades at expiration. So that's definitely the one that caught my eye right away.
Yeah, that's a very good point. Which like adding profit targets or having early management strategies could like obviously skew these statistics. But here we're just trying to look at delta kind of in isolation. So we're holding to expiration. And then when you add management on top of it, that's when you can see strategies kind of start to deviate from, some of these face value calculations. If we go to the next slide as well, it's really that variability is what you're giving up. So you're really just taking on kind of like more variance in general, more P&L variability, meaning you have less certainty around your returns over time with the more variance that you have when you go tighter generally. And you can see that really starting to pick up when you get closer and closer to at the money, when you're getting to that 50 delta, where down by 5 delta, you have the least amount of variability. But kind of as we talked about, and we're going to continue to talk about, you're collecting a lot less in that situation, which is kind of like, to that punchline a little bit, why we go more towards middle of the road when choosing those short strikes, which is a balance of, the tail risk that you're taking and, the profit that you're collecting, potential profit that you're collecting, and probability of profit overall.
Absolutely. And I think that this is where you get to that lesson in the 20 delta, 15 to 30 delta is kind of where we live, because we want to make sure that we have that strong return relative to risk, but still a high probability of actually realizing that.
Right. And that being said, it's really down to trading style for something that's kind of more stable and, for income generation versus something that's more speculative versus something for hedging. Like there's a time and a place for, like all the options, right? There's a lot of options in the options. But that being said, with, the kind of more income generation, short premium strategy, it's really like stability, as much stability as you can get with something that's, subject to, the leverage of options. And then controlling that tail risk and just trying to profit as consistently as possible. Which kind of, is part of why, a lot of our, I would say, mechanics kind of tend more towards middle of the road deltas. And then I think like the next slide talks about sort of like the real downside of going super super duper wide. So even though those pops can be very attractive, and like I said, there's a time and a place for that, the amount of credit that you're collecting when you go so wide is it's like low, such that one max loss basically offsets 23 winners, which I thought was like a really nice way to kind of put that. So even though that high win rate looks pretty attractive on its face, those tail risks, as unlikely as they may be, or even the more moderate losses, which are a little bit more likely, can be enough to really just kind of like squish gains over time and really suppress them. Which I would say is like, the real downside with going super wide. Like you still have a little bit of tail risk in that case, but not collecting enough to really compensate for that. And that becomes very obvious when you're looking at like the 5 delta mark, like very, very wide.
Yeah, for sure. You always got to make sure you're collecting enough to balance off these one-off events where things just really get to not only touch or maybe even through those strikes.
Right.
And even today's move is a great example of that. We opened up 60 points and now we're down 20, net 20. So that's a 80-point move in 2 hours. And the implied range for the entire week is 130 points. So this is why we really emphasize the importance of keeping it small, because these things happen more often than you might imagine as like a newer trader, even an intermediate trader.
Mm-hmm. Yeah, keeping it small, just being very cautious about position sizing. And then, like just being mindful about like, it's a real balancing act, right? Like taking, probability of profit into account, trying to minimize like your variance, but also trying to collect enough to make sure that the risks that you're taking, like kind of compensate for all of that. So I think that like we like a 92% win rate sounds great, but if that comes at the expense of like long-term gains over time because you're not collecting enough to kind of like offset the losses that sort of inevitably happen, you just kind of have to prepare as best as possible for that happening at some point, then that kind of, makes a stronger case for the sort of middle of the range deltas between like, 15 and 20, 16 and 20 is generally what we kind of tend to focus on a little bit more.
Indeed.
Cool. Okay. So just to kind of recap, really cool piece from Kai. But small deltas win often, but the low credit makes maximum losses expensive. One max loss can offset about 23 winners when we were looking at this very specific case, looking at the 5 delta case in SPX Iron Condors since 2023. Large deltas collect, more credit and use less buying power, but the per trade returns vary. Like what you're really giving up is variance and probability of profit. And when we look at sort of like the maximum profit that we can collect from trading those, closer to at the money strategies versus what was realized on an average basis, that's where we saw that gap get very large. So higher delta still produces higher average, realized return on capital, but that does come with higher variance and more, just variability over time. So in this test, we kind of like the most balanced by our own assessment using this specific test, the specific back test on the specific underlying strategy. The 15 to 30 delta range offered a more balanced view when it came to, premium collection for the amount of tail risk being taken. Noted that any number of like management strategies or anything that you use on top of this kind of base strategy will obviously skew those results. But the balanced view just from this one lens said 15 to 30 delta-ish.
Craziness.
Yeah. Something else.
Crazy.
And I think that the takeaway that we were alluding to in the beginning is really just that when you're trading these things, especially with a definer spread, if you're collecting more than half the width, you're going to have a low probability trade. If you're collecting less than half the width, you're going to have a high probability trade, but don't go too low because that's when you run into that 23x scenario where one bad move in the market against you can really set you up for a tough time.
Yep.
Right? Yep. So that's all I got.
Sweet.
Another research banger.
Hell yeah. Julia, appreciate your time. We'll see you later.
Thank you guys.
See ya.
Peace.
Adios. E-minis chopping around here. Down 8. Nasdaq down 220. Crazy day. I heard you have your little yes.
You heard the ding. Yes, right. Got a
sacrifice,
super bull on now. Again, like you said earlier this morning, we had super bears in the 0 day and took those off for a nice little win and now put on the super bull. So I am short the 73.75, 73.65 put spread for tomorrow to buy the 74.75, 74.90 call spread. We had a high of 74.80 this morning.
Yeah.
So,
50 cent credit-ish.
We'll see. Actually, I would hope that bounce back happens. Most of it happens today. I still think tomorrow's going to be kind of quieted down, but we'll see.
Yeah. Insane day. We're going to take a quick break, but join us on the YouTube chat if you haven't already. We got about 10 minutes before we toss it over to Chris and Liz. We can go through any trade ideas and questions you've got. But we're going to take a quick break. We'll see you on the other side of it. You're watching Tasty Live.
It's time to trade smart post-PDT rule elimination, and Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
What's up, Tasty Nation? Welcome back to the show. If you were watching those promos rolling, we do have a new one that just dropped, 3% cash match for new accounts. You can scan this QR code, get more information on it. But if you go to the landing page, there's a fun little slider. You can see what kind of cash match you can get for new account initial deposits. So check it out, tastytrade.com/bringit. And referral code program also going on. You can refer up to 24 people a year, $100 a pop.
You know what's funny? I did the promo for that. I did the voiceover. Yeah.
Oh, yeah. Nice.
And when I did it, I just was like reading what was on the page. I felt like, I'm not saying this a bad way. It's me. It's my fault. I was like Ron Burgundy. I literally read it off, not even really thinking, oh my God, that's 3% match on cash. Like, I was just like 3% cash match. You bring it, we match it. I just said it. And it wasn't until the promo went up, I was like, oh, damn, we're giving 3% cash right now. Like, I don't know what's wrong with me, dude. Like, it was just like, I just read what we had on the promo, read it in the different ways, but it wasn't really thinking about the actual promo that we were really doing for people. So this is a really cool one. It's a good one.
But yeah, it's fun. The VOs are fun because it's like you read the same line 7 times, but it's always just a little bit different. So like, only on Tasty Trade. Only on Tasty Trade.
Yeah, right. Accenting certain words. Right.
Only on Tasty Live.
Right.
So it's interesting to do it. But yeah, you got to like turn your brain on and off into different voice characters.
So my point is I was so locked in on the voice part, I wasn't even thinking about the words.
Yeah.
That's what's so funny. Trades today so far. I mean, I guess, the number one thing has been the super bear that we put on this morning.
Yeah.
We both put on different strikes. We both won. How about that? I mean,
so you had the 75-10, 75-100 short call spread, 10 points wide to buy the 15-point wide put spread for $1. And we both closed those, but you closed yours for 800 bones. Nice.
Yeah.
Very nice.
Well, aggressive with it.
I did the same 75-100, 75-05. So a small short call spread to buy a 15-point wide put spread that was further out of the money, but $500 winner. And yeah, just got to secure that win. Nice hedge for today. And we kind of had the feeling that if we're going to be up 60, it feels odd that if we were to just go from up 60 to up 100, like on what news?
Right.
Like for what reason?
Right.
So we just got fortunate with this big sell-off, and we kind of painted that picture when we were going through the super bear. Like if we go back to flat, which is exactly what happened, we'll probably have a $500 winner. We showed you how to do that on the theoretical P&L on the analysis tab, and that's exactly what happened. So nice hedge in the morning here. We also got some Boeing trades. So you did 3 calendar spreads.
I did the 230, 235, 225, 230, 235. So, and again, looking at the chart too, I mean, I don't know if that happens. I mean, I don't know if we get the LMT type of move, but that's kind of my guide. I mean, it's, 220 is is right around the corner, honestly. It could possibly reach 225. But the idea is that it kind of maybe makes a nice little big move, maybe to 220 and change, and then maybe slowly grinds over the next week or so. You could still make money on those long options. You did, that was probably smarter. You went further out. I actually just did the 4 versus 11, but we'll see how it plays out.
Yeah, it's a cheap shot to play for an upside move, and you're going to make a couple $100 if you do get that upside move. But you're right in that band. So you've got the 11-point implied move. We're trading at 214. So that brings us to 225, 230, 235 for an outside move. So yeah, I like it.
One thing that we didn't mention today, but we've been talking around it, and I think it had earnings. No, it didn't. I don't know what they said this morning, but ASML has been the poster child for what's going on with the semis this morning. I think they kind of did a little announcement, and they announced the share buyback plan, but that is not helping anything today. And so that's a lot of the reason why we're seeing some of these big chip names fall, which gets to the other trade. SanDisk I saw done this morning, and I decided to do a call Butterfly in there. And, again, they're not all winners right away, like the Super Bear this morning. This is a loser as of right now. Paid $700 for this right now. You could still currently buy it for $3, but again, it's really far away. I mean, for me, I did the 1,600, 1,700, 1,800, but as you can see, the way that this stock moves around, who the heck knows where it's going to be by the end of the week? So that's why we do it this way.
Yeah, I mean, this intraday range has been insane. We've got we're down 200 points from the open in SanDisk, and this has been the MO for the stock for many days. Just 100, 200 point ranges every single day.
I'll tell you, if it's gonna drop 150 points one day this week, I'm glad it's doing it on Monday. That's the other thing about this type of trade. By the end of the week, it could be like, man, remember when it was down 150 points and trading 1287 on Monday?
Yeah.
So if you have a thing, something like a Butterfly, you want to see the big move away from your strikes earlier in the week rather than later. Earlier in time rather than obviously nearer in time.
100%. And yeah, outside of that, we got these SPX trades open and closed. We got the Boeing trades open and closed. Mine was the 215 long call in September, short the 4-day 225. I bought that for 968, so just under the width of the 10-point wide intrinsic value on the spread in Boeing. But as I mentioned, I mean, really low implied volatility. 37% is low for any equity. All these are already sitting at 36. So I would imagine all these back months probably drop to 35, 34. I would be shocked if they dropped into the 20s.
Yeah, no chance. No, I think fair vol is probably 35 in there. I mean, you can just looking at January of 2027. That's basically fair vol. That is hardly moving at all based on the current earnings.
Yep. So that's why we use these back months as a barometer, these back contracts as a barometer of like where vol could drop to. So this 55% in the 4-day is likely going to go into the 30s. This 40% is going to go into the 30s. This 37 is going to go slightly lower. But the further out you go, the less you are exposed to the near-term vol for this particular announcement, which is why we buy in September, sell in the 4-day, because we want that premium in the 4-day to go to zero. But yeah, this option is trading for $200. So this could be a $300-$400 winner if we do get a rally to the upside. If not, I'll buy it back, roll it to August if there's premium there, and we'll see what happens. But yeah, it's been a crazy day in these here markets. We got in and out of some SPX. Super Bears, Jermal put on a Super Bowl, maybe bottom ticked it because the E-minis are up 650 right now. Nasdaq's down 120. So we're seeing some craziness, but this is the week at hand.
The last thing I'll mention too, because people were asking about our NDX put Butterfly last week. This is why we keep it. This is why it's still on. You can see it's literally right there. Who knows how it's going to end the week, but as you can see, we have the 28,200. We're short 2 of the 28,000, and we're long 1 of the 27,800s. And people were asking us, if we were going to close it, what we were going to do. To each their own. We've talked about this. We were talking about this morning with the Super Bull and Super Bear trades. But for us, we're keeping it for now. It's kind of a nice. It really truly is a hedge against the book, and in a week where things are kind of weak, if you will.
Yeah. I was like, why can't I see this? Because I have my
zoomed out.
I had just the one strike selected.
Yeah.
But yeah, this is a $20,000 max profit, right at 28,000. So yeah, I think I'm gonna hold on to this one. We'll see where we go, but like this is still a really nice downside hedge. It's trading for an $800 winner, but 20K is hedges anything that could possibly happen in this portfolio.
Take a shot at that.
And we have a similar one in SPX. So if we just chop around here, we're neutral. I'm not going to go for the 20K, but if we get 2 days out and we're up $3,500, I'm going to take that. So we'll see. But we got Liz and Chris coming up next. Thanks for tuning in this morning. We had a great time with the YouTube chat. Hopefully the Super Bowl and Super Bear explanations were helpful. But if you want to reach out to us on Twitter, you can totally do that. I'm at Trader Mikey B. Jermal's at Jermal Chandler. Check out that tastytrade.com/bringit promo. And yeah, we're going to pass it over to Chris and Liz right now. You're watching Tasty Live.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
We're back. You're watching Tasty Live. This is Confirm and Send. I'm Chris Vecchio. She's Liz Deer King. Liz, how are you?
You know what, Chris? I'm actually doing pretty well in this swelteringly humid, as we were talking with our super producer on the way in. Humid Chicago weather, Chris. I was joking. I did, in fact, blow dry my hair today, but it wasn't going to work, so now it's back.
My daughter and wife are the same way today. Their hair is just poofed out. It's a lot of fun.
It's really fun.
And we're getting the wildfire smoke back. My neighbor's house looks a little orange right now. Delightful.
It's back?
Apparently.
Oh, Chris. Did you now are you going to use this smoke and humidity as a cover for your burning?
I don't know if we're going to have to burn. The chemical warfare is succeeding.
It is.
I was taking a stroll around this morning with my coffee around 6:45, and I was looking at all these wilting dead plants very approvingly.
You're going excellent as they're all dying.
Yeah. You know, I just watched Oppenheimer over the weekend, so I feel like I can.
You got this?
We got this. We've got this.
I'm glad that your fight is over with and they surrendered.
Well, it's a new fight. Like, we just ordered this baby gate, and like one of the pins holes is a different size than all the other ones. So like now I have to go return this thing, and like it's one thing. You know this. It's one thing after another. One battle after another.
One battle. And all set up with each other. Okay, Chris, I've got one quick market question for you that I asked the boys today, and I said I'm going to ask Chris when I see him. What do you say? I know seasonality. So July is typically, I know it's not always 100%, but seasonality-wise, July is typically an up month. Is there any seasonality or statistics on end of month in July? Because that's this Friday.
Good question. I'll have to dig into the archives here. Why don't we answer while I pull that data up?
You can, honestly, you can answer it tomorrow.
We'll do that at the end of the.
You
can do it at the end of the show.
I don't care. It's no
I've
big
just gotta run some numbers here and look up the daily seasonality, but we can have that done for the end of confirm and send. So I'll get this thing to work while we go through the actual questions here. But before we get to them, Liz, what a morning so far!
What a morning.
S&P was up 1% earlier. Nasdaq was up 1.3, 1.4. Nasdaq's decided to give it all up. New monthly lows here for NQ, 28,172. Volatility still in the march. Liz, I thought today was supposed to be the easy day for the market. We got a war headline over the weekend. We don't have the Fed and earnings until Wednesday. What do you make of this tape action here today? Pretty decent volume so far. 682,000 traded in ES.
And my biggest warning in trading, and like I said, you're very good at knowing the why. I just look at some very rudimentary numbers. And if you look at the VIX is 18.75 right now, and the VIX is up just under a percentage, and the SPUs are up just barely. So to me, whenever I see them the same color, it's something seems awry. And it kind of felt like that this morning. And I said that when I was on with the boys. We were up 60, and the volatility wasn't acting as much. So that to me is saying, okay, I don't know that these are gonna hold, but I do expect to see this week, because we have almost a 19 VIX. I think it's gonna be a wild ride all week.
I thought today, we were talking on the morning show, right? Like maybe the market gets pinned or heads lower the rest of the day. Getting pinned obviously is not what happened. But the catalysts today are few and far between. I don't know if anyone's looking at the Coca-Cola and Visa earnings tomorrow as, the things that could change the sentiment. It's Microsoft, Meta, Amazon, Apple, Fed meeting. The entire week is basically Wednesday from 2 p.m. Eastern until Thursday at 4:30 Eastern, as far as I'm concerned.
And so you think it's going to be, were you surprised by this big move then? The fact that we reversed so heavily without a catalyst?
Yeah, I figured we would just just stay there, because what's going to move us one way or the other. So I was looking through my feed, like surely there was a tweet, there was a comment, there was an announcement from maybe one of these hyperscalers. No, it's just your Monday session, Liz. Everyone saw the gap open higher at the start of the week and said, that looks like decent exit liquidity. Might as well take it while I got it.
It's true.
Not great. You mentioned volatility here, though. I'm looking at the VIX futures themselves. So there was a pop here today. We've retraced half of the pop. Does that mean anything to you that we've come in so quickly off the highs here, 40 cents off the highs here in the volatility futures?
No. Honestly, I wanted to see a move like this. You need to see a move like this with the pop and the decline, because it's supposed to be moving with the market. And we had the pop and then we had the decline. It's supposed to be moving opposite of the market, obviously. But yeah, and I was surprised that it wasn't moving as much as it should have been, in my opinion.
Maybe it moves a little bit more as we make our way through the session. Liz, before we hop over to those questions for confirm and send, which everyone you can send in at research@tastylive.com, give me a little breakdown on oil here. It's a 6.5% move lower. Volatility has actually come in quite a little bit here today. IVR is down at 37, we'll call it right now. Do you fade this? Do you trade this? What do you make of it?
Oil has been something to keep an eye on for a long time. The volatility has been high. It's pretty much the biggest player in the game right now, right? We had it up last week. Now it's falling out of bed this week. It was down as much as 8% this morning. So it's trying to come back a little bit. We were down 8.5, 9.
It feels like it's trying to come back a little bit. It is off the lows a little. This is one of the reasons why we say, is this a market sell-off with a catalyst? Oil's down from 80, down $1 over the past hour and a half, and you don't see that happening in stocks. So the market clearly not caring anymore about the Iran war headline, right? If oil being down $6 or so is a good thing, you don't see this intraday reversal. That's probably one of the more interesting takeaways of today. Just as a catalyst, this thing is losing teeth.
What do you have? Do you have any oil positions right now?
I do. I have a slew of oil positions right now, sitting at 21 days to expiration along the 97-98 put spread, which is working okay. Short the 71-70 call spread, the 63-62 call spread. Some of those probably come off today because it's 21 days to expiration. 52 days sitting 66-67 short put spread, as well as a short iron condor that's also bracketed off at 94.95. So I've been looking at the vol expansion. When we get a little bit of a rally here, maybe look at some downside. If we're down near 70, look to call a floor. Just playing ping pong.
So you've got your skin in the game, which is good, and that's you're playing the sandbox with the implied volatility. Now, ironically, CL only has a 36. Am I looking at this right? 36, right? Or am I right?
It is. It's only a 36 rank, even though the raw volatility is up in the mid 70s right now because oil vol has just been so crazy over the past year.
Yeah.
That this it's like, oh yeah, this is nothing.
So are you, and I know you rattled them off pretty quickly, and usually I can add the math up in my head. Are you bullish, bearish, or neutral on oil? Are you playing the vol, or are you picking a direction?
I think I'm just, it's just for vol contraction. I'm not really trying to be directional here. It's just more about the market's going to settle down. It shouldn't be at 70. It shouldn't be at 95. It should be somewhere in between.
Okay. That's what I wanted to see, because I like you having the positions, and I love how you have them organized where you've the 21-day. You have them into different cycles, which I think is a smart way to organize when you are layering into a certain position.
There's also the sensitivity, right? If you're trading oil right now, if you're trading the front month, all these headlines are getting washed through there when you move down the curve. Like the December expiry is moving less than the September expiry on these headlines. So, I mean, it depends where the action is. If it's a pull, for me, when we had that pullback a few weeks ago, Liz, it's like you telling me that I can sell puts in December oil at $70. There's no way we're trading at 70 by then. This is a joke. I was more than happy to do so. So it just depends on the expiration cycle. I'm not going to get too aggressive on selling calls, for example, in the front month if we have missiles flying back and forth, because we've seen what those headlines do, where you wake up one day and it's like 5% higher 3 or 4 days in a row.
And didn't we get to headlines today? And I'm going to book it. Aren't we like running low on missiles?
We're running low on missiles. We're running low on oil. It doesn't seem like we planned on this war lasting this long.
No, it doesn't seem like it at all. So yeah, who's to say? But I do like the fact you separated them, and I like that you said you're in different cycles, because what I noticed and when I glanced at your position is every single thing you have is a different price in oil. You didn't layer it up in the same price, so that's good.
Yes, which actually brings us to Confirm and Send, because the first question here on Confirm and Send today is about oil prices. As always, send your questions in research@tastylive.com, research@tastylive.com. You can always put them in the chat, so if you're on the platform, come over to YouTube, join the conversation, like, subscribe, and tell us what you want answered. Liz and I will try to work through them here. We get 4 questions a day. Here is question number 1. Oil sold off hard on the Iran ceasefire after spiking last week. When CL whips this violently on headlines, is that premium worth selling, or does the overnight gap risk make crude futures a sector you'd rather avoid?
So I think, honestly, I don't have a lot in right now. I mean, I prefer natural gas. That's where my wheelhouse is and where my mind goes, because there is so many geopolitical things that happen with oil. But I think as long as you are defining your risk and know what you're looking for and get yourself enough out of the way, I think it's fun to play in this game. You can be right, you can be wrong, all in the same day.
Yeah, I mean, I think it's a different kind of volatility, right?
Yes.
When you have headlines, when you have the missiles flying, when you have tankers getting hit, the kind of volatility is gap risk specifically. It's not just like your normal underlying vol.
Correct.
So if you take that into account, right? We were talking about this on Friday. If you're going to take positions in oil, do you want to do anything naked? Of course not, because you're going into another weekend here. But when you're doing things in a defined risk manner, you have a shock absorber in the system. And when volatility is offering what it's offering right now, I'm going out to the trade tab here, 4 days to expiration. The market's saying that you could go out like, let's do $1 wide, 87.88 here.
Can we see what we're looking at, Master Control? Because I'd like...
Yeah, let's pull up my charts back on the screen here, right? It depends on whether or not the market is actually giving you a trade that's worth taking. So, Liz, 87.88, if we're just looking through the end of the week saying that this war is, we're on a glide path to resolution. It's not going to flare up the next few days. So we go out to not even the 1 standard deviation move, just the expected move here, right around 87.75 or so. A dollar wide strike, you're only getting 21 cents credit.
No, thank you.
So if you're not getting the credit and oil is this jumpy, I mean, that almost makes it doubly unappealing, doesn't it?
Well, and I know you know this, but I'm clarifying this for our audience a little bit. You said a dollar wide strike. This is actually $10 wide, because you're risking 700 to make, or you're risking 800 to make 200. So when you're looking at that, your 79.78 is actually going to be, what do you make? Yeah, your 41 cents is actually $420 or 400 and whatever dollars. Just a little FYI, it's bigger. So you're not doing a dollar wide. It is it's the equivalent to a $10 wide.
Yeah. Not untradeable. Just keep in mind what you're trading, right? And so, I think this is a good question. On Friday, my consideration was, given that I'm at 21 days to expiration, should I get out of this position because of the weekend gap risk? And I made the personal determination. I was doubtful that we'd see oil fall down towards $71, my short strike in this position, even if we had a ceasefire come out. So I stuck with it, but maybe I shouldn't have, because I would have been able to take more money off the table had I not ignored the gap risk.
I don't know. I kind of like this because you still have 21 days till expiration, right? So, and you didn't sell both sides. I really like what you said about the fact that you are playing for gap risk. This is a vol collapse, but also a side direction. You can get yourself out of the way and still be okay even with that gap risk. But I would almost say you're picking a direction and getting yourself enough out of the way. You don't have.
Yes. So we don't want to pick up nickels in front of
steamroller,
a missile.
I like missile. There you go.
All right. Next question here. Microsoft. Oh, this is a question for you here, Liz. Microsoft. And where did they just go? There we go. Microsoft reports Wednesday price for a 6.6% move, way higher than its usual 3 to 4%, all on AI spending fears. If you wanted to sell that inflated premium, what's the ideal setup? Liz, I'm assuming we're going out to 4 DTE because that's on the other side of the earnings window.
That is correct. And I will show you what I am about to put on. I'm going to wait. I wait. I'm going to wait, but this is what I'm going to do. So if you want to go to the trade tab and I'll kind of walk through what I would look at for something like this. Sure. So, Microsoft has a $27 expected move for that 4-day cycle. So
producers, can we get back up on the trade screen? Sorry, Liz.
No, please stop me anytime because I would like everybody to see what we're looking at.
They'll get to it.
They will. They'll eventually. Okay, so if you open up the 4-day option and then go to the put side real quick. So sell the 65.55. So very similar to what we were looking at in CL, 65.55, and then go up to the top and put in the 415, 425. So I brought each short strike in slightly, but it got my break even to about where the expected move is for the cycle. And when I was pulling this up earlier, I was getting about $4.20. So that makes my drawdown very low. It almost makes it like a chicken iron condor. So it gets me, my break evens are at the expected move, a high premium where I'm getting it, and I've got a pretty high probability of success too. That's what I'm looking to, a chicken. So when they say what's an ideal setup, I don't know if this is ideal, but this is what I am doing, right? So I like the fact that I have more than 30% the width of the strikes. I want to get close to $4, and I'll probably bring it in until I get close to $4 on both sides because I don't know. I'm looking for a vol collapse. I'm looking for almost a non-movement in Microsoft.
Interesting. Non-movement in Microsoft. Now, curious, that's the question, obviously. If you wanted to sell the inflated premium, what's the ideal setup? If you don't want to be directional, you're going risk-defined on both ends.
Yeah, that's selling premium. Yeah, that's exactly what. If you think it's, if 6% seems high and it's usually 4%, and you want to sell the premium, I'm always defining my risk, but I like getting a little bit more aggressive because in my mind, Chris, if Microsoft is gonna move in one direction, if it's gonna move and blow it out of the water, it's gonna really blow it out of the water, right? So I don't want to move myself too far away. I'd rather bring it in where my drawdown is, where I'm getting close to 50%, a little under 50% the width of the strikes.
I'm curious if you think Microsoft's going to move big, why not do something like No,
I don't think it's going to move big. I said that if it's going to move big, it's going to move big. So I want my drawdown to be less because if it's going to move, it's going to move, and I can't get out of its way. So I want to lose less if it moves more, but if it doesn't move, I want to get paid. I don't want 30 cents. I want $4.
You don't want 30 cents. You want $4. Yeah. I mean, you got to go directionally neutral, right? You want to just sell the inflated premium. I personally, given how these hyperscalers are moving, Liz, I don't know if I'd respect that downside move. I think maybe we want to give it a little bit more slack to it, but that's why we take the risk that we take.
Yep. That's right. Take the risk you take.
Let's go to question 3. Liz, why don't you take this one?
Okay. If the options are on 45 DTE are not paying much, but a shorter expiration is much richer premium, should traders stick near 45 days or trade where the volatility is actually higher?
Trade where the volatility is actually higher. Like 45 days is a good rule of thumb for us because it gives you enough time. You don't have to worry about the time decay just yet. You have optionality. What I mean is, like, let's say the position starts working against us immediately. It's retaining enough value that we can flip it off for a minor loss. Whereas if it was something like a 0 DTE, you're just going to get smacked upside the head immediately. So, look, there's some things. We were talking about this recently. Instead of going out to 45 days because of various strikes and the volatility priced in, we were looking around like 36 days in some recent sessions. You got to just go where the market's giving it to you. Don't try to force a round peg into a square hole.
And 45 is a loose guideline, right? So they have to come up with something. So 45, it can be a little bit less, a little bit more. You know what, Chris? I actually wish, and I mean, I know this is just a wish because we could never be able to do this. I wish this person that was here that asked this question, I could ask questions too, because it's very challenging for me to answer that, not knowing really what they're trying to ask, because there's always going to be always going to be richer premium in the 0 days, because there has to be. So there is also a common sense slide. There's got to be richer premium in the 0 days, even if there's no earnings, because there has to be some prices in those options. So don't follow that. But to Chris's point, if you're doing 45 days, it could be 36, could be 52. That's a good cursor to see where the premium is. And then you got to look and see if earnings are in that cycle, because those will be inflated because earnings are in that cycle.
Yeah, I mean, the question that I always ask myself is which expiration is offering me enough compensation for the risk that I'm willing to take?
Yes.
And if it's not 45, I keep looking. And if I can't find something, then I wait. There's no reason to force a trade.
You don't, because you don't need to force a trade. There's no one telling you that you have to put something in XYZ right now. You are the master of your own account.
We are. Last question here, and this one's on trade management. Appropriate, as always. If a short premium trade reaches 50% profit in only a few days, does putting the same trade back on immediately defeat the purpose of taking risk off early?
So I'm assuming, once again, I'd love to ask a question about this question. But if you're talking about if you're in the 0 DTEs and you reach 50%, and then you're going to try to put that same trade on again, where you're doing the same deltas or the same concept, that defeats the purpose. What I will, yes. if I'm in like a 0 DTE and my trade comes off and I want to put something else on, maybe I'll go to the 1. But I'm never going to, in those really narrow term contracts, I'm not selling an iron condor, taking it off at 50, then selling another iron condor, taking it off at 50, then selling another one, taking it off at 50, because you're just narrowing your range. Same thing if you were just put spread. Put spreads, it'll keep coming up because that brown bar will keep shrinking as the day goes on. Your expected move keeps going like this as the day goes on. So you're going to keep having to bring it in. If you're taking it off at 50 and putting it back on, that defeats the purpose.
I mean, if you reopen the same trade immediately, maybe there's been a vol collapse already, right, Liz?
Yep.
Are you getting paid the same way? I mean, that always go back to the mechanics here. Is the risk worth the reward, or is the reward worth the risk even? And if it's not, right, if I'm going back into the same strikes and I see that I'm no longer getting a third of the width of the strikes, I'm only getting 20%. Well, there's been a vol collapse already, so maybe it's not worth doing. But it all depends on the time cycle. If I'm in like for example, I have a long-standing S&P 500 position open. If that were to reach 50% profit tomorrow, I still wouldn't touch it because there's more than 100 days to expiration. But if it was a 0 DTE and I put it on, and then like, let's say I was looking for the market to fall today, and we had this pullback this morning, and we're north of 50% profit, take it off. And then probably not look to redo it again because it's a 0 DTE. Move on to another strike, move on to another cycle.
And so, I know you and I are both talking about this because it's our experience, but there's also been some research done in the past when people would ask us this all the time for the zeros and SPX. And it really said it's a line of diminishing returns. Once you try to put it back on again, because you might have gotten the vol collapse, you might have gotten whatever. So if you're in those zeros, whatever you place and you take off, then you almost have to wait until the next day or find something else, because that research has proven that you don't want to keep doing it, because if you were going to tin cup this, for lack of a better term, how about now? Keep going. It's going to be that last one you lose on, and you can wipe out all of your gains that you made that day.
Yeah, what I find to be, so there's like an entry test I think that all of us have. Does this meet the criteria? I know for myself personally that if I've just traded something, I'm a little bit lazy with that entry criteria, because I almost get this sense of like, oh, I was just trading this. I know what's going on. And I often find myself putting myself back into position, or I have in the past, where it's like, that wasn't exactly the risk reward that I wanted, and now I'm stuck with something that I really just dislike.
Yeah.
So that's ultimately the tell. Don't loosen your entry criteria simply because you just made money on that exact ticker. Be ticker agnostic. Assume it's a fresh trade. It's like a memento. You went to sleep, you woke up, you have no idea what's going on. I traded Microsoft today. I wrote that on my arm. Good. Okay. Got it. All right, just move on.
Yeah. And would you put that same trade back on? And if the answer is no, I would move on. I would
move on here. Liz, we have a market that is continuing to fall. Remember, Confirm and Send here is every Monday through Friday, 11 Eastern, 10 Central. Send your questions in. Research at tastylive.com, research at tastylive.com. You can always put them into the YouTube chat, Liz, which is a great place to put them here. My data is compiling here still, Liz. I need 2 more minutes. While I'm getting this data together about that seasonality question that you had at the start of the show, what is the most interesting opportunity here rest of day if we're taking a look at something like SPX, given this dislocating move we've had over the past hour.
So it was pretty interesting. In SPX, I've this morning already gotten into and out of an iron condor because when we were up, I was like, I'm selling both sides. I'm typically a put seller because I'd rather be optimistic and assume it's up. But with the market up as much as it was, I sold an iron condor and already got out of it within the first couple hours because we didn't have the direct move down. So now, once again, I would not be putting another iron condor back on, even though SPX, just because time has marched on, and I know for a fact, take a look at the expected move now for the cycle, it's only 28. This morning when I was entering the trade pre-market, because I can trade pre-market now, it was about 51. So we are, what time is it now? Almost 10:30. So we're only 2 hours into the trading day, and half of its expected move has come out of it. Half.
It's a lot.
Right. But now the odds makers are pretty smart. We opened up, I think 60 points, and now we were down 8. We were just up 10. That was exactly what the expected move was. $50.
We nailed it.
They nailed it. I mean, the options prices, in a liquid market, options prices are pretty accurate.
Answer to your question here, Liz. What is seasonality at the end of July? Today is July 27th. Since 1950, July 27th has returned 0.08%. I'm just going to quote these in basis point terms because I'm not going to go 0.0. So 8 basis points. The July 28th has averaged 27 basis points. 29th, minus 13. 30th, minus 8. And then the 31st, plus 26 basis points. You start off August where the first, second, third, fourth, fifth, sixth. Yeah, through the first 6 trading days of August, you see a net gain of about 0.6% as well. So this isn't a bad time of the year. If you're worried about August, you're starting to get worried on August 6th, because from August 6th all the way through August 20th, every single day since 1950 has averaged a negative return for the S&P 500.
In August. Okay, so...
In August, yeah, 6th through 20th.
No, but my question was actually what July 31st comes. And I hear what I want to hear sometimes, Chris, so correct me if I'm wrong. But you said, so we were basis points low, low, low. And then on the 31st, it was 26, right?
Yep. Oscillate, up 8, up 27, down 13, down 8, plus 26. So choppy.
Okay.
Choppy end of July, firm start to August. And then it is just bloodletting and leeches the middle of the month.
Chris, like I said, I spent too much time with you, but I'm going to take my foot off the gas on some of my bullish positions in August in honor of you.
I did that myself last year, and I dishonored myself by doing so. Seasonality can be helpful. It's a useful trick. But you know what? When the market's going through unique circumstances, like whenever we ever had this hyperscaler, these companies blowing up all their cash and the Iran war and all that. So maybe you just tuck it in your pocket. It's a nice talking point. But we have to respect the prices, Liz. You know that better than I do, of course, which is why I trade seasonality and you don't. But hey, we'll be back tomorrow. Same time, same place, 11 Eastern, 10 Central. Confirm and send every Monday through Friday here. Send in your questions. Research at tastylive.com. You, of course, can catch Liz and I here throughout the day on the network. So stick around. We got a brief break coming up. And then Gus and Errol here live trading. Stick around.
Hi, everybody.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us. We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
What is going on, everybody, and welcome back to Risk and Reward. We've had a pretty volatile day so far today. We have our Google trades, our Oracle, QQQ, all the above. We're going to get into that here in a little bit, but I was pretty surprised to see the weakness immediately out of the gate. You know, I thought the market would have given us a little bit of time, but we saw a little bit of the selling off that extended this downside move from the pre-market to market open. So with that being said, guys, let me know what you're looking at. Let me know what you're trading. I hope everybody's doing well. We're going to manage some of these positions here. I'm excited about a couple of them. I mean, we got Oracle on the board, so we're going to talk about that here in a little bit. Do a little bit of trade management, talk a little bit about the scalps and some of the levels that we're going to pay attention to throughout the duration of this week. So with that being said, guys, I hope everybody is doing well. I hope everybody had a great weekend. And I mean, what a Monday morning to start us off on, right? I mean, we got FOMC this Wednesday. Then we have a lot of exciting earnings. I really have my eye on the Qualcomm earnings this Wednesday after the bell. So I'm going to keep an eye on that. I think I'm going to stay sidelined for things like Apple or any of the bigger earnings. And we might do some post-earning trades on that. So with that being said, we were looking at the oil market last night. We were looking at the S&P 500 market last night. We wanted to get on a little bit of long delta. I wasn't too comfortable, so we cut those fairly quickly. So we're down about $25 on the oil market. But I do want to get a little bit more long delta on in here. I love that we got the gap down over the weekend. We had a little bit of a continued sell-off to the downside. So maybe we look at USO. Maybe we get on some long delta in there. Maybe sell some out-of-the-money puts. But we'll circle back around to that one. But that's what this oil position is. And then we have MES. This was a position that I had just sent through to make sure that the platform and everything was just working okay. So that's why it's pretty much a break-even, a 0, 0, 0 everywhere on MES. And then we got Google. Google experienced a gap up over the weekend, which is really nice because Google earnings, we had a pretty significant gap down. And whenever we had that gap down, we had sold an iron condor, get a little neutrality in there. And then our put side was being tested a little bit, but because of this gap up over the weekend, you can see here now, you know, our put side isn't being tested too much. If we can get this to load here, we'll go to a 30-minute chart, see if this will load. But yeah, no, morning, Ranch. Morning, Jermal. What's going on, Ranch? Yeah, no, let me know what you're looking at. Let us know what you're trading. But we'll circle back around to that. There we go. We got Google pulled up right here. Yeah, again, downside action from earnings, a continued sell-off to the downside. Sold an iron condor with mostly delta neutral, and then now we're trading back inside that range. So that position's working out pretty well. We have the Oracle trade. We sold a naked put. This one expires August 21st. We sold a 110 put, and this is one of the first days we've finally seen any kind of uptick in this product. So that's nice. We were only holding this trade for maybe 4 or 5 days, but I mean, it literally, I was telling Jermal earlier today, it's felt like I've been trading this one for now 3-4 weeks, just because of the continued downside we put in, right? After we put the trade on, we saw newer lows and a sustained downtrend that Oracle has been seeing. So seeing the gap up and a little bit more of a trend to the upside is really nice. I was even debating on taking this position off, but we're gonna stay patient, right? We're up about 200 something bucks on the day on it. Overall position is down around 50 bucks. We'll be patient. Oracle still hasn't gotten out of, you know, the downtrend that it's been in right now. So do we even consider this a pop to the upside? It's not even technically much of a retracement. We're still trading below Friday's highs. So until we can get a decent pop, maybe to around 130, 135, we're not gonna call it a retracement pop, but it is nice to see A little bit of a pause on the down moves that we're seeing there. And then we got QQQ. We sold an out of the money put spread on this one at near the end of last week. We put this one on Wednesday. We closed it about 10 minutes afterwards because we thought the market itself a little bit lower. And we wanted to snag as much premium on this spread specifically. So that's why we were waiting for a little bit more downside action. Over the weekend, we gap up, market opens, we continue to sell off, close the gap from last Friday, and then continue to sell off a little bit lower. So we sold an out of the money put spread here. We have 25 days left till expiration, $5 wide. I'm gonna be patient on it. But with this continued sell-off that we're getting, I have an inkling to get on a little bit more long delta or get on a position that's a little bit more aggressive to the upside. So with that being said, we do still have on that QQQ position, but I want to get on more deltas. I love that volatility is expanding. I want to take advantage of the premium. I want to take advantage of the volatility. And because these are some consecutive days to the downside, that long bias is seemingly a little bit more attractive. Outside of those trades, we have the SpaceX trade. We sold an out of the money put spread there, $5 wide. Again, one of the most disappointing trades. I say this every week, and I'm gonna continue to say it while we have this trade on. It is 25 days left to expiration, so we'll be managing this one by the end of the week. And I think I think Wednesday's really gonna set the tone for what we could see throughout this next month at least, because I know we have a lot of important earnings this week, but especially with the FOMC this Wednesday, whatever we do prior to that, I'm gonna be doing with a grain of salt at least, just because without that FOMC rate, I'm not too sure how we're gonna be managing some of these positions and how it could kind of play out over the next few weeks. I traded 1 day in QQQ. Dr. Jim just spec'd in. Oh, I got you. We got some QQQ action. Very at 52 days till expiration. Yeah, I think I'm gonna get on some long delta as well. I see Dr. Jim might have gone on some long delta. I love that we're trading at the lows over here. And just to start us out, we have some of our auction levels that we're paying attention to. And if anybody is new to this segment, these are the levels that experience the most trading activity within those specific prices. So we like to keep an eye on those just because we understand whenever there's any type of large orders coming through to the market, they need a ton of liquidity to fill those orders. And these areas on the market just give us an idea of where a lot of those orders could be filled from an order flow perspective. So with that being said, we're going to be looking for a little bit more downside on this market. I'm hoping we can at least test this value area high right now. That's sitting at about 29,902. If we don't get down to these levels, I'm most likely going to be hands off. I'm not going to be trading any of the Nasdaq futures either. This morning, we had a lot of great downside action from pretty much it was like a level to level move. We had a lot of rejection off our value area low this morning. Then we saw a continuation to the downside. We took that trade on some other accounts. Would have loved to take that one on the Tasty account. It was a little bit difficult. We were live at that time too, so it was a little bit of multitasking going on there. But with that being said, we had more continuation to the downside. Really want to pay attention to 27,902. So if we don't get down here, I'm going to be hands off, no trades for me. But if we do, we might have some opportunity to take advantage of. And if we continue to sell off lower, I'm going to definitely look at selling some out of the money put spreads, get on a little bit more long delta. But with that being said, we got the SpaceX position, QQQ position, Oracle, Google, MES. We got the oil trade. And oil's been exciting. I think this is another one where we got to kind of see how the storyline pans out. But I mean, the volatility can't be understated. We had a pretty massive gap down coming into this week. And we really haven't moved too much since. But USO gapped down to about 126, 125 kind of area. So I want to look at some of the puts, see if we can sell an out of the money put spread. Maybe get on a little bit of long delta there. I'm not going to be utilizing the micro crude oil contracts or the micro oil contracts just because it's a little bit of a larger product. It's a little bit more difficult to manage, but I want to take advantage of oil. So we're going to get some exposure through USO. Let's look at the 25 days left to expiration. Let's see what we can get for a put spread. Maybe we sell in the 120s, buy the 115. That's going to give us 185 worth of credit. We could also do something a little bit more aggressive. We could look at the 9 days till expiration, and we could buy an out of the money call. We could buy the 135s for 282. And let's see, I'm going to view that options chart just to get an idea of where some of these contracts traded over the last few days. That one doesn't have too much volume. Let's go back into USO there. Go back to the trade page. 9 days. We could look at the weeklies. You know what? I still don't hate these. We're still kind of inside of our expected move. We could do this one for $3. We do have 9 days left to expiration. And a move like this on oil, it's not even necessarily looking to, it's not even saying that, oil is going to go right to all-time highs from here, but just to get on a little bit of long delta, just in case we get a continued pop to the upside. So I'm going to go to the daily chart here. You can see the massive gap down that we have on oil so far today from that insane rally that we put in from the beginning of this month for the most part. I'm going to try and get on a little bit of long delta there. Yeah, Ranch, this is USO. And I'm debating, right, Ranch, because I could sell the out-of-the-money put spread. I could collect about $1.85. I could collect about $2. My max risk on that trade is going to be $3 because there's about, it's $5 wide. I'm collecting $2 worth of credit. That risk is going to be about $300. I could buy this out-of-the-money call just in case we get a directional move over the next, 7 days. And if we get that, the max profit is going to be a little bit higher. Also, our max loss and our buying power cost is going to be around the same. So, that's going to be 9 days until expiration. So it's going to be a little bit less time, but we have a little bit more of an upside shot, just by outright buying that call. So that's something that's on the table for me. With 9 days left to expiration, that one standard deviation or that expected move to the upside is sitting at around 136. So, I don't hate it. I really don't hate it. I don't hate getting on a little bit of long delta. So I think what we're going to do is, we're going to do the 133s. Where is 133 on this chart? Just so we can get an idea, right? So we're going to buy the out-of-the-money 133s. That is near last Friday's low. Just shy of last Friday's low. So if we get any type of retracement pop to the upside, if we get any type of movement to fill that gap to the upside, we might be able to take advantage of some of this long exposure. So we're going to go ahead and send this one through. $300 worth of buying power, nothing too aggressive. If we continue to sell off lower, we could then think about maybe selling the out-of-the-money puts if that's something we want to do. But we'll let this position cook a little bit longer, see how that oil trade plays out. And again, I'm really excited for it. We have a lot of volatility in the market. We have FOMC this Wednesday too. So at this point, I think volatility, just seeing the volatility is exciting. Grumpy Mike hates everything, long delta included. I feel you on that. In my opinion, it's actually a little bit more of a difficult day to trade. With all the binary events we have, with all the earnings that are right around the corner, you kind of have to pick your spots a little bit more. So I'm hoping that the market does continue to sell off to the downside, I will say, Grumpy, just because we have some other levels we want to look at. I would love to get on some long delta today, but I would love to see a little bit more downside action. It's looking like we haven't really wanted any type of reversal yet. And the fact that we haven't gotten a real reversal today yet, I wouldn't necessarily say excites me, but lets me know we still potentially have opportunity in the market because we're only 2 hours into the trading day. We still have about 3, 4, 5 hours left of the trading day. So if we continue to make lower lows, I really want to see how we respond off this level of value. Maybe we could take some long scalps off of that. I know we have a trade of the day later today, so depending on what the market does, maybe we take a scalp on the micro Nasdaq, maybe we put on a different trade on QQQ. But with that being said, market is still down overall. Volatility is up on the day. Right? And I'm over here buying the USO contracts when volatility is finally spiking. And we spiked to a high today of 1993, just shy of that 20 level on VIX. So, the volatility is there. The premium is there. We're getting a little bit more fear into the market. And volatility is looking like it's starting to cluster once again. So we'll be patient. But with that being said, we got a lot of exciting stuff to look at. I know we have Apple earnings later this week. This isn't something that I'm looking to trade, but Apple is still trading towards that all-time highs. So that's going to be interesting to see how earnings plays out this Thursday. And whenever we have earnings at some type of high or some type of significant low, to me, it's not super exciting to trade it, but it's always exciting to see how the market responds or the reaction is to that earnings whenever it's at such a level that it's not usually at, I guess you could say. Yeah, less is more. That's why we're not going to be doing too much this week. And something that we were talking about today was maybe taking off this Oracle trade, maybe take off that out-of-the-money put that we sold. We got a little bit of an uptick in that, but the weakness just sustains in Oracle. We're up 4% on the day, so I'm not going to knock it too much, but we've gotten a little bit more volatility into there. This was our Spurs and 6 watch list. This was our watch list where we were adding any type of underlying that was pretty much trading towards an all-time high. And we just want to watch to see how the market plays out after coming off of its all-time high. So we had some names like Micron. I kind of wish I didn't get on any long delta on in Micron because I would have preferred to have been short. We got on some longs on Micron on 7/17 just a few days ago. We were able to catch some long delta to the upside. But I think if I wasn't in that trade, I would have preferred to get on some short delta at around 960, right? Hindsight, yeah. But with that being said, with the understanding that I believe that the top is in on a lot of these memory names, I think whenever we get these retracement pops on the backside, it's a little bit more attractive to get on some short delta on in some of those names. And I mean, if the memory names, prove me wrong and we continue to make higher highs, and, so be it. But with the way that it's looking and the change of behavior and the rotation that we've kind of seen in these markets, short delta seems to be a little bit more attractive on these SanDisk names. And I mean, of course, it's easier to say whenever these names are down on the day. But I mean, even whenever we had this retracement pop. So if we continue to get any type of pop to the upside, we'll try to sell some out of the money calls there. But with names like this and the nature of its volatility, these are names that I really don't want to get short into the hole. Just because, again, we understand the type of volatility these names have. We could be right back above 1,000, by this week, especially with FOMC on Wednesday and other earnings that we have this week. I won't trade anything like a K1. It's just not worth it. I hear you. McDonald's quite bullish today after bouncing from 261 support. Any ideas before earnings? McDonald's. Let's go ahead and check out McDonald's. What's going on, Michael? What's going on, Umam? What's going on, guys? What are you guys looking at right now, and what are you guys trading? I was just talking about how Oracle is top of my portfolio. I have a trade on in the post-Google earnings. I'm going to be looking at QCOM's earnings this Wednesday too. So we have a lot of exciting stuff on the board. I think what's going to be most exciting this week is the directional trades that we put on in the micro Nasdaq and then QQQ. But we'll keep an eye on these other earnings and these other underlyings at the same time. But it's looking like we're getting a gap up on McDonald's, a little bit of a continuation to the upside today. That's kind of nice. Looks like McDonald's has been on a pretty steady, aggressive downtrend. But with that being said, we got the IVR at 92, pretty decent volatility. Then we have, what is that? The earnings are going to be August 4th, so they're kind of just right around the corner. We want to watch out for that expansion and implied volatility as we get closer to that binary event. So, I mean, this isn't something that I would take in a trade in right now, but I mean, McDonald's is looking a little bit more attractive to the upside, as it continues to put in lower lowers in this market. But it's looking like we're getting some, a little bit of volatility in some fast food products as well. Umam, a sinkhole. Yeah, I mean, this market is pretty weak today. And again, I'm thinking we get on a little bit more long delta here. I know this looks super aggressive, and this daily chart can look a little bit scary. We're starting to break outside of that range that we had pretty much consolidated in the entire summer. And now that we're coming to the end of July, it's looking like the market wants to put in a little bit more downside action ahead of FOMC on Wednesday. So this can look kind of scary, again, just because we have no consolidated price action to trade off of, right? I mean, this has been a consistent uptrend since the beginning of the year, the end of March, from March 27th, all the way to a high of, June 3rd, sitting around 747. So this seems to be a little bit of a pullback, but I mean, I think it's healthy. I think we get so used to the market making continuous new highs. I think we get so used to the market continuously, drifting upward. Of course it will over time, but even just in a shorter time frame context, I think we can be really used to that. And whenever we get these extended softs to the downside, I think we could take advantage of those. Maybe get some more long delta on whenever the market sells off. We get an expansion of volatility at the same time. So that's really going to be top of mind for me. Get on a little bit more long delta as we continue to sell off further. This market is offering a lot of opportunity, though, I will say. And if anybody's just joining us, some of the levels that we have marked off right now, these are our levels of value for this week. We use a volume profile to get these levels. These are the 1 standard deviation volume levels from the most trading activity that occurred at specific price levels. And right now we're keeping an eye on to see if this market wants to sell off a little bit lower, because we'd love to take a little bit of action if we can get down to around 27,900. So we're going to keep an eye on that. Let's go ahead and go to our watches, see what else we got on the board. I know we had some Dell consolidating at its highs. A lot of overextended names. Maybe we're seeing a little bit of a continued rotation. And again, it's so funny because these names will be trading at their all-time highs or near that all-time highs, and it can just be so uncomfortable to get some short delta on into strength, and sometimes it can be so uncomfortable to get on some long delta into weakness. So Dell is going to be another one I keep on top of mind. I think I would have gotten some short delta on here, but I believe I had seen Trump said something about Dell, about how it was a good buy or something along those lines. And the way things have panned out over the last few months, whenever something like that was tweeted, I was like, you know what, I don't want to hop in front of that train. But looking back at it, it would have been nice to have a little bit more long delta on. But this one is more attractive. Looks like we have earnings August 27th, so we'll leave it off to the side for now. But we have more names that are still a little bit overextended. Now we have Intel on the day down about 4%. It looks like this one is leading the charge from Micron. And let's double check. Yeah, Intel is leading the charge from Micron. Let's see SNDK. SNDK and so Micron is lagging behind SanDisk and Intel a little bit here. So this market is definitely starting to pull back. I just can't get the silver and gold market out of my head. Do these not look like, right? Do these not look very similar in terms of the type of, volatility and the type of hype that these markets have seen lately? So, I mean, if the top is going to be in on these, I think the approach is going to be how we were, viewing the gold market. Whenever we were getting pops in gold, whenever we believed that high was put in, we were getting on some short delta to the downside on gold. So that's going to be the same approach that we have with some of these memory names. It's like, yes, they could continue to rally a little bit, but that's where the risk to reward is going to be slightly more favorable, because I mean, these names have ridden off complete hype, and in my opinion, have gotten a little bit too overextended. I know, easy to say in hindsight, but I mean, let's be real. I mean, these names went from about $200 to $1,250 to $1,250, within a couple months. So, single stock futures are going to take the helm very soon. No, I'm excited about that. I don't know what your guys' thoughts are on the single stock futures. I think it's going to be great to get direct exposure to any market that you want. Like if you want to trade a Nvidia, you want to trade a Tesla, being able to have a futures product with that is pretty cool. I mean, I think it's going to be great to be able to hedge a lot of strategies. Maybe you have on a lot of long delta and you want to reduce those deltas. Maybe you sell a future in Nvidia on the single stock future. Maybe you can hedge your portfolio a little bit more like that. So I'm excited. I know they launched them in the early 2000s, so it's pretty cool to see them coming back. And we'll see how that plays out. I know with the PDT rule being gone, traders have a lot more direct access, to put on directional positions on either side of the market on some of these larger underlyings. But I think futures products definitely serve its own purpose for sure. So I don't think it's going to be too redundant. I think it's going to offer a little bit more flexibility for traders overall. So I mean, I'm excited for it. I'm looking forward to it. Are you going to trade Tesla? I know Tesla had earnings not too long ago. I know we were keeping an eye on Tesla. Wanted to potentially get on some long delta. Right now I'm looking at the daily chart. So you can see from when it had its earnings, we had a pretty large gap down to the downside. We had a continued sell-off from about 341 all the way down to a low of 316. So the volatility, the range is definitely there in Tesla. This is its third consecutive day that it's sold off. But I mean, even if we just look back, to the beginning of this year in February, you can see how aggressive Tesla can get, right? I mean, even whenever we're selling off, we can sell off for over 100 straight points. So although these 3 consecutive days look really attractive, I'm going to be a little bit patient here and take it from there, especially because right now we still have some exposure to the SpaceX market. So I don't want to get double long Elon. If I'm going to get some long delta on Elon, I'd rather it be in one name at a time. So if you have missed so far today, we put on this oil trade. This is a USO trade. Got a little bit of long delta in there. We got a gap down over the weekend, just looking for a little bit of a retracement pop, nothing too aggressive. It was about $300 worth of buying power. We did buy that call. So our max loss is going to be the debit that we paid on order entry. And we don't have to realize the entire loss, right? If oil continues to sell off, we can cut this down $100 and reposition if we want to. Or switch up the strategy, or maybe sell an out of the money put spread, whatever we do want to do. But whatever that max loss says, it doesn't mean you have to realize the max loss. You can manage it a little bit more before it gets to that point, but it's nice knowing the worst case scenario whenever you're putting on a trade. So that was the idea over there on USO. And again, we got a little bit more long delta on in QQQ. I would really love to see this market continue to sell off to get on a little bit more long delta. But we got Grumpy Mike saying Tesla to zero would be fun. Yeah, Tesla to zero would be a lot of fireworks for sure. I don't know if I'm hoping Tesla to go to zero, but we might see, Tesla stabilize a little bit more now from all the volatile actions it usually offers us. And I just want to quickly take another look at Micron, just because these moves can happen fairly quickly sometimes. Like even the window of opportunity this morning to get short. I mean, the window of opportunity this morning to get short was only about 10 minutes. You know what I'm saying? It's like if you're trading a lot of these auction levels, so if you weren't able to take a trade within that 10-minute window, you're gonna miss the opportunity. So that's why sometimes it's nice to just have these pulled up on your screen, have these levels already marked off, put in some alerts if you need to, so you're not, watching the screen all day if you got some of the things you have to do at the same time. But you can really see, how quickly you need to make some of these decisions whenever the market is offering a potential opportunity. So these edges of value, once again, are going to be the areas we're going to continue to pay attention to. And a lot of the trades that I'm posting, all the trades that I take on micro Nasdaq are coming off these edges of value. So we're going to continue to take these trades. Our next value area high that we have in mind is going to be 27,900. So we're not going to blindly get long off these levels. We want to then pay attention to the tape and read the order flow whenever we do get to these areas of interest. But it's always nice to know what those levels are going to be before it gets there, so we can be prepared for where we even want to look for, or for where and what we want to look for in the market. Oracle made a turn, still short opportunity there. Yeah, Oracle finally getting a little bit of a relief pop. We're down on this overall position. We had sold an out of the money put. We sold the 110 strike expiring in August 21st. Oracle has been such a difficult trade, right? I mean, that's almost the definition of a falling knife, except for the gap up and continuation to the upside that we saw today. But I mean, that's the continuation of, a literal falling knife to the downside, a difficult trade. But I'm hoping we didn't get long too far away from the bottom. I don't mind sitting in a little bit of drawdown, but we're not going to risk the entire value of that put option. We'll cut the trade at maybe 200, 250 if we need to, if we get back down there, but oil's definitely been another one. But with that being said, guys, again, the positions that we have on a little bit of oil exposure in USO, SpaceX that expires in about 25 days left to expiration. We got some long delta on in QQQ. We put this one on last Friday. We have the long delta on an Oracle, Google Iron Condor from earnings. And we'll put on some more trades later today. But with that being said, guys, I appreciate you guys taking the time. We'll be back with more trade ideas later on here in a little bit. Be sure to stay tuned for more amazing content. Ranch, Big Deal, Grumpy Mike, Sanjeed, everybody else, thanks for taking the time to hang out. And we'll catch you here in a little bit. Stay tuned.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
So you're an active trader looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. Your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boo? Trade like a trader. Tasty Trade. Make your move.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
We are back. You're watching Tasty Live. It's midday here, noon Eastern, 11 Central, which means it's a good time for a quick FX check-in with our man, Glen Frybarger. Glen, how are you today?
Fantastic. Getting back into the swing of things. How about yourself?
Watching a market that's having quite the topsy-turvy day here, especially the US dollar, which opened lower, but now what would be second, third highest close of the year if things stand.
Yeah, it's funny. We get into these weeks where you have earnings data, all this sort of, event that driven risk that we know and love. And we're getting a tale of 2 lead ups because last week it felt like we were anticipating events all week. And this week we're swinging in full force back and forth. A huge risk off tumble into the U.S. trading session sets the stage up for, not the muted volatility into this week's events that I would have expected. I know pre-market, you were even saying this checks all the boxes for a little relief rally. Not the case into midday.
No, I mean, it felt like the market was kind of the table was set. We got our catalyst. There was nothing else coming along. Maybe the market would just stay pinned here and, hold on. Obviously not. But that's good news for the dollar because with news over the weekend that oil had gapped open lower, we did see that the demand for the dollar was falling off a little bit there, which makes sense. Risk off, or risk is coming off the table, so demand for liquidity dissipates. That's obviously not the case when we check in right now. We can go to the charts here. Dollar index is where we're going to start before we hop over into Spot FX World. 101.47 right now on Dixie here. It's a nice little pull-up after what's been a good little run the past few days, bouncing off of former resistance turn support over the past year. Glenn, a lot of this has to do with the euro, of course, because the euro is the largest component. So let's start there. When you're taking a look at the euro today, what do you make of this price action, particularly around these levels that we're currently trading in right now?
Important call out there because the kind of approach that we're taking, unpacking from that wider dollar index, when you start to get closer to, the former resistance, the former highs for that dollar basket, then that opens up a world of opportunity to see which price extremes on the spot level or on the individual currency level are most interesting, and the euro is absolutely one of them. It appears to be bouncing in the last hour to get really granular above the 113.5 in the spot market. I can't see what exactly that is here, but that is the lows that we've seen for this euro, and for the time being, it looks to hold, and so that opens up, depending on how granular, how intraday of a trader you are, a potential opportunity for reversal here, or at least very early, very easy to know when you're wrong if these levels don't hold for the next hour or so. We could be taking another leg lower, but risk reward to the upside now favors historic precedent, at least for the last year plus. Is that how you're thinking about it?
I mean, I'm still leaning short here. Last week when we were talking about this, I know that you and I are approaching this a little bit differently. Mm-hmm. My approach is not necessarily super bold up on the dollar. It's more of the idea that the euro probably is facing enough headwinds in the short term that rallying here henceforth is going to be difficult. So I got in the short call spreads, right?
Yep.
Last Thursday, what did we see here on the ECB meeting? Just a quick technical look, bearish engulfing bar. We were above the prior session high. We closed below the prior session low. So that to me is where risk is capped off right now, 114 and 61 pips. As long as we hold below there, the thrust of this move lower is still contained. And to that point, the 1 month moving average now is at 114.53. So if you get through that Thursday high of 114.61, you've then breached the 1 month. Something clearly the yellow line here, Glenn, has been guiding this market down for several weeks now since the middle of May. That would be a change in the character of this decline. So as long as that holds up right now, I see this on a more granular level, going back to the Eurodollar spot on this 4-hour time frame. I see a recent little bounce here. I see a breakdown last week on Thursday. I saw an attempt to get back up into that uptrend here at the start of the week and failed. And so this now looks like a broken trend. This is now a bear flag, top left to bottom right. I'm looking for a break of 113.60 or so to signal continuation into a new yearly low.
At an inflection point for sure. And I think the way we're talking about it is it's helpful to frame that this for the week, when we look at the week ahead, can give us some idea about where we run into Wednesday, but the huge catalyst here being the Wednesday FOMC, and that is usually can be a formality, but this time around we still have rate hike odds very much in the air until then. Do you see that any sort of compression there in the run up to Wednesday? Because when we talk about these currencies, you are a proponent of a slowing euro. But the cool part about these currencies is they're very two-sided stories. And I think there's a lot of risk in the dollar side of it, at least leading up to Wednesday.
I'm not worried about the dollar side of the risk. I mean, one of the noteworthy things about today, oil prices are still off, 6% today? 6.73%. If I told you, if we were talking about this last week, and I was the person pointing out, look at the rolling correlation between Fed hike odds and oil. The SR3 contract and crude oil had a rolling 1 week correlation of negative 0.95. So every tick higher in oil was basically an erosion in the SR3, which basically meant that higher hike odds.
Right.
So if we had come into today and said oil is going to be down 6-7%, which way do you think hike odds are moving? I would have said they're going to go down. And they haven't gone anywhere, in fact.
No.
We're now flat. The SR3Z6 is flat on the day. We gapped open higher, signaling there was a reduction in cut odds. And now we are back to effectively where we closed with Friday's move. So what does that tell me here? The market sees that there's inflation coming in the system thanks to oil, no matter what. The supply chain hiccups, they're there. Real rates have gone up for a reason in the United States. The market is obviously thinking that we're going to get higher interest rates here henceforth. So when I look at the dollar right now, yeah, it's a two-sided story with the euro, but the dollar does have that rate hike backbone that seemingly can't disappear right now. So the market thinks September, December, first two hikes.
And that's important to know, is because we could get, as a part of the nuance of what this meeting will entail, it could matter way more if there's any change in the kind of total cycle odds, and not necessarily as nitpicky as to when, I think is exactly right. But it should make for a lot of short-term volatility.
Glenn, to that point, though, we want to talk about particular managing the position here, right? Because if you're short the euro in the spot, obviously today's a fine day. If you're doing what I'm doing through the futures market, there are some things to consider. Primarily of which we have some short strikes that are here that we're just below them, and we're only at 11 days to expiration. This one that's sitting at the 114.5, 115 was one of our CME 5-minute futures. So that was put on within the 21 days. I'm going to ride this down a little bit more. The 115.5, 116, we're getting pretty darn close to 80% max profit here. If the euro jumps 100 pips tomorrow, this thing is going to go to worthless very quickly because I don't have enough time for it to recover. So to that end, let's see if just get that filled, that removed off the books. Sitting out at 39 days to expiration, the 115.5, 116, again, similar. Could it be taken off today for a profit? Yes, but bear flag, break of uptrend, dollar index turning higher. I think it's worth sitting tight right now. The dollar still seems to have some mojo as it were.
I concur. And does that thesis hold for, did you get filled in that Canadian dollar?
I did. I did
go.
get filled in the Canadian dollar. You and I were, last week, dollar CAD fell back into its 50-day moving average. We'll pull it up here on the screen. And we could see that
Big
it gave you
bounce.
that bullish engulfing bar key reversal right when it did so. And that was interesting because it came right ahead of that March swing high. So that was the rationale for looking short the Canadian dollar. I did that again through 6C because maybe there's a turning point like with the euro. I don't need this thing to go up per se. My bet is that maybe that's a floor of sorts in the Canadian dollar. So in 6C, that flipped over and became, the 72, 71 and a half short call spread here, which could be taken off for a little bit of profit. It's about 30% of max profit right now, and there's still 39 days to expiration, so I'm going to let it run. But I'm feeling good about those particular views because the market is responding to technicals, and when you look at 6C here, you get your engulfing bar. And since then, we've seen an erosion through the 1 week, through the 1 month, and the past 5 days, we've been just unable to climb through the 1 week or the 1 month, treating it as a ceiling of sorts here.
Yep.
It feels heavy. Feels heavy.
100%. The last market I want to call out that is my mover of the day, of course, mover of the day being the dollar, but dollar Swiss franc actually is the one I want to take a look at. This one just hitting new year-long highs, eyeing in the spot market that 0.82 round number. But we haven't been here since last June, this compounding on some early morning U.S. dollar strength and a report that the Swiss National Bank is nowhere close to wanting to raise rates all the way through the end of 2027, regardless of if that's hearsay or not. It's enough to bolster the dollar against this currency. And another important call out here is that this is actually becoming a big favorite for carry traders. When we hear the word carry trade, I know anecdotally we all go to dollar yen, but that's been a much more political market to try and trade. This Swiss franc pair, also ultra low rates, used here as a funding currency, means that if you got long here in the dollar, you're gaining the yield from holding dollars, financing them at zero, and that's been a popular and over the past 6 months, very successful when you compound with the spot rate. And here in the U.S., the margin requirement as well to hold this at 3% has led this to become a more, potentially historically, has been a more profitable carry trade per, even dollar than this dollar yen that's held at a higher requirement. And has, the Bank of Japan has actually raised rates and lowered that interest rate differential. Just one I'm definitely watching this week. It's stalling similarly to euro and everything else right now over the past hour. But right here at its resistance level, this will be one to watch. Very supportive technical chart over the past few months, but how far is too far, and will the carry trade hold?
I absolutely loathe the Swiss franc. September 6, 2011.
I apologize.
I live 10 minutes from my office at the time, and I start my day at 4:30 in the morning, and right when I get to work, the Swiss National Bank installed the Euro Swiss floor at 120. So when you're sitting long a bunch of Swiss francs vis-a-vis the euro and the dollar, my one and only major margin call that morning. But Glenn, I'm going to give you something here. Switzerland doesn't have much of inflation, and the policymakers are here talking about the desire for a much weaker currency. And if the currency strengthens too much, they're going to defend and intervene to weaken the currency. So Fed hike odds are going up. U.S. Treasury yields are going up. The S&P is sitting on their hands and keeping rates pinned at the floor. Interest rate differentials guide the FX market more than anything else. So if you're paying attention to dollar Swiss, you may have a case there, Glenn, about a carry trade component potentially coming to fruition here moving forward. But we are wrapped up here. That's our FX midday update. Euro, Canadian dollar, Swiss franc, they're all dollars making a bit of a comeback second half of the session. Dollar index DXY, $DXY on your platform, looking at the potential for a third highest close of the year here today after gapping open lower. Glen, we will see you tomorrow as always. We're going to take a quick break here. Tasty Live programming continues next. Go get some coffee, folks. Trading day moves on.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Shedding my ego, watching my tongue. If it ain't kinda necessary, then I will be done. I am human, and I am flawed. My skin is thin, and sometimes I bear my claws. Forgiving me, forgiving you. We're all learning to live in truth. All I can do is what would love do? What would love do? Love would love you. What would love do? Love would love you, love you. What would love do? Love would love you. What would love me? Love would love me. Love would love you, love you. Put down my halo, put down my wings, realizing I can't fix everyone or everything. You are human and you have your own path. And if you need me, I'll just wait here until you ask. Forgiving me, forgiving you. We're all learning to live in truth. All I can do is what would love do? What would love do? Love would love you. What would love do? Love would love you. Love would love you, love you. What would love do? Love would love you. What would love be? Love would love me. Love would love you, love you. What
As you would imagine, it's been a busy day on the trading desk. And so we finally got our man over here from the trade desk, Marty, to tell us all about it. Marty, what's going on, bro? You know how we do? What's going on, man?
It has been...
oh, no, we got to do that again. That wasn't on screen.
Right.
That's what me and Marty do all the
That's
time.
how we do it.
What's
That's
going
how
on, man?
It's been really, really busy. I think that, when I woke up this morning, I saw the SPUs were up, or the E-minis were up 77 handles. By the time I think I saw AMD was up like...
Was it?
I thought
you're right. No, it probably was. I think it was a little bit.
And then they
some of these names.
crushed these, chip makers again. And then, so when it shows that type of strength overnight, usually I expect a little bit of follow through. And then they've just hammered it. So you got 100 handle range in the minis.
Mm-hmm.
And the volume, I think, is at which your boy will appreciate, because now I was looking at that volume after the way he was throwing high sliders at me the other day.
and who is he? Just say it.
I don't want to get on his bad side.
No, you're not going to get on his bad side. He's a great sport, man.
Yeah,
Chris Vecchio. No,
Chris is
he was
smart.
enamored by you, Chris. He's enamored by you.
Enamored by you. But now I paid attention to the volume. The minis are at like 900,000 already.
Yeah. No, there's a lot of volume early in the day. Frankie Walsh mentioned it in the chat earlier in the day too. There's a lot of volume already.
Frankie started sending me volume updates during the day too.
I'm sure he
saw me.
He's sending them to you now. You're part of the club. You're in the club now.
No, but he's so good.
He is, yeah.
I watch him.
He spent a career doing that, right? Looking at
Yeah.
volume and to help determine the day. And he's also a numbers guy. That's the funny part about it.
Yeah.
As am I, as is a bunch of us here. But let's take a look at that list before, because I could sit here and talk to you for 20 minutes before we realize that they're yelling at us. Let's take a look at the list real quick first, and then we can kind of go over things after that. But yeah, we've seen some volume here early on. There's been some interesting names moving around. Mm-hmm. One of the things that I pay attention to every single day is when you guys do come with that list, how many 4-letter names are on the list? But here we got the list in front of us now.
All right, so we got number 20, we got Sophie at 45. 19, we got Netflix at a 34. 18 now at a 57.
That stock is up like $6 today.
I saw that too, right? Meta's at an 80 at 17. Amazon holding steady at 16 at a 55. Oracle, 15 at 59. SOXL at 88. 13 Palantir at 76. TQQ. Sorry, I forgot that Q almost. 68.
That extra Q.
SMH at 11 at a 97. And now we got the top 10. SanDisk, 77 at number 10. Microsoft at an 88 at 9. SpaceX at an 8 at 97%. I didn't even look at it today.
Mm-hmm.
Google at a 33 at number 7. AMD, which I thought I saw up last night. I don't know. Maybe I was
I don't think you were.
Dizzy,
Take a look.
but it
The
got
high-
pounded today.
The high was 528. It's trading 480.
Where'd it close at on Friday again?
Let me see.
I don't have my... AMD's at 6 at 89 anyway, as we digress through it. Intel at 5.
Yeah, closed at 528. 521 on Friday, so
I
it
thought
was
I saw
actually
like
up
five-
$7.
Yeah,
in
and
the
then I
pre-market.
just looked at it and I was like, oh my God. And then Intel's at a 5.
Wait, go back up.
I missed the last 5. You know how slow
He likes to.
I like to
really
go. I like to bring it to a crescendo, right? All right, so we got Apple at a number 4, MU 3 at 80%, Tesla number 2 at 42, and Nvidia at a 64 at numero uno.
Yeah, Nvidia getting rocked today. Beginning of a busy week.
Well, Mondays, like I've said, they're different at the desk. And now you have I don't think it's an inside day in the E-minis, but that 100 handle range is nice.
Yeah.
It's nice. So you see, maybe they could get up to like 1.8 million in the minis today. They're 900, aren't they, or something?
I think it's very easy. We're already at 920,000, and
we'll see what happens. It was interesting because usually when you see that up 50, 60, 70 handles overnight, you figure somebody was tweeting something.
I know, right? Along with the pullback.
Today they just crushed it,
Yeah, we tried to take advantage of it. Again, I got short an XPX trade because, and you get this, I got long deltas in the books. I'm like, it makes sense. The thing that surprised me was, like you said, they were up 70 and change,
Right.
6 in the morning.
Right.
I was like, maybe I should do it here. Maybe they won't hold. And the fact that they held it to the open surprised me.
Yeah. All right. It was interesting because I looked at the open and I'm like, okay, well, this looks pretty good. And a couple of guys are asking me what I thought. And I always say observationally, observationally. But I didn't think it was going to be an inside day, so to speak. And I don't know if 105 handles is an inside day. Maybe now it is. Maybe you can look at halfway back or something and see if that number holds or if it gets above it. Yeah. But yeah, they're doing some numbers in there. I'd be really interested to see what the SPX volume is. So.
Yeah. Sure. Well, another list with a whole bunch of 4-letter names. It continues to be the case. And we got big earnings coming up this week. It's going to be a heck of a week coming up here, man. But thanks for showing up, dude. We appreciate you. I know it's busy over there. Really appreciate you coming over.
My ear de-swelled from all those calls.
Yeah.
Right, so this is a nice break.
Oh, man. Good to have Marty with some insight from the trade desk. Thanks for watching Tasty Live, folks. We appreciate you guys. I'll be back in a little bit doing a trade of the day. So catch you on the other side of this break.
All right.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Tasty Live fan, what's going on? Welcome to the trade of the day. I am Jermal Chandler. Of course, I'm the beginning of what are going to be 3 trades of the day. After me will be Mike Butler, and then we have a guest trader of the day. But to kick it off, it's always interesting. We do the show here, starting at 7:30 a.m. Central. We're done at 10, and we go through so many trades at some point in time throughout the show, particularly on the latter half of the show, because honestly, we're looking to trade things once we kind of establish what the mood of the day is, what things are going to be doing, what's the pattern, if there is one. And that determines how we're going to trade sort of throughout the day and beyond. And this week, it's interesting. I mean, if you watched the show this morning, you saw that we were already looking at getting short delta, putting some type of trade on against the portfolio. I'm fairly long deltas in the book. Via a bunch of things, whether it's calendar call spreads, whether it's short puts in some names, whether it's semi names, whether it's long calendars or long diagonals in some of these consumer staples names. I've tried to balance out the book in that way. Instead of getting short delta a lot of the time and trying to find puts, if you will, to buy, what I have done is I have noticed that over the last, particularly since July, over the last 3 weeks, we have seen basically days where chips move one way and consumer staples and software names, believe it or not, move in another. And you're seeing exactly that today, right? And so I'm kind of long all of them. And it de facto works in such that when the chips go down, those other things go up. So they almost work like they're long puts, right? And on the other days when the software and the consumer staples are down, the chips go up, right? So it's kind of the way that you balance it out. And then you choose when to take certain ones off, etc. I might actually go into more of this the day before we get all the big stuff, which is probably tomorrow. I'll go out throughout the book and show you some of the things that we're dealing with here. But today we looked for a sort of another trade, seemingly like a one-off trade, but it's actually not. And I'll get to that right now, actually. We're looking at selling something in GLW ahead of earnings. Now, GLW, again, if you watch the show this morning, it's fascinating. Corning is a glassware company. Anybody knows that. Everybody knows that. That's what Corning has been for a very long time. However, in recent times, they do not trade like a glassware company. As a matter of fact, they trade like an AI-related company. I mean, you can just see it. If you look at their stock chart pattern, it looks very similar to a lot of the other names that we see. And that's the fascinating part about it. And so when I'm looking at doing a trade, a lot of times I'll look at doing, for earnings, calendar call spreads or calendar put spreads. Now, talked about this plenty of times, but one of the reasons I like doing those calendar spreads on earnings is because if a name gets a big move, it's an easy way to get long it I don't usually like to be short for earnings. But this time around is different. If you've noticed over the last couple of weeks, tech names that have had earnings have not fared that well. They've either been kind of an inside move to down, meaning if there was an expected move of $20 or something, it might move $10, which is a great vol selling opportunity, honestly. And a lot of them have been kind of moving to the downside because of these hyped up expectations around earnings based on the whole idea of the AI trade and the build out and CAPEX and all these other things, CapEx, however you want to say it if you're nasty. But there's been so many different things going on with this tech space. And most of it has been weakness over the last couple of weeks. And on earnings, like we said, we haven't seen the crazy big upside moves after beating on earnings or saying something positive or whatever it may be. It's all about their build out and how much they're spending on these AI going forward. So I am playing GLW in that way. And if you look at the chart here, like I mentioned of GLW, you can see, I mean, its heyday here more recently was the 30th of June, and it's done nothing but fade lower over the last month or so. If you look at SMH, kind of a similar thing. SMH is a similar deal, not to the same degree, but it has faded quite a bit over the last month or so since we've started the month of July. I mean, we can go down the list and look at it. Some names are doing it worse than others. AMAT, similar deal, moving to the downside just like that. Marvell was one of the first to really suffer a big move to the downside since the beginning of July. SanDisk and WDC are starting to do the same type of thing. And so you got to wonder, are they going to bounce back on earnings? I'm not so sure. I really don't have that much confidence that they will. So the other thing, when you look at GLW here, we go to the trade tab, we look at the expectations, 134.4 vol in the front month, $15 expected move coming up on earnings, right? Now, normally, like I said, in the past, when I looked at these names on earnings, not even the past, we can go back just, last cycle, probably up until June of this, probably up until June of this year. Most of the time I was playing these names, playing them to the upside, playing calendar calls. And I know a lot of people are like, what are you, crazy? Like, it's still high volatility. Yeah, but they were moving. And Intel was the main example of that. I've talked about this many times. And typically in these names, I would go sell at the expected move, 160, and buy at the expected move. Now, that's $1.58. That's actually pretty cheap. That's actually in the wheelhouse of what I like to do. But I just told you, I don't believe these names are going up on earnings like that, right? I just don't see it. And now I could play to the downside. That's another way to do it. You could also do these expected moves to the downside as well. I could play for 120. I could do that. But again, I haven't seen the huge downside move, I would say, on earnings either. Now, this is definitely possible. I mean, I could play for this, but I decided to just do something a little bit different because I do have things like, right now I have an SMH strangle. And the strangle is being kind of tested to the downside as we speak, as you would imagine in most of these names. And I have a couple of these across the book. I decided it's time to sell some upside in one of these type of names. Now, again, Corning was traditionally a glass company, but now they're part of basically the fiber optics on the build out for AI stuff. So it's trading, as I just showed you from the charts. It doesn't matter if it was always considered a glass company. It's trading like an AI related company, and that's where we're going to treat it. So I decided to go to August, actually, because this is a trade that I think fits the entire book. And I didn't really want to do it in the near term. I actually didn't even analyze doing it in the near term. I mean, I could look at the 145, 150. So this is actually also a really good one. I could have done it here as well. But I decided to go out to August just for that very reason. I decided I wanted to sell the 145, 155 call spread in August. And I was a little bit aggressive on it, right? I could have gone 150, 160 I could have gone 150, 160 as well. 315. That's also another good spread to sell. I mean, these are you're getting some pretty good volatility to the upside in this name. Now that's $10 away. Sure. Is that within the expected move? Of course, $15. Is that within the expected move for August? 100%. However, this is one of those where I'm giving up the opportunity again, and I did this for $3.45, meaning my max loss would be $6.55, and I'm giving up this chance to lose $655 for the fact that maybe the AI trade starts to turn back around, and some of those long delta plays that I do have in the AI names work out again. So this is kind of another way where you would say this is a call sale. It fits my book for volatility wise. It gives me some extrinsic, but it's kind of against the rest of the book into the long side. So some of those other things that if for some reason Corning goes down on earnings, I would imagine some of those names are going to be down as well, and I'll at least be able to win on this one, right? And I could have gone to a couple of different terms, but I still, like I said, I feel August is just high enough. So this is a kind of earnings adjacent play, if you will. The vol is going to come in some on earnings. I mean, again, look at let's go out to, a few months out. Let's go out to March next year. You see volatility really is in the 70s. That's really where volatility is. So for some reason, say this trade, let's look at the analysis here. Let's say tomorrow, and again, I will say I don't think volatility is going to come in to the 70s right away, but this near-term volatility could come into like 85, right? So let's just say volatility gets down to, let's call it 82 for now, right? Say it gets down to this 82 range, which we're seeing for November and December. And then let's just, have a day or so go by. Let's go to the curve here. What am I doing? Go to the curve. Take a look at this tab, do some analysis. And again, one of the, of course, the number one thing, obviously, this is a simple call spread. It's one of the simpler trades you'll see me do and some of us do. Again, I just want it to fade. And we've seen that when I've said inside to down on some of these earnings move for the tech, whether it's TSM, ASML is doing it again today. They didn't have earnings, but they basically pre-announced. Tesla obviously was down. Google was down. More of just about every one of these names that you've seen recently, they've kind of faded to the downside. And that's probably really what I'm betting on more than anything. It's just the trend to stay in effect, right? So if this fades tomorrow, I mean, this is great. Volatility will come in a little bit as well. That works. If it goes up, I have a chance of losing, but I gave myself some time. That's one of the reasons why I went to August. I did give myself some time so that it doesn't immediately go in the money if it does jump up tomorrow for some reason or another. Maybe I'm wrong. I mean, maybe, right? Like it's possible. Intel went up on earnings. That one did go up initially after hours. And then the next day it did fall down and it faded and traded through 90, whatever, right? Like it traded through 98, 97. As a matter of fact, it's still falling now. You can look at earnings, post-earnings Intel, and this has been the chart. And honestly, this is kind of my guide for what I think might end up happening with Corning, with GLW. I mean, similar type of deal. Again, this was one where maybe it was going to buck the trend on earnings, and it was up after hours. We saw it trading $112. Stock closed 100 that day. Matter of fact, stock closed 95 that day. It went back up over 100, and then went to 112, and then the very next day it ended up fading. And that's kind of the same way I see Corning doing it. So that's why I went out to August. Again, you could cut this up a couple of different ways. If you're positioned just like me, I mean, I'll be honest with you, now that I'm looking back and I'm thinking about it, I probably should have done this expiration as well, just to do a near term play. But, I could have been smarter. I could have been smarter. I could have definitely done it. But now that I'm looking at it, I think I want to do it anyway. So I did two of them. I like the idea of being short something. And again, these are defined risk trades. I know exactly how much I'm willing to lose here. And I also know that if for some reason Corning goes up on earnings, I got plenty of names in the portfolio that are going to rise on earnings as well in Corning. SanDisk will probably likely turn around. I just did a call butterfly in there today. Micron, I already have a call butterfly. So there's plenty of tech names. SMH is another one. EWI is another one where I'm basically short of strangle, but mostly heavy on the short put right now because the stock has fallen. So that's how I'm looking at it. I luckily have this advantage where I get to watch the market every single day. I do watch it throughout the day. It so happens to be my job, and I love my job. But I'm able to see these patterns and see these trends, and I'm trying to make a play on that. And I also try to balance it out such that if I'm wrong, I'll be able to win in a different way on another. And I think that's one of the ways you can balance out a book. So I think I'm going to maybe in the next couple of days here kind of show you guys how a book can be a little bit balanced out such that you're not going to always win on every single thing. At least that's the way I've learned how it works. Like you can't try to win on every single trade. Some trades are what we call like a little bit of a sacrifice so that you can win on the bigger things that you want. And I think that's one of the ways you need to think about hedges, if you will. If you want to consider this a hedge in the portfolio, this is kind of a hedge in the portfolio, this GLW trade that we're putting on now, because it's one where if I lose on it, I'm going to be winning in other trades in the portfolio, right? Now, again, I know it's a very ugly area. You've seen the stock fall through 145 here, and it's really not looking that great. This is an area where possibly you see somebody try to come and pick up shares, somebody meaning the crowd. The sentiment has been so negative. Maybe they come and try and buy this up after earnings. Maybe they do. If so, I'll be ready for it because, again, I got plenty of other things in the portfolio that are going to work. So GLW is the trade of the day here for me. Short call spread. Again, a very simple trade here. It's earnings vol. It's pretty high. I sold August, which is 90 vol. I also decided to sell a nearer term in the actual earnings cycle for 145 vol. And I think the August will come into probably high 80s, low 80s, I would say 82, 83 volatility. And that's kind of the way it'll play out inside to down. But we'll see what happens. Now, we're going to go to Mike Butler for his trade of the day.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
What's up, everyone? Welcome back to the show. What a crazy market we've got here. E-minis down 4.5, Nasdaq down 150, and it's been an interesting day to say the least. You've got the market selling off after a big open this morning with the crude oil markets sliding aggressively down 7.5 points, 7.5 percentage points, down 6.5 points here. It just seems like markets are turning red, even with crude oil turning red. And I think it's interesting because we've got so many tech stocks, so many crazy announcements that are going to be happening over the next couple of days. And you've got a CME FedWatch tool that is giving us a 30% probability that we get a 25 basis point hike. And that is really interesting because over the last, let's say, 3 or 4 interest rate decisions, we've had basically a 99% chance that we are getting whatever the decision is, and a 1% chance that there's a surprise. But right now, we're leaning a lot more towards that 30% mark, at least right now, with 2 days to go. So we'll see if that changes over the next couple of days. But I think given the uncertainty with the interest rate decision, that could be spooking the markets a little bit. But historically speaking, I mean, they don't want to create a market surprise because that can create volatility in the markets and reactions in the markets, which isn't necessarily the Fed's prerogative. But we'll see. 70% chance we get no hike and we just stay where we're at. But nonetheless, my trade of the day is in QQQ. So I'm going to be doing a lot of these individual earnings reports. I think when it comes down to the implied volatility in the weekly cycle and some low implied volatility in the monthly cycles, like you're seeing in Amazon, Apple, Meta, Microsoft, I'm going to be individually exposed to those names. But QQQ into this sell-off has given us a lot of implied volatility, and I wanted to take advantage of that in just kind of a holistic way. My general assumption is that given the weakness in the market, given the volatility overseas with crude oil chopping around here like crazy, and even just the fact that we opened up 60 points in the E-minis, 350 points in the Nasdaq, and now we're net down in those products, I think gives you a little foreshadowing into the weakness of the market, or at least an inability for some of these stocks to really move to the upside in a big way. I'm sure we'll have some products that do, but it just feels like this market is weak, and it's more about like how much capex is there and how inside are we going to go with some of these earnings announcements, or how much are we going to sell off in some of these tech stocks. We've been seeing it intraday in Micron, down 45 points now, huge intraday reversal here in Micron. And then you look at SanDisk too, down 150 points. We opened at 1450 in SanDisk, and now we're sub 1300. So almost a 200 point slide intraday in SanDisk, and same thing in Micron here. Basically a 50, 60 point slide here from the open to where we're at right now. So QQQ, I did this downside trade here where I am buying an 11-day cycle and selling the 4-day cycle. So I went out and I bought the 670 inside the expected move, quite a bit here, but just around $1,000. That's where I was looking. And if you look at the implied volatility structure, and really the main focal point of this trade is the short option. So I sold the 660, which is right at the orange bar expected move, which puts you at around a 25 delta, 20 delta, somewhere around there. I usually just keep it simple. Like if I'm going to sell an option, I want to go to that orange bar expected move or around there. 660 is a nice round number. And then I bought the 11-day 670 to create this diagonal spread. My total debit on this position, if we look at QQQ in the positions tab, was $600. So I've got a 10-point wide diagonal spread that I bought for $600, and there's almost $400 of extrinsic value in the short option that I sold. So if we do end up selling off through Friday or by Friday down to 660, that would be about a 20-point sell-off from here in the Qs. That would be a really weak earnings report for this week. But even if we don't, I've got $400 of premium in the short option that's going to go to zero by Friday. I've got $1,000 of long premium that I bought in the 11-day cycle. And when it comes down to the value prop for this trade, paying $600 for a 10-point wide diagonal spread, I know right off the bat I can make $400 on the difference there. So intrinsic value, long option to short option is $1,000. I paid $600 for it, which means my max profit intrinsically is about $400 there. But I also know that my short option is going to go to zero extrinsic on Friday, so there's another $385. I would lose extrinsic value my 11-day long that I've purchased, so keep that in mind. But I'm projecting that this max profit is probably somewhere around $500 or $600 because I can make up to $400 in intrinsic value just from the difference of cost and the width of the spread. But this extrinsic value, my long option, is currently trading for $1,000. By Friday, let's say it's trading for $400 or $500. We get all the value out of the short option. I can hold on to that, a lot of that extrinsic value in the 11-day cycle. So really really nice, interesting way to play the downside here in the Qs. And if you look at the dispersion of the premium here at 660, again, $370, almost $400 in premium for the 4-day cycle, and the 11-day cycle trading for $1,000. So much lower implied volatility in the 11-day relative to the 4-day. As you can see, 36% implied volatility reading in the 4-day cycle, which is reflective of all of the earnings in the tech stock sector that we are getting this week. And then a much lower implied volatility reading out 11 days, where the seas will be calm or perceived to be calm at that point in time. But either way, I'm not paying nearly as much in implied volatility value for the 11-day cycle relative to the 4-day. So again, wanted to encompass all of the earnings announcements that are happening this week. So I went out to the Friday session, 36% implied volatility, big spike there. You can see it's the highest reading on this board. We go from 31 to 33 to 35 up to 36. And then on Monday, it drops down to the 20s, low 30s across the board next week. So 19.5 point implied move in the 4-day cycle and a 27-point implied move over the 11-day cycle. And of course, 11 days relative to 4, you've got twice the amount of time, more than twice the amount of time, almost 3 times the amount of time, but only 7 points more in implied move. So 300% increase in time, 50% increase in implied volatility or implied move. That's the ratio or the way that you look at these things when you're looking at diagonal spreads or calendar spreads. So I like the way this trade sets up. We can take a look at it on the analysis page to give you a nice visualization here. We can do it from the positions tab, of course, go to the analysis from there. And then reviewing the analysis, you can click this button. You can show the Theo or expiration. The Theo is where I want to go for this one because this is really going to be an extrinsic value trade plus intrinsic value, of course. But whenever you have a diagonalized trade or a calendarized trade, you want to be looking at Theo because your long option having more extrinsic than your short. If it's a calendar spread, you have to be using Theo because extrinsic expiration risk doesn't really apply if you assume that you're not going to have any intrinsic value. It's a pure extrinsic value trade. A calendar spread is anyways. But diagonal spread here, let's go through the motions. Let's go to Friday, and that'll bring us to the 31st. You can see we get this big spike in premium possibility here. However, we have to crush implied volatility. If I go to Friday, this 4-day cycle, I don't really have to move because when I move this to the 31st, it assumes that the short option goes to 0 extrinsic value and it's worthless. If I go to the 30th, you'd have to make an adjustment for implied volatility. So let's bring this down 5 percentage points. We'll bring it down to 30%. And then this back month here, if you wanted to be conservative, let's bring it down 5 percentage points, bring this down to 25%. You can see a lot of these back months, these expiration cycles that are further dated than the one I'm in are around the mid 20s, 27, 28%. And then you go really far out in time, you can see 25s. So I like to bring this down about 5 percentage points just to be safe and give myself a conservative view of this trade. But Thursday, if we get a 5% crush in the 4-day and a 5% crush in the 11-day, again, we're going to get, $500 out of this thing if we get a sell-off. But let's push it to Friday, and we will keep this analysis the same. This assumes I get all of that short premium out of the short option here. My long option appreciates in value on the downside move here. This is showing me a max profit, a Theo max profit of about $800, which goes in line with the things I was talking about earlier. Paid $600 for this. It can have a $400 profit in intrinsic value if it goes completely in the money. But I also know my short option goes to 0 extrinsic, and my long option is going to hang on to extrinsic value. So if we do end up going right to my short strike at 660, I'm going to make $400 on the short premium that exists right now. I'm going to make $400 on the intrinsic value move to the downside, and my long option is still going to have a little bit of extrinsic in it, which is how you arrive at this almost $900 max profit to the downside. But if we get some moves to the downside over the next couple of days, I would just take it off. If we move in the money at any point in time on this trade, I would just take it off because the further down you go, if you do end up getting a continued sell-off, you can see my max profit actually tapers off here. And that's because the most I can make from this short option is the extrinsic value, and the most I can make from the spread is the intrinsic value. So if we do continue to slide and slide and slide, my profit actually goes down because what's remaining, if I have an in-the-money spread that I bought and my short option loses all extrinsic value, what's remaining is my long option's extrinsic value. So that's why, like, if you get a move right at the money and you have a lot of value out of this short option in terms of extrinsic value, it's a great trade. You're going to have a nice profit anyways if you get any kind of move to the downside, but that helps explain this drop off in P&L where you might imagine, shouldn't this be going up? Not necessarily, because if you lose extrinsic value in your long option, that's bad for this trade. So all things considered, let's talk about management. So I sold this short option for $400 almost. This is really going to be the manipulation factor, is if we get $400 out of this option, or let's say the market rallies and all of these earnings are great. That short option is going to lose a ton of value very quickly. So if you're making defensive adjustments, I would be sure to keep an eye on that short options value. If this $400 goes down to 50 cents, it's not hedging me anymore. It's not helping me anymore. It can really just hurt me if we get a reversal to the downside, which we just saw today. So $400, if this goes down to 50 cents or so, I'll just buy it back. I might consider rolling it out to Monday or Tuesday or even Wednesday, but I want to keep at least a little bit of a diagonal nature here with my long option 11 days out. So my short option, I wouldn't go further than the 9-day cycle. I probably wouldn't go further than the 7-day cycle if I'm really trying to be aggressive with profit potential. But still, let's take a look at the value difference. If I were to buy this back at the 660 strike 4 days out and move it to Monday, what's the current premium offered for that move? Okay, really not that much at all. So this really helps emphasize the fact that there's only a 70-cent difference between the 4-day cycle and the 7-day cycle, and these are $400 options. So this tells you everything you need to know. The weekend risk is not what's being priced in here. It's the earnings risk for this week, and that's why the Friday and Monday's options are trading for a very similar value. On the flip side, let's say you wanted to go really cheap with this type of trade. I actually don't mind long the 7-day, short the 4-day. Because long the 7-day, short the 4-day, if we flip this, it's a 70-cent debit. If you were to buy the 7-day and then sell the 4-day at the same strike, you've got a 75-cent debit. If we go to the curve analysis and just isolate this trade, we've got, let's see here, the expiration Theo. There you go. So if we were to bring this to Friday, like we just did, you can see you can make a couple $100 here. But even if we go to the 30th and keep implied volatility the same, assuming these are going to move in a similar manner, you can make $200 on this trade to the downside. So this is another cheaper alternative if you don't want to take that much risk with the downside diagonal. The difference here with the calendar spread is that you have neutral premium profit potential, and that's it. If it goes too far to the downside, you can take losses. If it goes far to the upside, you can take losses. So the window's a little bit more narrow there, but let me know what you think in the comments, the chat, in the YouTube channel if you haven't already. But that's the trade of the day. It's on the follow feed. If you have any questions, you can reach out to me at Trader Mikey B, but we're going to pass it along to E with the next trade of the day.
What's going on, guys? Welcome back to the next trade of the day. Right now, we're actually going to be bringing in Chris Brecher from Trading Desk TV. We're going to get his thoughts on his trade of the day, see what he's looking at, and go from there. What's going on, Chris? Great to have you.
Hey there. Thanks for having me on. Can you hear me okay?
Sound great. How are we doing?
Good. I wanted to show two things, little trader tricks for you that I thought you'd like.
Okay.
I thought I'd start with one of my favorite trader tricks. Is when something has earnings coming out, looming earnings, and it's a choppy market. So if you want, I'm happy to share my screens and show you what we're talking about. Let's see if that works for you.
Yeah.
Can you see it?
No, absolutely. Not quite. Do you have a specific name you want to look at and I can pull up real quick until we can get that for you?
Sure. That Hilton is one of them I'm watching in here. Let's see.
What ticker is that? HI? What would be the guess there?
HLT. I'm sorry.
HLT. That's okay. Let's see. What do we got going on in there? All right. I'm on a daily time frame. Does that work?
No, I'm using a 1 minute, believe it or not.
Oh, 1 minute. I love it. You're speaking my language. There we go. We'll go down to the 1 minute.
So Basically, what we're doing is one of my favorite trader tricks is if the market pulls up a stock that has looming earnings, at least once during the day, it has a habit of going back to unchanged. So the key in there is not to short just the exact opening. It works a lot better if the market pulls it up. The stock has a habit of waffling down instead of the other way around. If the market opens down, it just doesn't work as well.
Right.
So you'll see in Hilton that it opened up at almost 332, but I'm not good enough to short at 332 because I'm not sure if it's going to 340 first.
Right.
So you wait for that first down tick and then you initiate the short. The reason being, then you have the backstop at the high. So if
Okay.
you shorted at 330, you have the backstop at 331.50. And as you see in there, it came back to unchanged. It doesn't mean it's closing unchanged. It just means at one time during the day, it'll go to unchanged. So we shorted, I don't, like I said, I don't think you can see my chart. But
Is it that beautiful, colorful with the red arrow chart that you got right there?
Yeah.
Beautiful chart we got there, Chris.
Is that working?
It works great. Yeah, we can see it.
So just so you know, I did not short up here. I shorted 329 on that little blip. And then I told everybody I'm putting in a to buy it unchanged, which is a little cocky. I actually put it at 326.50, a little above it. So we scalped 2.5 points, and that was never in trouble. So the whole thing, you might say, well, what happens if you were wrong? How would you know? Well, if I shorted right there and it got above the backstop, like in this area, yeah, I would have given up, but it never went against us. So that was pretty exciting for it to go right where we wanted.
Yeah.
The other thing in there, and it's on your platform, it's on everybody's platform, we use an ATR trailing stop. And as you see, it crossed under it. And but we played the unchanged. You could have played when it crossed back over it. So it works with a 20 moving average, a 9, and an ATR trailing stop.
So when you say backstop there, Chris, what exactly are you referring to for us watching right now?
Basically, when something, I like to short on the way down or buy on the way up. So basically, if we initiate on the way down and we have a trigger like a bear flag or a break of a triangle, we have the prior move as your backstop. So I love to have a backstop.
Okay.
Just as a point of reference.
And that's something that where you can kind of then gauge that risk versus reward on that specific trade, or at least let you know when your trade idea is invalidated, would you say?
Yeah. In fact, what's interesting is that red arrow, I traded smaller than I wanted to because I didn't have as good a backstop.
Oh, I love it.
If I would have gotten it off right at that arrow right there, I would have traded much bigger because it could have been a tighter stop.
Okay. So the closer that you're able to enter near your invalidation point, the more you're able to size in because that risk is reduced a little bit more from a range standpoint.
Exactly. So right there, your range is probably 60 cents. Here, if I was wrong, heck, I might not have admitted I was wrong for $1.50.
Right.
So that's why I traded smaller on that initiation.
Gotcha. A lot of volatility. Yeah.
Yeah, it's now Hilton doesn't trade as much as, let's say, an AMD or an MU, and I'll go into MU now. But the point is that you also have to sort of be realistic of the volume of the stock. So you can't trade like 1,000 shares. It's just not that liquid. You can trade 100. You can trade 50. I mean, you make 2.5 points on 50 shares. It's $125. Is not bad.
Right.
In there. And so that was a trader trick about it reverting to unchanged. In there, it's really neat that kind of stuff works.
So
now you might say, how about Sherwin-Williams? Why didn't that one work? And you'll see. If you didn't have the same kind of structure, but let's just say that you initiated on this break right here. I mean, that's okay. You had a little trend line there. I like those trend line breaks. But the point is, on a daily chart, it didn't have the same kind of structure. What I mean by that is that's really all over the place when Hilton was at good resistance. I'll show you. So there's the Hilton, and if you put a 50 moving average, it's right at it. So that just seemed like a good risk reward when it's at its 50 anyway, and at all these resistance. Sherwin-Williams was a lot sloppier, so we didn't go near it. But you might say, well, why were you even looking at Sherwin-Williams? Sounds silly. We were just having a watch list and seeing what stocks were up the most, getting pulled up by the ES being up 40.
Right.
So really simplistic, but that's how we did it.
Right. And is there any specific like market cap names you like to look at whenever you trade these volatile names, the flow market cap, any type of criteria you have for these type of trades?
Usually with earnings, I'm looking at the ones I'm used to, the Marriotts, the Hilton, the AMDs, the WDCs. Now, sometimes we'll look at things that are relatively obscure if they have unusual option activity. And we've seen with earnings, I don't take many shots in earnings. I think there's more than enough money to be made before before earnings, and then something like IBM after earnings. And you don't have to be bet and be the gambler. You can be the house. What do I mean by IBM? Is IBM pre-announced. One of my favorite trades also is when a stock pre-announces, it's probably not going to do much on earnings. So you can do volatility plays, which work beautifully in IBM. It's basically unchanged over 3 days. Or if it opens down even after a pre-announcement, in the actual earnings, not the pre-announcement, you can go to a short-term chart, which we did, to time a long idea. So maybe not down here because you're not sure where it would stop. But when you got that structure, in fact, we call this a Stewie pattern, an inverse head and shoulders, when if you sort of highlight it like that,
I see.
It sort of looks like Stewie from Family Guy.
Right. And the Stewie pattern, I love it. And kind of seeing that bottom being put in, again, gives you a little bit more confidence to at least let you know you're not catching the falling knife. You're not trying to guess the bottom. It's giving you some type of structure to work off of to even be able to at least take a confident loss, right?
Exactly. And a lot of people, I train anybody from, new, just new at this and advanced. And one of my favorite things is the tighter the pattern, the tighter the stop. And the tighter the stop, the more likely you are to at least attempt to do a trade to get your feet wet.
Right. I love it. What else are you looking at for the rest of today, Chris? I know we got FOMC on Wednesday. What else you got on top of mind for today?
Yeah, sure. MU is another one. And this is a same kind of idea with a trader trick. Usually when a stock closes on the low, it has a habit of testing the low at least once from the day before, barring any news. And there was no news on Micron. I know that oil was down and all that because of Iran, but I call it the stuck trade.
Okay.
So the stuck trade is if it closed on its low, almost on its absolute low on Friday, and it opens up, everybody that was stuck is thrilled to sell it. So the idea is, sure, you could say, well, maybe that doesn't work and it goes up to here. The key in here is then to take a short-term chart to initiate based on your theory. So if you go to a 1-minute chart of Micron technology, not right now, I'm talking about on the opening, you'll see that ATR trailing stop. Forget about the 50, but take in here that average true range trailing stop. And you'll see the second it got under that, that was it. I mean, that was good for 50 points.
Right.
And that's another thing is the law of twos. So if you're new at this, you can go and trade 2 shares. Commissions are, tiny.
Yeah, on equities.
So you can take,
free.
2 shares making $50 would be beautiful.
A lot of range on some of these names there, Chris. I love it.
Yeah, and the key in there also is same thing. The second it broke, you're talking about a 2-point stop to make $50. That's pretty impressive. Now, you might say, why 2? Because a lot of times on the way down, you take a profit on half. It's whether it's 2 shares, 20, 200, 2,000, but you take a profit on half, so then you're working with the house money. So I've just seen that if you're new, the smaller size you do, the more disciplined you are.
So Chris, what's your preference, right? Let's say you enter with 2 shares, 2 lots, whatever you want to call it. Let's say you get an initial move in your direction, and let's say you want to scale out one of those contracts. So you take half your size off. do you like to move your stop loss, or do you like to move it a little bit closer? Or is it moving with the ATR? Do you move it to break even? How do you like to tamper with the stop loss after you scale out some of your position?
Yeah, that's a good question. Is basically because this is based on the average true range. So we're using 9 periods in 2.9 width. So if this goes down too fast, the ATR trailing stop gets too wide. So then we'll go to like a 20 moving average, and we'll put a 20 moving average because you need some point of reference to be able to trigger your stop. Unfortunately, it doesn't seem to be working. But that will be closer to the price. So usually once it goes in our direction and it starts going fast, then we'll go in there and use a move. There it is. A 9 or a 20, something to trigger. So heck, yeah, you might have gotten out. You could see as it crossed, it stayed way under. You might have gotten out there, but still that's 30 points.
Yeah.
So you could take off all the other stuff. You could take off the ATR trailing stop and just the 9. And now you might say, well, how about up here? Well, you had that trend line break. So we always say the more points of contact, the better.
Right.
So I was combining that with the ATR trailing stop. But once you initiate, then I'll go to a move and average to time my exit. So you might have been out of half then.
Before you go here, Chris, I appreciate you laying all of that out for us, very detailed. Before you go here, is there anything else you're looking forward to this week in terms of earnings or any other binary events? I know we've got a lot on the table for us.
Yeah, I'll show you. I actually put this on social media. I thought you'd like this.
What you got?
I was showing the diamond formation in the NDX, and I actually put in that diamonds are a bear's best friend. I'll show you what we're talking about here. Is this diamond formation. So now the thing is, around midterms, usually the midterm, you see the real sell-off in, let's say, late August or July, or September. But I'll show you what we're talking about. I can take off all of this and show this diamond and show this real quick. I know I have to go. But there's your diamond formation. And as you see, the key is the break and maybe the back test. But then you look at the SPX, and it hasn't done it yet.
Right.
So the key is the lower the Nasdaq goes, the more likely this breaks to the downside. And the last thing, go and look at the NDX in relation to actual dates. That's June 10th. So it's definitely, I mean, I call it beyond the point of no return that it's so far under June 10th. It makes the probability the SPX is going to go to June 10th at the minimum, which is another 150 points.
We'll keep an eye on it. We're looking like we're getting a little bit of a rotation, a little bit of change of character or behavior on a lot of these larger markets here. So again, appreciate your time, appreciate the trade ideas that you've given us here. We'll definitely be sure to circle back around. And with that being said, Chris, we'll see you here in a little bit.
Yeah, that sounds great. Thanks again for having me on.
Thank you. And with that being said, guys, I love that Chris was already going into that smaller time frame, because that's exactly the type of time frames that I like to find a lot of my trade ideas off of as well. So it'll be nice to circle back around to Chris, get his thoughts on some of these other moves that we're going to be getting. I have a little bit of a different approach. I wish I had something on the 1 minute chart for us to look at like Chris did right there. But I am still looking at the micro Nasdaq on the day. It's looking like we're still trying to sell off a little bit more here. If I can go to the 5 minute chart, we can get a better idea on our areas of interest. Maybe I can zoom out just a little bit more. Try to find some of these levels that we had plotted out. Maybe it was on QQQ or NQ. But the market is looking to potentially take another new low here today soon. And we're watching this 27,900 level. I'm not sure why this isn't populating, but we'll give us a reference point right here, 27,900. So we're going to watch out for this area. Things are getting interesting. Things are getting a little bit more volatile. Volatility is expanding a little bit more now here. We got FOMC on Wednesday, more earnings throughout the week. But the trade of the day is still going to be this USO position that we have on here. If we get more volatility in micro Nasdaq, we'll take a trade here to get it together if we get it. What is it? Almost 1 o'clock. It's 1:15 Eastern time. So we're out of the lunch hours, in Eastern time. So we could get a little bit more volatility here. But if you missed it on the day, we got a little bit more long delta on in this oil product. We used USO to get some more long delta exposure over there. This is going to be a trade where we purchased it for about $3 and some change. It was a debit. So our max loss is going to be the debit we paid on this trade. It's a very directional trade. There's 9 days left to expiration. And pretty much what we're just looking for is some type of retracement pop to the upside. Oil is pulling back over the weekend. We had a gap down in oil, and then we had a continued sell-off in the market open today. Seems like most things in the market is selling off right now. But that doesn't change my overall sentiment in oil. I want to take advantage of some long delta. I'm not going to risk the entire debit that was paid on this trade over here. Maybe we'll risk about half, which is going to be about $150. If we get the pop that we're looking for, it should be a pretty nice directional move because it is a little aggressive, right? It's just a naked call that we had purchased expiring August 5th. But that's going to be the move we're going to keep an eye on, right? I was making the point earlier where just because you have your max loss doesn't mean you have to trade until you realize that max loss. So sometimes if you're down $150, you don't have to wait for the market to recover. You could just cut your losses at $150. You're down about 50% on the position. I'd rather do that than take max losses. And another thing about my trading style is I don't like to sit and draw down too much if I don't have to. And I make that point because we put on this Oracle trade a few days ago, about 4 or 5 days ago for one of the trades of the days. We sold a naked put out of the money expiring August 21st. And last week or last Friday, we were down about $225, $230 on this overall position. You can see today we're up almost $200. We were up a little bit more earlier today. But of course, Oracle continues that downsliding action we've been seeing. So we're down overall on the position. But because we caught a little bit of a falling knife, sometimes it may change my overall sentiment and how confident I am in a position like this. Because if Oracle continues to make lower lows, I don't want to sit in a position where it feels like I'm catching a falling knife. Because I think something we don't touch on too much either is the psychology of trading. And I think by sitting in too many positions with too much drawdown can 100% affect your psychology a little bit, which I think can then in turn affect your execution and the confidence levels that you have. So with that being said, I just wanted to make a point that we're not going to risk the entire debit that we paid on this trade. If we get down to 150, whatever it might be, we'll cut that loss and redeploy that capital elsewhere because markets like Nasdaq, the S&P 500, these ETFs, these legacy markets, they almost have opportunities on a weekly basis almost, right? Not every single week, not every single day, but almost always on a weekly basis, we get some type of opportunity. So if there's not a specific underlying outside of the indices that is offering an attractive opportunity to us, we can always sit on our hands, be patient, and then, wait to execute on a trade whenever we have more confidence and conviction in a specific trade. So with that being said, our trade of the day is going to be oil. We have some long delta on in there. I like to use USO to get some exposure to that market, but I'm just going to quickly pull up the actual oil futures to give us another idea on kind of where that volume profile was playing out. You can see 70% of the trading activity on this entire move up and the pullback that we've seen, 70% of the trading activity has been between 89, 85 on oil. We'll mark that off. 89, 85 on oil. And the bottom of that one standard deviation move, which is known as our value area low, is 77.53. So we have a pretty decent range that we're working in right now. We did pull back near that point of control, which gave me a little bit more confidence to get on some long delta. If we continue to sell off near this value area low, that's probably going to be where we're going to manage our position because then we have the potential to either reverse off our value area low or have a continuation to the downside. The only way that I see us actually continuing lower on oil and that story not panning out is if we get more time spent beneath that value area low. So other than that, we'll keep an eye on these specific areas in the market. But it is nice to see we got that rejection off that value area high last week. And again, the logic behind these moves is the fact that the market spends about 70% of its time trading in value, and the market spends less time trading outside of value, which also communicates to us that most moves that try to attempt to break out of this value area high or this value area low are going to fail about 70% of the time, right? Because that's where the market is spending about 70% of its time. So seeing a little bit more volatility, at these edges isn't going to be too much of a surprise, but I am leaning bullish right now. Would love to see us trade back at least to that value area high, right? I mean, if we get back to that value area high, we pretty much close the gap over the weekend on oil. And that should put our contracts up. I mean, if it happens over the next few days, that could put our contracts up at least 50% because they do have a shorter time duration as well. So we're not looking to hold those to expiration. We did pay a debit for it, so we will lose value on the contracts as each day passes. So we are looking for a sort of a quick directional move. Whether we get stopped out fairly quickly or we take profit fairly quickly. It's not a trade that we're looking to sit in at any type of consolidation. Something, again, we'll be mindful of because we're trading directly inside this level of value. And the market has already told us we're going to spend about 70% of our time inside this range. So we don't want to bag hold any of these positions. And I think that's one of the easiest mistakes to make, I think, whenever we're paying a debit on a trade. Because whenever we're paying a debit, we're expecting, time is not on our side. So we're expecting that move within a very specific time window. And if you turn into a bag holder or you find out you have a tendency to be a bag holder, those debit positions might eat you alive. And I think that's something that we could learn from some of those. So I'd rather cut the loss than become a bag holder. I'd rather just realize the loss, redeploy the capital elsewhere instead of, riding on the hope strategy, which is just, I feel like, deteriorates your trading psychology when you get into that place of hope. You know what I mean? Which it happens, right? You trade things like Oracle. This thing continues to slide to the downside. Has been crazy. SpaceX, I'm glad we did a defined risk trade on there. So it's always nice to have the defined risk trades whenever you're not feeling too confident either. With SpaceX ticking down lower today, trading at about 110.27 right now, a new low on SpaceX as we're still in the price discovery phase, I think you could say, for SpaceX, because we haven't had a single week where we've been range bound yet. It's been a stair step lower. I almost thought I pulled up Oracle here for a second. These are cousins right now. Just absolutely selling off to the downside. I think Oracle's a little bit more expensive right now. What is Oracle trading at? Yeah, Oracle trading at 120. SpaceX right now trading at 110. So Oracle's about $10 more expensive than SpaceX. But no, I mean, we have quite a few positions on right here. I'm really curious about the micro Nasdaq. We are out of lunch hours. We're seeing a little bit more volatility here. I'm hoping that we see continued downside, right? Because of the fact that I didn't catch the meat of this move on this account, it makes me want to be very patient for a potential long. So that's going to be my mindset into the next few hours of today, and then also leading into tomorrow, because we haven't got any significant reversal on the day. I mean, we tried to bounce, off of 27,940s, had a little bit of a bounce, maybe about 100 points to the upside, and then we sold right back off. But I mean, even this little retracement pop that we've seen here, right? This was 27,940. This is 28,180. That's almost like a 200-point move on just a tiny retracement pop. So the range that the market is experiencing right now can't be understated. And I think this is something where if we see an opportunity, we can use 1 micro. If we feel a little bit more confident, we can use 2 micros. If we see a level that we want to for sure risk off of, and it's going to be our invalidation point, we can size up a little bit more, maybe use 3 micros. But if you're not feeling too confident, the range that this market is offering right now is actually insane. I mean, with 1 micro, you catch 200 points. It's $400 on 1 micro. It's a tiny position to make $400 off of. So given the ranges that we're seeing right now, there's no need to size up, if anything, size down. And I think volatility is always a trader's best friend, right? Volatility is opportunity, but at the same time, whenever the opportunity increases, the risk typically increases as well. So just something to keep in mind. But if this market continues to sell off, would love to see us trade at around 27,890. One thing that you're going to realize is I'm such a stickler on location. Like, trade location is like number one. I don't care how bullish or convicted I am. I don't care how bearish or convicted I am. If we don't get the trade at the specific point, at the area of interest that we want it, I don't want to pull the trigger just because it's going to skew our risk reward. And even if we make money on that trade, if we keep taking trades like that, the math isn't going to work out too well at the end of 50 trades, at the end of 100 trades, at the end of 150 trades. So I think fighting for price, really fighting for those areas in the market where you want to pull the trigger on some of these trades is most important. It's better to just miss the opportunity and wait around for the next one. So with that being said, it looks like we're trading at our lows right now. Would love to see us putting a new low. You could imagine, right? There's a lot of traders right now thinking maybe this was a low and probably have a lot of their stop losses now down here at the low, given the fact that, we sold off about 700 points to the downside from the pre-market. So you could imagine some people trying to pick off the bottom right now. I might try and be one of those if we continue to make lower lows. But it looks attractive right now. And it's nice that we're putting in a little bit of a range, because if we end up getting long, we're probably going to use these levels that we're putting in right now as a potential price target to take profit at. So we'll circle back around to that if we get some opportunities. But the micro Nasdaq market is going to be most exciting for me right now. Again, as we downtick, volatility should be expanding a little bit more there. Did we touch 20 today? We're just shy of 20, right? Earlier, what was this in the pre-market? No, about an hour after the bell, we were trading at 1992 on the volatility index. So we're getting close to that 20 VIX. And once we pop above 20 on VIX, I'm going to take advantage of selling a little bit more premium, right? You never know what you have until you don't have it anymore. And whenever we're trading at a 16 VIX, I just want to jump out this window sometimes. I'm not even joking. But we'll be patient for the volatility. It looks like it's clustering a little bit more here. We got FOMC on Wednesday. More exciting earnings. I think we have Apple Thursday. Qualcomm is going to be Wednesday. Some other pretty big names. So, I mean, I'm excited for it. But we'll keep an eye on this NASDAQ market. Again, lastly, if you're just joining us, we do still have on the Google trade. Both the contracts, both the sides of this trade are sitting out of the money right now. And just to pull up the options chain real quick, you can see last Friday, we rolled our calls down a little bit more, collecting an additional 50 cents of credit so that we can widen those break evens after the exaggerated downside move and gap down that we got off of Google earnings. So we'll continue to pay attention to that one. Then again, on Oracle, if this one continues to slide a little too aggressive, we're going to cut this at around, I think this one we're going to cut around $200. So again, we're not going to be risking the entire debit we paid for this position. This one was a premium position. We sold this put. So these are just those very directional trades that we're going to key in on our risk a little bit more there. So USO, a little bit of long delta. That's going to be our trade for the day. But as always, guys, I hope you guys have a great rest of your day. Thanks for joining us on these trades of the day. I hope you enjoyed. Be sure to stay tuned for more amazing content coming on next. We will catch you guys here soon. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
So you're an active trader looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
We're back. You're watching Tasty Live. This is Futures Power Hour. Yes, a full one here for the next 60 minutes. TP is out today for the rest of the day, so Ilya and I get the 30-minute slot leading into him. So yes, like the old-fashioned Futures Power Hour here. Still Monday, July 27, 2026. I'm Chris Vecchio. He's Ilya Spivak. Ilya, the markets today, what a puke from yesterday's open when we were on first call. S&P 500 just off the low, 74.26, down 20 points. Now it's only 0.3%, but it was up by 0.8 earlier. Your Nasdaq, where we start the day with a 1.3, 1.4% gain, the leader in the clubhouse, is now the leader in the wrong direction, playing like your New York Mets here, down 0.8%. New monthly lows and the lowest levels that we've seen going back to that first week of May. Another day like this, and we'll be at the lowest level since late April. A lot has come off the board here. Of course, there's a lot of angst building up, not necessarily because of oil, which is still down 6% today, but because we have the slew of earnings that are coming out over the next few sessions, Ilya.
Yes, sir.
We obviously have to break this down from the volatility perspective, from the technical perspective. There's obviously some narrative in play here too, but let's start with the volatility right now. Topsy-turvy kind of day for volatility. We're only at 1930 here, but it's after we crashed in. VIX itself is sitting at 1941. So whatever we gave up at the gap open, that was pretty much it for the week. Ilya, 1942 VIX isn't necessarily something to be scared of, but we're starting to get into the territory where when you're north of 20, things get a little bit more interesting here. Contextualize the VIX near 20 with the upcoming slate of event risk, earnings, and macro.
Well, I think this is the kind of thing where, number one, you don't do technical analysis on the VIX.
Of course not.
This is not a thing you do.
That was not what I was suggesting. Don't put that on me.
Yeah, let this be a postulate for all time. We do not do technical analysis on the VIX, because if we were to line this up, obviously stocks are down a lot more than the VIX is up relative to their extremes, right? The VIX is up a lot less off its low than stocks are down off their highs. And this is why you don't look at this and you say, well, the VIX is still low. That must mean everything is fine in the stock market. No, it's not. It's not at all. The Nasdaq has already taken out its critical support as of Friday. We're talking on last call with TP last week. And I was saying, hey, the price action did this to me. I couldn't help it. I had to get a little more short on Friday. And I don't like putting positions on Friday, as you and I have said many a time. But when the price action is telling you it's going to dump, what are you going to do? Not sell? So when we look at this, we say, the VIX is not doing a lot. Yeah, okay, and what does that mean? Doesn't mean a whole lot here. So I think you have to be careful. I think just because people may not necessarily be out here hedging, and so the VIX itself is a little bit lower than you might expect given what the price action is doing, you still have to remember that the price action is doing what it's doing. And the VIX is relatively contained because the price action is not doing elevator down. It's doing death by 1,000 cuts.
Oh, that's exactly right. It's death by 1,000 cuts. I mean, you could see it here in the S&P recent days. It's been like 2 steps down, 1 step up, 2 steps down, 1 step up.
It's not an environment where you're going to expect the VIX to bounce, but that doesn't mean you should be long.
it's certainly painful. I mean, I'm going to watch this close like a hawk here today because, buy threshold for staying long, yes, has been playing bounces off of the 50-day. And we got that. And then coming into the week, I'm like, oh, Ilya, we're back up 7.514, here this morning. Not too shabby. All right. Stable. Not doing what I wanted to do, but stable still. All right. No, maybe not so much. Particularly
Take a look at the Nasdaq on a 4-hour, because I think this has been really clean. You see that retest on Friday of the kind of minor shelf it broke? So you can see where the break is actually on the 4-hour. You can go, oh, okay. So we came back, we retested the prior support as resistance, and going into Friday, we took out that big low, that big level under 28,005. We already cleared it Friday. And so that was telling you, this is how you're going to close out the week. You don't want to see what's going to happen on the weekend. You don't want to know what the oil situation might be. You don't want to know what the president might say. He's over here threatening civilizational erasure. And you don't want to know? Oh, you must have conviction.
We have some fun headlines to get through to oil. Trump with some legendary comments here. Yeah. We'll get there soon.
My children read the history books on this one day, yours and mine, we're going to have some splaining to do.
I suppose, particularly as he characterizes his relationship with Turkey and Israel here, which is quite funny. Anyway, Ilya, I suppose today is a good day for like a gut check. On a lot of things, particularly if you were leaning long like I was. So we've both been working off this perspective. As long as the market stay choppy and range bound, the short put spreads, the short call spreads, they'll both work. It's starting to feel like the short put spreads are going to be in a little bit more trouble than the short call spread side of things. I'm just looking at the candles here in some of these charts. We can get rid of this line for the Russell, but we do try to get a bounce here off of the 50. This candlestick today. That's an ugly upper wick, putting us a rejection above the 1 month and falling back below the 1 week. You're going to see the same thing for your Nasdaq here, where you try to rally through your 1 week today, and you can't get to it. And it looks like we're going to get a cross of our 1 month below our 50-day momentarily. And then the S&P 500, same thing, right? Yeah. We were trying to rally. We got above the 1 month. And now, instead of being above yesterday's high, we could be closing below yesterday's low, which is an engulfing candle, right? We're completely overtaking everything from the Friday session. So I don't know how one looks at this. I mean, momentum-wise, there's no bullish momentum here. Stochastics are now oversold. There's no bullish momentum in this market, as it were. So you can look at candlesticks and say maybe this was a bottom coming together here. There was no follow-through, failed, immediately cracked that low. Now engulfing against the 1 month below the 50. It's ugly.
It's ugly. It's ugly. And
can't justify anything good.
And I mean, here's the thing. Why is it ugly? I think the example of Alphabet, which was the first hyperscaler to show us numbers this go around, I think that was really telling. And I wrote about it for the Tasty Live blog last week. You and I did a video on it. I think this really comes down to the idea that the AI build-out is starting to turn on the market, where the market loved it and loves it no more, and for very good reason.
Well, remember early on throughout the 2010s, we heard from Jeffrey Epstein friends like Larry Summers about how we were going through secular stagnation, and there was no
Larry
CapEx.
is he's just not gonna shake that preamble with you, is he?
Not for me. I've been on that with him for like 15 years at this point. Before it was popular.
Larry thought he was going to get to be Fed chair. I'm sorry, Larry.
I like to think my tweets along the way have helped. But
I hope so.
Granted, given the help that they provided to the Ayatollah, maybe my tweets are a kiss of death. Ilya, point being here is that you have the CapEx expenditures, which were like a blessing for the market. The post-global financial crisis, 2010s, it's like, okay, when is the money going to be spent? And every company out there was, a little bit more protective of what they were doing. And they were a little bit more protective of what they were doing because they were like, well, the economy's in such crap still, and we're still dealing with the financial crisis. We can't really risk expansion. and then get caught in another downturn when that second dip of the recession ultimately comes, which was such a provocative narrative back in the 2010s. We were like, I remember 10, 11, 12, probably going into 13 still because of the Eurozone debt crisis, the debt downgrades. We were waiting for that second shoe to drop, the double dip recession. So companies were.
I got 09 wrong because I was waiting for it, and thank heavens, as last year, I did not have my eggs in one basket, and I was trading a diversity of assets, so I was able to have an okay year, despite the fact that I did not see stocks rebounding like they did in 09. That was one of the biggest lessons, frankly, that I've ever learned. I got 08. To this day, 08, with all the chaos, was my best year in markets. Also my first year. And so, stupid people that don't know what they're doing leverage things, but then sometimes they get them right. And then they end up with a 300% year. But in 09, I did not think that was going to happen. And boy, did the stock market rebound aggressively in the midst of one of the most severe recessions that you could have imagined, and the worst one in ages. Nothing like what happened in 2000 or even sort of adjacent. I mean, this was like threats of Great Depression type chaos. And
we had Occupy Wall Street.
we had Occupy Wall Street. Europe was about to come apart. So the whole thing was just maximum chaos. And stocks said, yeah, but incrementally speaking, have we reached cheap enough to where the chaos is priced in? And so you could see all kinds of different things here. But if you look at the current situation, there's just the market is telling you what you need to know in the price action. And that's really the lesson in both directions.
I don't have something to do here per se in ES. However, MES probably gets closed out here today. However, Ilya, if this market is on a downward glide path here, Okay, so put butterfly here. It's kind of like pin the tail on the donkey. Let's just get this going there. Okay. You could see how narrow that cone of profit is, right? So the market would have to, and we could pay a little bit more for it, but your maximal profit here in this position would be if the SPX, cash settled SPX, falls to the expected move tomorrow, which is around 73.40, 73.35. Just placing that single one-day bet is going to cost you $40 with a max profit potential 970. If at any point in time it falls at 73.40, you close out the trade immediately. You could give yourself a little bit of a wider berth and change your risk profile here. But if, I'm not looking at catalysts on the upside the next I thought today we were on the morning show. They're like, what kind of trade would you? I'm like, well, I'm looking at like an SPX short iron condor. I really don't see the market moving here. I mean, does it really want to go up more? What else is going to push it up? I didn't see the market going up anymore from this morning. Jermal and Mike took on the super bear, short the call spread, long the put spread, and obviously did handsomely well here. So tomorrow, catalysts, a few earnings reports, but not necessarily.
And the pregame for the Fed as well.
The pregame for the Fed. Right. So keeping all of that in mind, I'm actually going to go out a little bit more, 73.30, 73. We'll go 15 points wide in this, risking $60, make 14 something in that neighborhood here.
Well, I mean, and the pregame for the Fed is important. Let's just be very clear that there's going to be conversation out there saying, blah, 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 the Fed doesn't matter. There's a 40% chance almost that we're going to get a rate hike. Now, I don't think we're going to get
We're not getting a rate hike on Wednesday.
And that's my opinion. It's your opinion. Market is pricing the probability at 40%. Almost, like 38.
Has the Fed ever hiked rates when the Fed funds futures have implied less than a 50% chance?
I couldn't tell you because I don't have all of that in my head right now, going all the way back to the history of the Fed, back to Jekyll Island. But I can tell you that if they're pricing a 40% chance and it's not going to happen, a bunch of people are going to end up wrong. And they're going to have to move things around.
Yeah. That's the fun thing when the market's 50-50. Half the market's going to have to change their mind.
That's the thing. So
when it's like 95-5, you're like, okay, so 5% of people are wrong. Like that's going to roll over and no one's going to care.
Yeah. Yeah.
Well, I mean, I think we're at the decision point here for a lot of things. Russell, the 28.50, 28.75. I'm still above the short strike. We're still above the 50. It's working for now. Who's to say what's actually going to happen? So I don't know if there's any pressure there to break yet. This other one, 29.25, 2900, Ilya. I don't care what. Unless we get a close back in the green today for the Russell, I just think I'm going to take this off. I just don't like sitting. I know it's like 1% away from the short strike. I'm just not liking the setup right now. I know there's 35 a little bit more, but if I'm taking off the one that's earlier, the 25, one that's the strikes are a little bit closer, I want nothing to do with it. It's sitting below the 50, which is still the plan. I'm not upset with the entry, but the chart's looking like it's starting to keel over, and I don't like being long when the market looks like it's keeling over.
I mean, I don't have anything on in the Russell. It's still kind of grinding at former resistance turn support at that former shelf. I'm not prepared to be a seller here just yet. I am so short the Nasdaq and the S&P, and mainly the Nasdaq, that frankly I've got the exposure that I need, and I'm going to need to really get convinced to add any more, because otherwise it's going to start looking like I'm on tilt.
You can see why you say that shelf there. The June 17th pivot low near 29.32. The 50-day is 29.33. The low that we had on Thursday last week was 29.32. I'm going to make a guess and say if 29.30 breaks, there is a little bit more slippage to come here. And so that's what makes the Russell so fascinating for today, Ilya, here. It is holding up better in part because of the shakeout in the market. Semiconductors are the worst performing sector ETF. Tech is right there. A slew of energy names, of course, but then telecom. The rate sensitive stuff, we're going to go over to bonds and rate hike odds shortly. But before we do, what's performing well here? It's certainly a more defensive flavor to the market today. Staples, for example, consumer durables, as a TP might say, that's on the upside. You also have this odd bit where XRT and XLY are trading a little bit firmer. But then you go to XLV and healthcare is popping up, and actually that's XLF. I wouldn't say XLV. XLV here, Ilya, not for nothing. This would be the second highest close for the sector ETF in history. As a play, we've been holding on a little bit of a shot here at 170, 175. But it does feel like some of the individual equity exposure that I've been talking, Procter & Gamble, Kimberly-Clark, KMB, Coca-Cola, some of the more defensive stuff, right? That actually is panning out and working today. So for the little bit of pain that I'm having in like the MES position and the MNQ position, what I have going in the staple stuff is more or less balancing it out. So I may just be taking off some stuff that's not working well, and I'm just going to keep going with the stuff that is here. So I don't know if I'm going to have to redraw my entire approach right now. But I'm taking note, the fact that the defensive things, they're the ones that have turned the corner the past few sessions, even as oil prices have just completely tanked here today, down 7.3%.
I took oil off today, not because I don't believe that it could go back up, because we could flip this whole thing, this whole conversation over again 8, 9, 10, however many more times.
I'm sure we will be several times before midterm elections.
Yeah. And so, I don't know, but I'd been long since July 7th. So it was a great run, and I'm just going to take my money. Thank you very much. And wait to get back in.
I think we can make our way over. You know what? Let's go over to oil first before we hop on over into the world of bonds, because it feels like these two things are
intimately related.
Yeah, well, we're going to have to revisit that because something changed today, particularly with the SR3 contract. So, Ilya, oil's down 7.3%. We are finding nice follow through there. I think yesterday, to your credit, something that you've been talking about recently is how the war trade as we knew it from late February onward, something broke in that. When it exactly broke, you don't know, but the fact that gold stopped going down was a really big tell. More evidence to that point today. Oil's down 7%. Gold is not surging. The dollar is not tanking. Stocks are not going to the moon. And there's a little bit of weirdness in the rates channel as well. I'm going to point to the SR3Z6 contract for all this relief in oil here. And last week I was here saying, Ilya, everything happening with rate hike odds is an oil story, at least in the short term. In the system, which is part of the reason why I'm leaning short ZB. But now we have a day here today where oil's down 7% and the SR3Z6, the December contract, is given up whatever upside it has. So hike odds, cut odds have not 7% falling apart.
This was the soapbox that I climbed on top of last week. The top in this chart is the moment that stocks and bonds diverge after the initial war trade washes out of the market. And you and I have a video up talking about it and showing it. I've got a blog post up on tastylive.com. Go check that out. That explains it with charts, that marks these turning points on the charts pointedly. So you can check that out. We're going to put out a little carousel on LinkedIn if you follow us there over the course today that summarizes what's going on here. So that's coming. This has been kind of my hobby horse here, basically since last week, because increasing oil is not the inflation concern.
No,
AI
that's
is.
This is today's action is further evidence to that point.
Yeah,
very plainly,
AI is the
very
inflation concern. Everybody thought AI was going to be deflationary. Maybe it will be one day when it's actually doing something. But the building of it is a giant amount of money getting poured on top of the economy.
Yeah, go ahead.
I think Master Control was trying to tell us something.
Tell us something.
Here. Go ahead, Master Control. What do you say? Maybe nothing.
Maybe nothing. Are we going to keep talking? We'll keep talking. Ilya, oil, 82.77. So you said you got out. Looking at the stuff, it's 21 days to expiration and kind of thinking about this close. 62.63. We're at 21. We're basically at max profit there. See you later.
Yeah, I thought, you know what? Why be greedy here?
70.70.
Let's just take the money.
70.71. It was worth a little bit more last night. The profit's been cut in half a touch. I'm going to be greedy and hold on to that. The 98.97 put spread, believe it or not, still not making a dime here. So maybe these things are working against each other, quite frankly, at this point. I think oil's going to have a chance to continue lower. So you know what? Take the money and run here on the 70.71 as well. So we got those orders working. Thinking out at 52 days to expiration. Some of the stuff 66.67. Yeah, still could work, particularly in the context of the short iron condor trade here. I mean, that's still working. We're kind of sitting right at the midpoint. I'm going to hold that too. I am going to make a small adjustment here. I'm going to take off one of these legs of the 66.67. And I only point that out because oil, when we saw this big pullback in June, Ilya, what happened? It fell for 4 straight days and then kept going. So maybe we get a little bit more of a pullback here. We can recenter strikes. We can re-engage if the price is right at this juncture. But for now, some things to do.
Yeah, I mean, it's not like this market doesn't have things to do. Take a look and put a horizontal line on this chart. Somewhere at the prior shelf, a little bit higher even, right there. Now, this would be an interesting spot to stop, and maybe we're going to stop here. And if we do, and if I see on a 4-hour chart, we got a little sideways squiggle and then a turn with a higher high, let's go. I'm back. I'm right back. I'm right back in, because this nonsense is going to keep going back and forth for who knows how long, as you were saying. I'm completely on board with that idea. This isn't ending soon. This whole we're going to be there real quick back and forth, that's for the birds. You can do that in Venezuela, maybe, but you're not doing that in the Middle East, and you're not doing that with Iran. What we've learned clearly is that when we go and do a quick thing in the Middle East, we turn around a decade later and go, wait, are we still doing this thing? What have we actually done?
Oh, gosh, another Middle East war. It's been like...
Didn't the president say we weren't going to do this?
Happens all the time in my life. First Gulf War, Iraq, Afghanistan, now this. Yeah.
I suppose okay, fair enough. I suppose you could say Bush Sr. did a relatively quick job of the first Gulf War. Fair enough. But then we had to go and do it again.
It's so interesting, this conversation about oil and its impact on rates, because I was one of the guys I like to follow on Twitter goes by full carry, Ed Bradford. He's a bond trader.
Yeah.
He pointed out earlier today that with the 1-year inflation swap printing below 2%, the Fed should pass on hiking this week. And that's, a good point. The 1-year inflation swap forward has fallen from about 3.5% back in May to less than 2% now, Ilya.
Well, you'll know where I'm going to go with that.
Well, so it's this interesting dynamic. The market's worried about inflation from AI, but it's also pricing in a broader growth slowdown, and it doesn't care about oil, but it cares about the knock-on effects. I got to say, the macro here I don't think the macro here is a straight shot, which breeds the underlying volatility, more volatility.
Unless what the market has decided is that AI is the real inflation threat and the damage is already done. And so the next thing to do, and you can look at the GDP nowcast and see the damage being done. And because it's right there in front of you. And
I love this. Hold on a second. The path forward is 1-year inflation swaps are down, but tips are also tanking because the market's saying you don't need to worry about inflation. The Fed's about to crush it through a series of aggressive hikes, which, by the way, we need. And until we get them, we're going to keep pushing real rates higher.
I think it's more like we got this inflationary thing that's been getting beckoned that you have real rates responding to. Let's not forget, they've been responding to it. They're already at the highest since April of last year when we had a bond market panic around the tariff rollout. So it's not like real rates are, we're going to see hikes. They've been calling for these hikes for quite some time now, for months. And so maybe we've gotten to a place where actually we're not going to need the hikes because the tightening is already done. It's hurt the economy already. And actually the next step is going to be cut, just not this year. I think one Kevin Warsh has very cannily given himself all kinds of room from all corners by saying, I got these task forces. There's 5 of them. We don't give forward guidance anymore. We're going to wait to say anything of substance until the task forces tell us how to say it. And they'll be done by year end. So don't expect anything until 2027 is what I read there. And by that time, these real rates, they might well have crushed the economy.
They'll have done their job. They'll have done the work.
They'll have done the work.
So speaking of, this, you can see we had 2 auctions today as we make our way to the bond market. And we may have been given a gift here if you're a bear like I am. I know that you have a different view than I do. But let's keep an eye on the line in the sand real quick. 2-year, 5-year note auctions were today. 2-year note auction, good. Stops through by half a basis point. Bid to cover ratio 2.66. 5-year auction, not so good. Tails by 0.9 basis points. Bid to cover ratio 2.28. So there's this fascinating little read that we were talking about some of the auctions last week, how at the long end of the curve, bid to cover ratios were down. Those auctions were tailing, right? Not good signs if you're reading the tea leaves of an auction. This week, the 2s are good. The 5s, going out further in time, those are the crummy ones. So you could see how investors are also still of the mindset. It's like, you're telling me that I have to hold fixed income for a sustained period of time at these rates? No, thank you. I need more compensation. This isn't worth it for me yet. 2
Well, that's
years
the
are
whole
different.
thing.
Yeah,
that's the whole thing. I mean, what's the market telling you? You're going to dump $750 billion on a sector that already grew 10.1% annualized in the first quarter?
Yeah.
Yeah, we're going to need inflation compensation because this is going to be astronomical amounts of money spinning at a ridiculous rate. If you take a look at the velocity of money, this deep cuts here, but if you look at M1 velocity, surging, and has been for a while.
Stupid AI, Google. Your Gemini is just so terrible. M1 velocity. The speed of Apple's M1 silicon chip is 3.2 gigahertz.
No. Tell it M2 velocity. Close enough.
It used to just go right to Fred. Yeah, no, it certainly bounced up a little bit here. Definitely from where we were COVID. We haven't
That's
seen
the thing. Since COVID, the velocity of money has aggressively increased,
but it's still so low compared to where I know there's been some definition changes over time, which may be changing. But the velocity of money back pre-financial crisis was like 5.5, 6.
Well, sure, but that's financial crisis.
Yeah. Well, yeah.
It fell. Okay. It fell aggressively. It's already back maybe 50% of its fall.
All right, so one thing that we want to point to here, the SR3 contract, as we noted earlier, it's unchanged on the day. Oil prices coming off, and yet rate hike odds are not being materially moved because every time we get one of these shocks, it's like the bullwhip effect. You get another bubble that goes into the system, and it's going to have to be digested. And when we first started having this conversation the first week of March, Ilya, we had 9 months to go. We're now less than 5 months to Christmas, less than 5 months to the next Fed meeting, the December Fed meetings. This is no longer, okay, well, that's at the end of the year. That's 9 months away. We have plenty of time. Every time we get one of these little supply disruptions, it kind of then just calcifies and makes it that much more difficult for the market not to believe those hikes are going to have to inevitably arrive at some point in the near future. So that, to me, has me interested in a place with ZB and ZT and ZN, really ZN, because we jumped today. We've been pinned here with a doji up at that former low. We have ZB with very similar price action, a little bit more of a bullish candlestick, but we jumped today, and we've been pinned below the swing low here. So what to do? Well, I'm still sitting in that long put spread, which with today's action went from being a winner to actually nothing, which affords me the opportunity, Ilya.
Yep.
Do I really, really, really want to have something at 25 days to expiration right now? No. So let's just see if we can clear this and start fresh. Maybe 60 days is the better place to go to affect this view. But this seems to be the line in the sand, right? 110.5 and over. And I'm just going to wait here because we're 7 ticks away. If we can get through 110, if oil keeps falling, we can get through 110, you know what? It's not going to be the time. ZB probably gets a little bit more of a bounce. Maybe it goes up towards 111.5 again, just like we saw in early July. Same thing with notes, right? If we can clear out 108.5, all right, maybe we put in a short-term bottom, better chance to resell at a higher level moving forward. But
maybe.
Line in the sand where we are. Being directional here for me is difficult because this thing could break either way, and I just want to make sure that I'm on the right side of it. So watching, waiting, using the opportunity with ZB as a reset because 25 days, this thing could bounce up a little bit more, particularly if oil comes off as we saw in June, right? Another 2 or 3 days of oil weakness, ZB pops up another point.
Yeah.
Then all of a sudden, I'm just gamma starts to go against me, wrong side of the decay curve, yada yada yada.
Sure. I mean, I'm watching. I'm not opposed to the idea that what we're looking at in both ZN and ZB is an attempt to bottom, because if we do have all of this demand destruction, and if the rate hike odds do go away, then the bonds are going to rally. And gold has been, as you know, pointedly not selling off in this real rates melt up, which is perhaps telling us something. And so,
which is unusual, because if you look at longer term, so just to take a step back, real rates, you have your treasury rate, for lack of a better, just as a stand-in, and you take inflation out of it, right?
Yeah.
So that could be a real rate. You have your wages, you subtract inflation, you have your real wage. So if your wages go up 10%, but inflation's 5%, then you actually really only got like a 5% raise. Okay. So to that point, when we see these market measures of real interest rates go up, what the market effectively is saying is that it is implying that interest rates, nominal interest rates, have to rise if inflation expectations are staying static or going down. And historically speaking, when you plot, and I've done this before, but if you were to plot the weekly returns in gold prices versus the weekly change in the 10-year real yield or the 2-year real yield or the 5-year real yield, you'll see that there has historically been, over decades, a negative correlation, which makes sense. As real yields go up, gold, which is not a coupon bearing asset, there's no cash flows, there's no dividends, right? It's more expensive to hold. So why are you holding it? So the fact that you have gold stabilizing over the past month now, despite real rates, which in theory make the cost of holding gold that much more expensive, and gold not going down, okay, I've wound myself up. Ilya, that's the point you're getting to, why this real rates gold connection matters, because gold on paper should probably be maybe $300 or $400 lower if it was following the path that it had been following with real rates April, May, June.
well, and this is the whole thing, is that it's not like gold isn't responsive. It is responsive. It just hasn't been responsive since late June, early July. That top in gold back to late April, that lines up. That's where you get the divergence in stocks and bonds. That's where all of that hyperscaler activity gets priced in as inflation. You can see it already there. And gold sells off, as it is meant to do when real rates go up. It is pointedly ignoring the latest run of it now, basically for the past month. And so you go, what is gold thinking? Why is it thinking these things? And you go, well, maybe gold has figured out that we're not going to get these hikes, that actually we're going to get cuts, just not this year, maybe.
Ilya, gold and silver may be at interesting turning points. I'm keeping this from a pure technical perspective on silver. 15th of May, Ides of May, we closed below our 1-month moving average. And since then, I'm looking at the yellow line here on the screen, folks, and I'm not seeing any daily bars that get us through there. Maybe recently we're trying to. We couldn't quite get there. 60.29.8 close. That was a 1 month of 60.57.4. So no, not breached. Today we had to bounce back into there. We couldn't do it. We're also only down by 0.25%. So, Ilya, I have my line here. I was looking for a breakout above 58 last week. I couldn't get filled. I didn't want to chase this. This thing hasn't made any further advance right now, so I'm not doing anything just yet. But this you may have gotten in earlier than I did, but this is really starting to feel like maybe a corner wants to be turned here. And I'm going to give you that chart that you know I love. Little left shoulder head, right shoulder here on the bottom of that screen. And it is at a bottom here, Ilya, which I know is your preferred place for these kind of things.
Yes.
So just silver, yes. Silver right now, gold right now. We got to keep an eye on them because they are proving way more resilient in a fundamental environment that should be otherwise quite damning for them. So I got my long exposure. I know you do too.
Yeah.
Silver is next on deck for me. Copper back up, by the way, today, 0.5% higher here. Didn't get filled last week. BTC beach ball underwater. I mean,
maybe
still.
Although if we have a growth risk, this one may not work like the others.
Well,
So,
the
gotta
PMIs
be
came
careful
out
here.
last week. The PMIs came out last week, and they were
solid.
surprisingly good.
They were solid. And on the manufacturing side, they were still giving you all of the AI build out figure. And by the way, it's not like these are data centers getting built. These are people getting ready for the data centers to be built and stockpiling whatever inputs they might need. And so that's probably going to continue.
30, 50, 30, 50. Standard, expected move is down to about 5.8, 5.9. Dollar wide on a strike at 59 days to expiration is giving you just under 19 cents of credit. We're looking for 33 there. That's not good enough. Maybe something in at 30 days. 6. Go 10 wide again. 6.59. 17 cents of credit. This is part of the problem here right now, Ilya. I'm looking for the opportunities to short vol, to get long deltas in that regard.
Yeah.
I'm just not finding it. Do I want to pay 19 cents of credit for, a call spread that goes up to the expected move? Probably not.
It just doesn't seem like this is where you would put capital most effectively to work here. Like, it's not like these are trades that are terrible. I mean, the risk reward on them is okay. But is this how you want to tie up capital? Is the thought process that I have. And for me, the answer is no.
No, and even in silver futures, right? Again, standard, just 28 IVR, not great. Raw volatility is 48. Okay, something interesting there. 53, 54 short put spread, wrapped around the expected move, risking 4 to make 1, but only 22 cents of credit. Still not good enough. So we got to be creative with how we play these. I don't know that there's much to do right now except for
I just don't know that copper is the place I want to do anything in. I will say there, if we are right, and what we're looking at is a rethink of this entire Fed rate hike situation. And frankly, it's kind of funny, this rate hike situation, because you and I have talked about this. What in the world is the Fed going to do about an oil price shock? Not a thing. So how do we reconcile that the market, in its infinite wisdom, is pricing in tightening? Because the market knows the Fed's not going to tighten or could tighten or would need to tighten for any oil reasons. It's these other reasons. And core inflation has, in fact, been rising since January, before the war.
Mm-hmm.
So you look at this and you go, okay, so the market has basically done the tightening for the Fed. That's why the pricing looks the way it does. It's not necessarily why that the market thinks there's going to be a hike. It's that the market has moved up rates. And the reason it's moved up rates is because it knows it wants inflation compensation, and the real rates already show it. So if what we're looking at then is this, then maybe what we have in all of these growth-related types of things is actually a turn that's coming, like copper, for example. But it also means that the US dollar might be at a very juicy place to sell.
Oh, you and I
in
will not
particular
agree on that.
against the Aussie, where the setup is beautiful.
Before we get there real quick, some question on how we've been managing the positions in gold here. Liz put me onto this, maybe we don't break through 39.55. This is GCZ6. So when I say 39.55, I'm going over to GCU6 quickly. 39.55 here, Ilya. And actually, I'm not even going into I think I'm going into Q6, but it was Q6 as I meant to go to. But there we have it, that low. 39.55 from June 30th. That was the reference low that we were working around previously. So over in the Z6 contract, that's now going to be a low of 40.15.60. So slightly different setup here when you go to your gold futures, right? We're a little bit more above 4,000. But the way that we were approaching this was that we wouldn't break that yearly low. where did we go here? So on the trade table here, the put butterfly, okay, the way that this makes money is effectively, it's not going to make maximal profit up here, Ilya, but the way that this makes money is if we basically just stay up at these levels. Maybe it's not going to keep rallying, but as long as it continues to decay and the market stabilizes here over the next few weeks, this will eventually start to roll into potential profit. I just need to make sure that did I mark that off the correct? That's why it's not showing the correct thing here. Just 2. Now we can go back to the curve. There we go. Okay. So the point is that there's a way to make money in this. Gold doesn't need a rally for right now. It just needs not fall. It does feel like it may be turning a corner. Ilya, if it does turn the corner, I'm going to be right there with you.
Let's go.
Aggressive again. I'll be very aggressive again. It's been a very hard year being a gold and silver trader the way that I like to be. But you have been pining for a conversation on the dollar here. The US dollar is, again, one of these assets today, just quickly running it down through the future space. Euro's only up by 0.01. The end's up 0.07. Canadian dollar's down 18 basis points. Pound 26. Aussie up by 0.08 here. Not for nothing, the high in the DXY Friday was 101.53. We're at 101.50 right now. So we may totally subsume Friday's candle with just a little bit more of a push.
Yeah.
You think this is creating a good selling opportunity, which hurts me because as your friend, you know that I'm long the dollar in a myriad of places.
I'm also, by the way, completely, I am speaking as a dollar bull going back, I don't know, 20 years. So I'm bullish on the dollar generally, but we're trading here.
101.51. The euro here, the largest component of our dollar index, of course, right? 57.6% of DXY. Ilya, this to me looks like a bear flag down here. Maybe the spot currency market is a better way to look at this because we see that major swing low that we have back in July, August 25, the pin low that we have here in March 26. I'm going to go down to that 4-hour time frame here. This little bit of a rally that we just had off the low. We tried climbing through that at the open. We couldn't get through 114.20.
We couldn't stick it, no.
You notice that?
I think the Aussie looks much better.
Well, maybe Aussie, because it's a high commodity price environment, maybe the Aussie outperforms even the euro. But this now, uptrend, break, top left, bottom right. Now this looks like a bear flag. So the dollar for me, we took off some positions here today. Took off one of the short call spreads in 60 at 11 days to expiration, keeping on one more at 11, one more at 16, at 39, because the short strikes sit above that zone. As long as we hold below 115, I'm feeling pretty good. And I just like the charts right now, given how they're kind of shaping up into this flaggy, bear flag kind of situation right now.
I mean, if it breaks that low, I'm right there with you. I am basically long against that low. And it's sitting right there. So let's see. I will turn this car around this instant and get right back on the long side.
The pound there, I know you're an Aussie guy, but can I give you the pound there too then if you're looking for some long dollar exposure? You mentioned I love the way that you phrased this recently, the shelf.
Yeah.
Okay, here's a shelf in the pound dollar recently up near 133.5.
There's
today.
another one under.
You see this? We moved above Friday's high. We're going to close below Friday's low. Where did we fail? We couldn't get above the 1 week, the 1 month, the 50-day. All were challenged today. So before you go into the Aussie here, I want to go to 39 days to expiration. Right now, we'll call it 133.75.
Yeah.
134, 134.5, 135. Ilya, that's pretty close. 134, 135,
the pound looks soggy today.
I'm going to send this here, okay? 134, 135 short call spread here. 60% probability of profit, risking 450 to make 175, but it's 28 pips of credit versus 100 wide. So it's not quite that third of the strike. It's 28%, not 33, but it's close enough. And when it's close enough with a technical setup that I like, you got to then take the swing, even if it's not going to pay you perfectly well.
Right.
So adding a little bit more long dollar here. You have an Aussie idea, though, which...
Yeah, my line in the sand on the pound hasn't been crossed yet. I would say it's somewhere around like 132.60, 132.70.
Sure.
Which is close. It's close. I see positive momentum divergence as we test these lows. So I'm going to hang on to it for like a few pips more. There's maybe 30, 40 more pips of confirmation that I need. It's not a lot. So if it wants to sell off, then let's go. I'll flip it right over. The Aussie has been stair-stepping higher. And this is the one I would say that's still very much in an uptrend, series of higher highs. Talk about shelves. It's holding its shelf. So this, I think, looks pretty interesting. It's holding up. I'm long. Let's see. I am long this thing from 69. Let's see. Where did
I'm looking for an options trade.
thing? 69.62. So about 20 pips lower than we are now. So let's see. But I'm looking at this and thinking, if you're going to get a rally in the bonds, if gold really is saying something, then the dollar is going to be a part of that story.
Okay. You know, there's something to work with here. Okay. The low that we have in this range recently is 69.56. Not so much at 11 here. 69.50, 69. 13 cents a credit. It's close. If you were to go out to 39 days, though, and do the 69.5, 69, you're getting 16 cents of credit on 50-cent wide. So if that was $1, Ilya, it'd be 32 cents. Risking 340 to make 160. Probability of profit 63%. Send it. Both can happen, right?
Sure.
Pound dollar can go down. Euro dollar can go down. Aussie can just chop here.
Yeah, pound Aussie. Look at pound Aussie the cross here, just for fun.
I don't think we've ever showed pound Aussie the cross on.
Oh, look at that
before.
Oh, look at that, sinking and breaking levels.
It's a good point. It's a nice little. It's a nice little.
Interesting.
It's a nice little thing you got going there, Ilya. It's a nice little thing. Even Euro Aussie. This too starting.
I might say all kinds of things about all kinds of markets, but I'm still a spot FX trader at heart.
Yeah, well, you might like Euro Aussie then. Look at that rejection of the 1 week today, failing up against the former lows from June. So yeah, I mean, you have a point. This is one of the good things about FX, right? Like when we say, "Oh, are you bullish the Aussie?" Well, let's take a look at it versus the euro, the pound.
Yeah, which Aussie?
But we can also get a full view of the Australian dollar.
Yes.
Right, and the Australian dollar here, it's not just Aussie dollar, but if Euro Aussie and Pound Aussie are both breaking trends and breaking lower, that could be Euro weakness, Pound weakness. It could be Aussie strength. That means that we could get long Aussie dollar. Maybe better getting, you know what? Aussie dollar looks like it's holding up. Euro dollar looks like it's breaking down. I'm just going to go to Euro dollar. So there's so many different ways to skin this cat. Yeah. I know that these aren't futures products, but you can access them on the trade page here. You can just type the ticker into the top or head over to the Tasty FX
and you can use the
platform.
futures. I mean, you could have a you could have a little M6A, M6E little spread here. Doesn't have to be big, very manageable. This is exposure you could have on.
And
it's not complicated.
And you could trade it like it was spot FX by doing the pair trade there. So
that's
short
right.
6 M6P, long M6A.
Yeah.
At the same exact expiration cycle, just along the micro futures, and then you're effectively treating it like a pair trade then, because now you've isolated the dollar component out of it, right?
Yeah. You've essentially just hedged the dollar out of it.
Right. So Ilya, I think we can leave it there for now. And there goes a crude position getting taken off the books, which is good news because that's what we wanted to happen here. Crude's down 7.75%. We may get a chance at a reset here. Stocks are getting a very minor bounce, 74.34 here in the S&P 500, Ilya. We went right down to last week's lows and then we kind of stabilized. We washed out the market reaction here from the gap open.
And the Nasdaq keeps on sinking. Let's go, baby.
That keeps on sinking.
Keep those losses coming.
Ilya,
I still
we
got
have
plenty of time in my verticals. Plenty of time.
We have more great programming coming up for folks here on Tasty Live just around the corner. We're going to take a brief break for 2 or 3 minutes. But after those commercials, we're going to get Dr. Jim in here from Theory to Practice for the next 45. You'll get Tim Knight from 2:15 to 2:30 Central Time. And then we'll be back for last call and overtime here today. Ilya, always good to see you. Folks, Dr. Jim's coming up next. Ask him about his favorite Celsius flavor. He's a real fan. See you on the other side.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
It's time to trade smart, post PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Jim Schultz, and this is from Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Monday edition of what it is that we are trying to do. I'm so glad that you guys are here because if it wasn't for you guys, we would not be able to do what we do, and I would not be able to do what I do. So thank you guys so very much. If you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with our brethren who are also watching the program. Man, you can celebrate today if you are a bear. You can commiserate if you are a bull, but it will be a good time had by some. And don't forget, hop into the chat. Whatever questions, whatever comments, whatever stories, whatever jokes you've got, put them in the chat. I'll try to get to as many as I can right around the halfway mark of the show. But I want to know what's going on in your life. And the algo also wants to know what's going on in your life so it can learn about us to destroy us all in the next 36 to 48 months. So Ben, bring us into the market. Man, let's take a quick little look. EME S&P is down 15, 16 on the day. Okay, you got the risk-free instrument, also known as the Nasdaq futures, extraordinarily high risk, down 230 on the day. You got the boomers up $1.50. You got the Russell 3,000, a few points off of 3,000, up 9, up to 29.50. You got bonds up 17. You got notes up a little bit. You got oil down 670. Man, that's crazy. Was it not up a bunch earlier? Man, how about that? Markets moving, things change. It's almost like nobody knows. It's almost like nobody has a freaking clue. UB40 up a little bit. You got the shifties out there. I wouldn't call that celebration worthy, but they may dance a little jig anyway. Gold up 8, got the Hunt Brothers. Where are my Hunt Brothers at? Locking down those silver pits, man. Down 25 cents. Okay, so silver at 58 and some change. Got the British pound is down. You got the euro is unchanged. You got volatility futures up 8 cents. And then you got the VIX, the old VIX, up 80 cents on the day, up to 1937. And so, man, we are getting closer and closer back to that 20 level. And so there's your market commentary for you. Is it going to make you a better trader? No. Are you better off for having gone through it? Not that either, but at least it's over and it's all done with. So let's get into the portfolio and let's take a look at where the wind is blowing us. So if you saw inside the trade this morning, I was a little bit off my game. Lots happened. Personal fast market this morning. So lots of things going on for me. But I did QQQ, I did MNQ. I forgot to pull the chat up. So I was not able to see what you guys were doing. I did kind of scan it afterwards though, and I saw some of the core position filing in there in the wee hours of the morning. And by wee hours of the morning, it was 10 o'clock Eastern. And so MNQ and QQQ, these were the two trades that we did this morning. So just in case you are wondering, hey, where did this QQQ position come from? This is where it came from. What about the MNQ position? This guy right here, this was another trade. Now, you know, given the fact that I'm already long the Nasdaq with this short put right here, this old crusty guy that's right there, I'm already long S&P 500 with this guy right here. You know, taking those things into account, I don't know that adding and layering in more QQQ risk or MNQ risk was necessarily the smartest move. But thinking about the movement in the Nasdaq this morning, I mean, we were up 400 last night. You know, we won the U.S.-Iran war for the 23rd time, and then we lost it again this morning. And so it's like, all right, well, we're back to square one. Maybe we can win it by the afternoon. There's not usually that quick of a turnaround. Like usually you need 36 to 48 hours. So I was like, it's not impossible. Like nothing is impossible. So I thought, let's play this thing to the upside. Let's go ahead and sell some puts in MNQ, kind of talking about buying power. Let's sell some put spreads in QQQ, kind of talking about defined risk, you know, spreads and such. And so that is what we did for the morning. So those were the trades from inside the trade. And that, of course, was in the morning session. So that's where those guys came from. In case you missed the morning show and you're wondering where those guys came from, you know, I really want there to be as few broken links in the chain as I can possibly muster. And so that is why I want to spend a couple of seconds going over that. So that's MNQ and QQQ. And then going on down the list a little bit more, man, take a look at our ZBB, our ZB put. Who gave me that ZB put? Hold on a second. I know I got this written down. I got my receipts. I'm not a super organized fella, in case you have missed that. Oh, I got it. It's Ash Finn. Ash Finn gave us that ZB put, so thank you there, Ash Finn. I appreciate you, my friend. And so, you know, we're about unched on the trade so far. It looked a little dicey there for a second, but everything looks pretty good right here with the rally in bonds today. So, you know, we've got a short put on. We're short the 109 strike. You know, what are we gonna do? You know, right now it's do nothing. Like right now we really lean into the DNS, you know, in a pretty big way. And so, you know, right now we sit tight, we use the buffer. It's obviously worked pretty well for us to this point. If I go to a chart of bonds, I don't think it has ever gotten, did it get through 109? I don't think it did. Yeah, look at that. The 109, it got to 109.8. So right there, if I just let me hold my cursor. It's perfect. Just so I can free up the hand and so we can kind of talk with our hands. 109.8 was the low point on bonds. Our strike is at 109. I rest my case. This is now exhibit quintuple Q. The DNS strategy is a great strategy. The DNS strategy should be in consideration for your default strategy. Now, you have to decide what the best pathway forward through the forest is for you. I can't tell you what to do. I would never even try to tell you what to do. But when I think about the power of short premium, and I think about the power of probabilities, and I think about the power of having this room to be wrong, I really like a situation where I'm not doing anything until the strike is hit. Like I'm not doing a single thing until that strike is hit. So we got a little close and it looked like, man, it's going to happen. It's going to this, that, the other thing. But it's like, I don't know, man. Like, you know, the stock market is one thing, but the bond market's what's really calling the shots. And I'm like, do we really think the administration is going to let bonds go down to 107, 108, 106, whatever? I mean, I don't think so. And so we'll have to wait and see. But yeah, so for right now, ZB is in a good spot. So we do nothing on ZB, and there you go. So now, moving on down the list, MES, this was our short put here, the other kind of part that I alluded to a second ago about, being long in the market and kind of MNQ and kind of double dipping and triple dipping to the upside. That's what we did this morning, and I talked about a couple of seconds ago, to repeat myself for maybe the fourth or fifth time now. But but for MES, we are in a situation that's kind of similar to ZB. Now, it may not feel like ZB, like this may not feel like the same thing as ZB, but it's very, very similar to ZB in a lot of ways. And so for our purposes here, I'm not going to do anything. Like for my purposes here, I'm not going to do a single thing. I'm going to sit tight and do absolutely nothing because I have room to be wrong. Because I have room to let the position meander. I have room to kind of let the position just breathe a little bit. I don't need to do anything. I don't need to go in and usurp the process. I don't need to upset the apple cart. I don't need whatever long-term colloquialism you want to apply to the situation. I don't have to do any of those things, right? We can just kind of sit tight and just let this guy work. And so, obviously, even the S&P is down 20. It's like, okay, 73.50 strike. You've only got 75 points left until that buffer is gone, until the apple cart is upset potentially. But right now, the apple cart, it's more or less indifferent, I would say. And so that's fine. As long as it remains indifferent and or potentially a bit happy, that would be good for us. But once it gets upset, that's where everything kind of goes to schmutz. And so MES, we sit tight and we do nothing. Just as like a life goal, I try to prevent as many things from going to schmutz as I possibly can. So MES and MNQ and ZB, there you go. CrowdStrike. Who gave me CrowdStrike? I did write it down, but it's on one of my stacks of paper that's not near me. And there are many, many, many stacks of paper around me. No, that's a Father's Day card. Hold on. I don't know who gave me CrowdStrike. Identify yourself in the chat there. And yeah, I mean, we're doing okay, but right now we're down a couple of BEUs, which is not the end of the world. But I mean, it is a Monday. I'm not even sure Bonefish is open on a Monday. I'm not even sure that they're open on Tuesday, Wednesday, or Thursday, actually, for that matter. And so, from a CrowdStrike standpoint, we sit tight. We do nothing. Boomers in the house. Shout out to my boomers that might be watching the show. Man, I appreciate you guys. I appreciate you guys so much. You guys built this country. Like, you guys 100% built this country. I mean, you guys been working 60, 70, 80 hours a week for centuries at this point. And so we all thank you, man. Us millennials, like, we thank you. Like, I am an elder millennial. I am like the eldest millennial. My birthday is May 19th, 1981. And so I think the cutoff for millennials is like anyone after like May 15th, 1981. I think I'm like one of the first groups into the millennial group, because I think like me, I think me and Errol are also millennial. Like, we're in the same group. And like Errol's like life experience is drastically different from mine. And so it's like, man, like whichever end of the spectrum you might be on, it's not too different from like using a lot of leverage or using a little bit of leverage. Shout out to the Trading Lab over there on the old Twitter account. It's very similar to like being on different ends of the spectrum from like you want a lot of risk aversion or maybe a little bit of risk aversion. It's kind of the same thing, because Errol and I don't know, man. I don't think we've had the same life experience just from a when we were born standpoint. And so, but I shout out to my boomers again. I appreciate y'all so very much. And I've got a long put diagonal to show my appreciation. I'm playing the boomers to the downside. And yeah, right now we're at about a scratch, up a tiny, tiny bit, but I'm not going to do anything. I'm not going to do anything right now. So I'm going to sit tight and I'm going to do nothing with my diamonds put spread. And then that is going to be that. And sorry, so that is my diamonds situation. Then EEM, I've got, what do I have on here again? Yeah, short strangle on in EEM. So 60, 71. We have EEM at 63. So obviously this trade is working out pretty well. And we have, we're short a strangle. We sold it for 206. Right now it's marking at $1.29. I mean, that's great. I mean, that's phenomenal for us. And so we do nothing. We sit tight. There's no reason to do anything. Right? There's absolutely unequivocally no reason to do anything here. And so we have not been tested on our strikes. I don't think, hang on a second. Have we ever been tested on the strikes? Let me go to Let me see. What are my strikes again? 60 and 71? Yeah. 60 is down here, right? 71 is up here. And we put the trade on. I won't even bring up the chains. I mean, it's a Monday. You know, it's kind of a slow Monday here in St. Peter. It's just storming. It's rainy. It's kind of gloomy. And so this isn't really like a chains Monday. This isn't really like a Rooster Monday. This is like a Sarah McLachlan Monday, right? So I'm not really in the mood to do a little change. This is more like an Alanis Morissette type of Monday. And so I think, I really hope that my electricity holds out because it is storming pretty bad outside right now. But we did the trade. It was somewhere around here, give or take. It doesn't matter. It was somewhere around there, right? I mean, you know, we've got lots of room up here. We've got lots of room down there. I mean, this is exactly what you want with a strangle. This is all very technical, by the way. In fact, this may even be a bit too advanced. If you're brand new, you may want to back up a couple of steps. And if I lost you, just shoot me an email and we'll bring you up to speed. But this is what you want on a strangle, right? You kind of want the stock to stay between your horizontal lines. Like the squiggly lines are okay as long as they stay inside the horizontal lines. I mean, that's it. That's all we want, right? We just keep this stuff super simple, super straightforward. And so right now we do nothing. We sit tight, and EEM is doing what we have politely asked it to do. And then we've got our Micron, our short put spread. Yeah, this guy's not coming back. Now I say that because it is kind of funny. So you look at this situation. This is actually perfect, right? Because you look at the situation, and I see you guys in the chat, by the way. I see you guys 100% in that chat. Man, look at you guys. Ash Finn is here. Ranch is here. BBB Fine is here. Sam L is here. DMZ is here. Weiss and Adam Armfield. Sergio and Point B and Base 8 in the house. Brian Racketon is here. Man, I appreciate you guys. Big Deal Donuts is here. Man, I appreciate all you. And I know I missed some people, but I appreciate you. I see you, USA, Super Tech. And so Micron, with our Micron situation, so you look at the situation, right? And you're like, man, this thing just can't get out of its own way. Like it's never coming back. Like the put spread is dead. It's done. Like it's not coming back. And it may not come back. Nobody knows what's going to happen. I certainly don't know what's going to happen. But we've seen just recently, we've seen situations where the final days, the final week, the final days, right? It didn't look like it was ever going to come back. It looked like it was done. It looked like it was over, and then it came back. It looked like it was done. It looked like it was over. It came roaring back. And so a situation where it's like, man, you hold it to the very end. This is the beauty of defined risk. I've never been a huge fan of defined risk. You guys know that, but it absolutely serves a very important purpose if you are brand new. And if you want to do some things around the edges, around more of an undefined risk core in your portfolio, that always makes sense, of course. But in terms of like it being the thing that's going to get you from where you are now to where you're trying to go, you know, in my humble personal opinion, I don't know that that's going to be the best way to get where you're trying to go. But one of the most redemptive qualities of defined risk, arguably the most redemptive quality of defined risk, is the simple fact that you know your worst case scenario. So that frees you up. That frees you up to do a ton of things. Namely, not a single thing at all. Like you just put the trade on and you don't do anything. Like I just put the trade on. I've got the probabilities in my favor at the outset, or maybe it was a 50-50 shot, or maybe it's a butterfly with like a 20-25% pop, whatever. I know what I've signed up for an entry. I'm okay with that. If I end up taking max loss on the trade, not that I'm going to go out of my way for that to happen. Not that I'm going to go out of my way to like make that easier to become an outcome for me. But if it actually does happen to end up, it's okay. It's okay. I move on to the next trade. And so with a situation like Micron, where it doesn't look like it's ever going to come back here, we've still got 25 days to go. And in the world of memory stocks, man, 25 days to go. I mean, that's like a trip to Tau Ceti, right? That's like a trip to Tau Ceti for my Project Hail Mary fans. And so, whether you're going there or you're going back, it's a pretty long trek either way. And in the memory world, 25 days is a pretty long way to go. So for Micron here, I think we'll be okay. And by that, I mean, we're probably going to take max loss, but we sized appropriately on entry. So it'll be all right. Netflix, man, let's see. Can we get through all the positions here as a little bit of a, kind of bring us up to speed? Maybe, potentially. And so I think we can. Let's do it. So Netflix, we have our 100 shares on. This was an assignment that we took from a short put that was in the money. And then this was an earnings trade, I believe, that we rolled out and down. And so, so Netflix, we've got our short put at the 67.5 strike. And so right now with Netflix up 80 cents, we're in a pretty good spot. And so I like the trade from a performance today standpoint. It hasn't necessarily been my favorite trade, all along the way when it comes to what got us to this point. Had a bit of a brain freeze there. And so right now Netflix is helping the cause a little bit, and so that's good. We sit tight, we do nothing, and everything is working. QQQ, this was a trade we did earlier, so I'm not going to belabor that point. I'm not even going to labor that point. We're just going to leave it as it is. Snapchat, obviously, all of our hopes, all of our dreams, all of our future plans and prospects hinge on Snapchat. That's it. I've been talking about this for months now, and by that I mean I think we brought it up maybe 2-3 times. Snapchat up 20 cents today is great. That's great for us. Now, we bought the stock at 604. It's marking at 455. That's not great, obviously. But we got ways to go. We're long-term shareholders of Snapchat now. Like, I'm not looking for the exits. Like, I'm looking to vote. Like, I'm looking for my vote to come in the mail. Like, send me the prospectus. Like, I want to hear about the future plans of the company. Like, I want to hear what are we going to do in the final 6 weeks of this company's life? That's what I want to know. And I'm going to be a long shareholder until the end. And by that, I mean, we may close it before market close today. So Snapchat, there you go. We're long 100 shares, at least for the time being. And then SpaceX. So we have on our vertical spread in SpaceX that is hemorrhaging cash. But the good news is there's only so much more cash to hemorrhage, right? I mean, the nice thing about lighting stacks of cash on fire is a lot of the time it's a known stack. Maybe not a lot of the time because we do a lot of undefined risk. And so sometimes it's a growing stack. So forget what I just said the last 20 seconds because it doesn't make any sense. But but in a vertical spread scenario, so specifically to this scenario, it is a known stack of cash. So you know how much is going to be set ablaze in the event that it is indeed set ablaze. And so that is nice, obviously, for the SpaceX situation because I know just how bad it's going to potentially be. For the Strangle situation, this guy that we put on, I just did this one recently, right? This was a Joel James special. I got that one down too. Look at that. Man, look at Dr. Jim, the organization. I do have a Christmas card right here, by the way. I have a Father's Day card. I also have a Christmas card. This is so cool. So I want to bring this up really quick. This was just on my desk because I was looking for receipts and stuff. So this is awesome. So this is a Christmas tree, obviously. I mean, if you looked at that picture and thought it was anything other than a Christmas tree, I don't know that I can help you. Like, I'm not sure I can help you with anything, actually, because that is a good-looking Christmas tree. And then when I look in there, look at what it says. You guys should be able to read that, right? Merry Christmas, Dad. Merry Christmas, Dad. Now, I am actually not sure which one of my children gave this to me. I usually do a good job of writing, like, names and dates on the back. And by good job, I mean I do it maybe 5 to 10% of the time, but I didn't do it. I didn't do it here. Now, let's just use process of elimination, right? This was from last Christmas. So it's been sitting in that exact spot for what, 7 months? Yeah, that's about right. Let's just use some backwards calendar math, right? I have 3 children. I have Penelope, who's 11. I have Elijah, who's 9. And I have Amelia May, who's our intern, our assistant. She's 6. Well, on Christmas, she was 5, right? So I think we can safely rule her out. I don't know that she could correctly spell Merry Christmas, Dad. Most of her communication is still it's in crayon. It is in pictures. And there might be like some squiggles and some things like that. There are supposed to be words in communique, but it's really, really difficult to read. So it's either Penelope or Eli. I actually think that was Eli. I'm pretty sure that was Eli. When we get done with the show, I'm actually going to go inside. I might wait for the storm to pass, but I want to know if that was him because he'll know right away. I'm pretty sure it was Eli. And so anyway, there's a Christmas card from Eli. But Joel James, thank you for the SpaceX trade here. And I mean, it's my trade now. I mean, I'll take full responsibility for this trade, of course. But yeah, short the 80 put, short the 160 call. And right now we're at about a scratch. And TLT, let's see, TLT. TLT. Oh no, we have it's working. Wait, hold on a second. Is this working? No, it's kind of working. Diagonal spread. If I go to, let me bring up my chains here. If I do, what was TLT when we put this guy on? Okay. Yeah, it was 84.29 when we put it on. Now it's 80. Okay, so it's down a little bit. That would make sense why we're losing a little bit of money on that trade. It's nothing crazy, but just a little bit. And then XLE is doing what we have politely asked XLE to do. And so that is good. That is really, really good here. The 54, 62 and a half, and we're in a good spot. So there is the State of the Union. No new trades right now, just because I want to get all caught up to speed. We did the 2 this morning, QQQ and MNQ. And we got, guys, the stuff coming down the chutes. Man, I mean, look at this, right? Chipotle, Starbucks, Meta, Microsoft, all on Wednesday. So I'll see you guys for Wednesday's show, of course. I mean, you could take tomorrow off, Tuesday. I don't see any earnings tomorrow, but your boy needs that watch time. So I really hope that you don't. Apple, Amazon coming on down the chutes. Let's not forget, right, on July 29th as well, we've got the USA, right? Cousin Kev is coming out to tell us the State of the Union with the USA, and all eyes are on the tie color choice. Let me know in the chat, what do you guys think he's going to do? I mean, the navy blue, right? We've talked about this before, but I don't think you could talk about this enough. Right? I mean, sure, we could do macro, we could do dollar and oil, but we got Chris, we got Ilya for that, right? Let the experts be experts in what they're experts at. They've got all that stuff on lockdown. I'm talking tie colors. The navy blue shocked me. I mean, it shocked me. Like, I had to really do a double take. I was like, wow, is that really navy blue? I'm shocked he didn't go with anything in the purple family. What do you guys think he's doing next week? I'm sorry, this week. What do you guys think he's going to do this Wednesday? Do you think he's going to go navy blue again? Do you think he's going to go in the blue family? I actually think he knows what he's doing. All these guys are smart guys. They know what they're doing, right? He knows this is all we care about. I think he deviates out of blue, but not purple. So I think we're going to see something that's not blue and also not purple. Now, I don't know what that leaves. Right? I mean, let's think about that for a second. Because you can't do any shade of red and you can't do any shade of green. Right? And so it's like, all right, he's not doing red. He's not doing green. I'd be so shocked if he does either one of those categories. I don't think he goes navy blue again. If he goes like a powder blue, maybe that's its own category, I think. I think he's going to go with like a mustard. Like, maybe he goes like a forest green. So something like is technically green, but not really green. He could go black tie, of course. He could go gray tie. And, this is, it's anybody's guess. But don't forget, guys, don't forget our rule, right? It's very, very simple stuff. If he goes with the green tie, it's time to buy. If he goes with gray, it might be okay. If he goes with black, you got to hang back. But if he does go with blue, man, we are all going to step in some doo-doo. So don't forget, that is our known universal Fed playbook. And it is 100% going to help you on Wednesday. And by that, I mean, I probably wouldn't follow any of that. But let's go ahead. Let's go to the surprise and delight section of the program. So this is when I get to the middle part of the show. And I usually like to go top down from the comments at the very beginning. And I'll get to the beginning people here in a second. But let me surprise and delight some people in the middle that are not expecting me to ever get to them. But I'm going to actually do that right now. And I actually see Green Ape. I just scrolled and I saw this. How about this, Green Ape? How about this? Green Ape 84 says, I am hoping to win the surprise and delight lottery. You have won, my friend. You have 100% won today. Now, have you won anything? Of course not. Right? Not a single thing. But thank you so much for being here there, Green Ape 84. I appreciate you so very much. I don't recall you having been in the chat before. And so, man, I appreciate you so much. Because of your username, you're making me think of what am I thinking of? The ghost, sour green apple. That's what it is. Sour green apple, which is the creme de la creme of ghost flavors. Sour green apple, sour pink lemonade, original. They're all A++ in my books. And so Green Ape, thank you so much for being here. And then Green Ape goes on to say, Dr. Jim, PayPal earnings are tomorrow morning. Man, I don't know. Green Ape, what are we thinking? PayPal earnings tomorrow morning. All right. So let's go ahead and let's see. PayPal earnings tomorrow morning. If I go ahead and if I do, Monday going into Friday, let's see. We could do a butterfly going into Friday. We could, it's only a $56 stock though. And so I actually think let's do, okay, so here's what we're going to do. Okay. So first and foremost, let's think about PayPal, right? Again, you are free to draw your own conclusion. And if you're serious about making money, you should do the exact opposite of anything that I might do. And if you don't believe me, ask the people in the chat. They will back me up. But when I think about this, through my worldview and my lived experience of PayPal, I'm thinking about PayPal. I'm thinking about a young whippersnapper Elon Musk, right? Just a young little tyke building PayPal, right? Millions upon millions, billions upon billions, trillions upon trillions, whatever it is. The fact that they're still in business, totally shocked. Given that they're still in business, I'm not sure how you can be anything other than bullish, right? I'm not sure how you can be anything other than mega bullish on PayPal. So when I look at PayPal, I'm thinking you got the stock at 56. Man, what if we just sell a put in the 4-day cycle, right? If we just sell a put in the 4-day cycle, now you're looking at $1.75 on the bid price, $1.79 on the mid price. I really, really like this trade. And again, you've got to blaze your own trail. And if you're serious about making money, I would be playing this thing to the downside. But I'm looking at this and I'm thinking, man, let's go ahead and let's fire up. Let's load up this short put in a 4-day cycle. So let's go ahead and $1.79. The buying power is only $900. And so I really, really like everything about this trade. All right, we got Phil at $1.76. So there you go. And again, another nice thing about that trade is it's only $1,000. So if you've got a smaller account, it could work with the position sizing parameters. And so, all right, so let's go ahead and let's go back to the very beginning of the show. Man, I appreciate you guys so very much. Orgenu is in the house. What is up, my friend? Hello, Dr. Jim. Hope you had an amazing weekend. I did. Locked and loaded for another week of earnings with banana natties all around. Get them on tap. Get them flowing. You're going to need them 100%. Doc, what is your favorite Celsius flavor? Important question. Yeah, Chris and Ilya, man. Like, they love that stuff. They love that stuff. I can't get there, man. I can't get there, right? Not only are we working super hard on this Go sponsorship, and by that, I mean, I'm still waiting to send that first email, but it's going to happen. It's going to happen. Ghost, Gorilla Mind. These are 1, 2, right? It's a 1 and a 2. It's not a 1A, 1B. Ghost is ahead of Gorilla Mind, in my opinion. Well, I don't know. Maybe it is a 1A, 1B type of thing. But Celsius, to me, Celsius has done an amazing job of finding the perfect combination of chemicals and cough syrup. It's an amazing blend of these two entities, these two ideas, right? I mean, you have a Ghost, and what do you have a blend of? You have a blend of joy and happiness. You get some Gorilla Mind, you have a blend of what? Excitement and adventure. But you get some Celsius, man, really any flavor. It's like, man, did I just take some NyQuil? It's like, man, this stuff is bad. But anyway, that's what makes the market. And so, Chris and Ilya, there will be more in stock for y'all. And so there you go. But Sam L is in the house. Thank you there, Orgenu, as always, my friend. Happy Monday, Doc. Hope you had a great weekend. I did. I absolutely did. It's rainy season here now. So, I mean, it rains pretty hard most days. It's hurricane season, actually. But, I kind of ascribe to the hurricane mean reversion strategy. And so I actually think we're going to be pretty quiet for a while because 2 years ago, I mean, Hurricane Milton went right over my house. It went right, ripped my roof off my house. I mean, it wasn't like the Wizard of Oz. There was maybe 6 or 8 shingles in the backyard. But we were able to get a new roof out of it. So that actually worked out okay. But it went straight over my house and knocked the fence down, tore the roof up. And so the hurricane mean reversion, I'm kind of going to lean into that. But Sam L. Diago has already decided to ignore your first gotcha. Let's see what emotional damage this week has in store. Yeah, let's see. Let us see. Wolf is in the house. The good doctor is here. Let's go. Yes, absolutely. Thank you there, Wolf. I appreciate you. DMZ, hey, Dr. Jim, let's go. Have a great week. Let's make a ton of money, man. Let's do it. Let's 100% do it. I love the idea. I love the feeling. I love the thought. Like, let's go, man. I love it. Sam L. Chat, check out the latest Dr. Jim Trading Lab newsletter. That's correct. You can check that on my Twitter. It's actually pinned in my bio if you want to give that guy a look. It's completely free. Another outstanding read full of trading wisdom, psychology, and classic doc storytelling. Yeah, the funniest thing about the last one I sent out. So I didn't know until after I sent it. And so it was so funny because like, I have my drafts and whatever. And Sam, you actually brought this up to me when you wrote, which was just too funny. So in the last one I sent out, I've gotten rid of it now. So if you sign up now, you're not going to see this. This is why you got to get on as early as you can. I actually left all my notes to the actual news, like the drafts and such, below the actual final product. So if you guys saw that email, then you saw like, kind of the cutting room floor stuff that you would never intended to see. And so thankfully it was all PG rated. BBB Fine is here. What is going on there, my friend? Sam L is here. I accidentally leaked the director's cut. That's correct. That is correct. There you go. He knows. And so, yeah, good times. A true surprise and delight. That's right. Premier Move, PayPal, a 56 put, 50 put, 47 put, 11 days to go. Okay, so an unbalanced butterfly. Since I already did the short put, I'm not going to do anything there, but Premier Move or Premier MOV, that's an interesting looking trade. I mean, I'll take a look at it. Let's just kind of analyze it, if for no other reason than just to learn. Like we can just learn, we can grow together and all that kind of stuff. So I buy, you said 11 days to go? So 11 days to go. I buy a 56, I sell a 50, and I buy a 47. I'm assuming you mean a 1 by 2 by 1? That's what I'm assuming. You didn't put that in there. But maybe you're not. 1 by 2 by 56. Yeah, you have to I'm not sure what you're buying and selling there now that I look at it. Because when I'm looking at the way that this is unbalanced, a lot of times if I'm going to break a wing on a butterfly, I want to get this more towards a credit. So this could be a totally different strategy. I mean, like if I look at the curve view here, the way this looks, I'll be okay if the stock rallies. And obviously I've got my little tent and then you've got the risk to the downside there. And my maximum loss. This is an interesting little strategy. I'd have to think about it a little bit more. I don't do too many unbalanced butterflies. I don't even do too many broken wing butterflies. It's not really my go-to. It's not really my kind of default setting. And so I'd have to think about this a little bit more, but you could either put it in the chat. I may not get to it. I'll probably see it after because I always scan the chat after because you guys always make me laugh in the chat. Or you could just email me at jschultz@tastylive.com and give me the strikes you were looking at, and then I can have a better idea kind of what you were thinking there. N1C. Hey, Dr. J, what's going on there, N1C? Mr. Pillows is here. What is going on there? I appreciate you, my friend. LS Home Automation Guy. What is going on there, LS Home Automation Guy? I appreciate you. Ryan LP is here. What is going on there, Ryan LP? Sam L, shout out to Laura, our favorite moderator. Laura's actually got the week off. I think we got Ben this week, which Ben, that's a lateral move for us. Ben is quickly climbing the ranks, the power rankings, but Laura should be back next week, I do believe. Sam L, she keeps the chat clean, the viewers happy, the .com schedule-ish, and somehow still finds the time to pump the algo. That is correct. That is so correct. Weiss in the house, good to see you. How would you right now add some short deltas if I'm too bullish or exposed? Yeah, when I think of adding short deltas, it comes back down to a couple of things, right? And so short deltas can be a little bit tricky to add because, if I am, short, long deltas are easy to add because short puts are much, much easier to do than short calls, right? A short put is easy to do because I don't mind playing it to the long side. I don't mind playing the positive drift. All that kind of stuff. The standalone short calls can be a little bit different. The standalone short calls can be a little bit more troubling to hold for the long term because there isn't necessarily anything like negative drift. There isn't anything like, kind of this slow grinding lower move in the market. It certainly can happen. And, the perma-bear propagandists on the internet are convinced it's going to happen, most likely in the next couple of hours. But generally speaking, it's not something that's going to happen in the market on a regular basis. And so it can be a little bit trickier to add short deltas. And so my go-tos are typically short call spreads from an option standpoint, short call spreads, skewed strangles can work really well. And then if you want to bring in a futures component, you can bring in some outright futures to actually add a little bit of short exposure. But I'll have a lot more to say about that in just the coming weeks here. And so, but yeah, I would typically, from an options only standpoint, I think short call spreads and skew strangles can be great things to utilize from a short delta standpoint. Let's see. Lors is in the house. Word is up. Ash Finn is in the house. Word is up, my friend. I appreciate your flexibility too there, Ash. I appreciate that very, very much. Point B is here. Brian Rakuten is here. Ranch is here. Word is up. Base 8 is here. What is up there, Base 8? What do you think about a debit brokering butterfly with a wider debit spread than a credit spread? You actually want them to move in the money, and you can make them a free fly, shortening the wide side. This might be similar to what our friend Premier Move was setting up a second ago, maybe. And so when I think about a brokering butterfly with a wider debit spread than a credit spread side, you actually want them to move in the money, and you can make them a free fly, shorting the wide side. So a couple of thoughts. So number one, I'd have to think about this a little bit more. The answer is not super obvious to me, so I'd have to think about it. Maybe set up a hypothetical example and email it to me so I can kind of think about it a little bit more rather than trying to figure it out here kind of on the fly. But I can address the second part of what you said. So the free fly. So any strategy that's kind of like a brokering butterfly, so the one that you proposed, a standard brokering butterfly, a ratio spread, these can all be they can all be morphed and evolved into a risk-free butterfly if you want to go that route. And the mechanism behind with which, the mechanism that you use, let's go with that, to actually get there is going to look a little bit different depending on the strategy that you have on. But you can get there. You can get to the free butterfly starting with any of those strategies. And so that's not necessarily something that's going to be exclusive to how you set this one up. I just wanted to kind of make note of that. Any brokering butterfly that you use, Nasdaq is rattling, any ratio spread that you might use, you can turn these guys into free strategies by doing slightly different things along the way. But I will say this. I actually don't typically love the free butterfly, which may sound crazy to say, but don't forget, for every gimme, there's a gotcha. And I still haven't found who said that, but man, it is a catchy jingle. I mean, again, you couldn't forget it if you tried. With that free butterfly, yes, you have no risk. So that's a pretty nice gimme. Obviously, you have no risk, only upside. The reality is, oftentimes, to get any appreciable amount of that upside, you're going to need to thread not just one needle, but multiple needles. Like you're on like a second or third derivative level of needle threading at that point. And so that's a little bit tricky to do. So I'm not saying I never do it and it doesn't have its home and its place. Like I think it does, certainly. But as like the thing that I'm going to kind of lean on as a foundational element, not necessarily something I'm going to lean on as a foundational element because I think it can be difficult to actually turn a profit on those. And so those are my thoughts. Let's see. Point B, somewhere out there, a market maker just got nervous because you logged in. Oh, I know that's not true. I know that is absolutely not true. Samuel Doc, NVTS has earnings tonight. With a company's name like that, what could possibly go wrong? Is this Novartis? Novartis Semiconductor. $11 stock, Samuel, man. You're taking me to the dumpsters, man. Like, what are we doing here? What are we doing? $11 stock. They got options. They got weekly options. I mean, that's pretty good. I mean, you go to the front week here. I mean, the markets are actually not too bad. They're not too bad at all. And so I don't know, man. Like, I mean, the expected move is plus or minus $1. Or I'm sorry, plus or minus $2. I'm kind of thinking we just buy some shares, Samuel. And this is not a Snapchat position, right? I am not putting my college, I'm not putting my kids' college funds into this stock. Snapchat, of course. NVTS, it hasn't earned the right yet. It hasn't proven the longevity like a Snapchat. So I think let's just buy some shares tonight. Let's buy 100 shares. And, I mean, the maximum, if it goes to zero tonight, that's only $1,100. I mean, that's what we were losing, per day, per session, per hour in Dell, in SLV at one point. And so that'll be all right. So I'm kind of thinking we just buy some shares. And this is going to be a very short-term play. We're going to look to get out tomorrow. The smash and grab strategy, as I like to say. And so, yes. And thank you there, Samuel. I appreciate. Oh, wait, I got to write this down. Hold on. NVTS is a Sam L special. Got it. Okay, perfect. Sergio's in the house. What's up there, Sergio? Let's see. Ranch is here. He's got 2 QQQ trades on, one from Mike B and one from Doc J. Now you keep track of which one is the winner and which one is the loser, and watch what happens. We already know what's going to happen. Now, I don't know if they're on the same side of the market. If they're on different sides of the market, then this is going to be a perfect little test. Let's see. Premier, send me an email about that, and I'd be happy to kind of look at that a little bit more. DMZ is here. What time is the morning show? 10 a.m. Yeah, that's correct. 10 Eastern. That's right. 9 Central. That is absolutely correct. Sam L is here. Daniel Perkins is here. Man, what is going on? Markets in turmoil. Don't worry, Danny. We are all the way back to almost unched on the Nasdaq. We're green on the S&Ps. We're green on the boomers. I mean, we are back. Base 8. I love my kitchen mixer and my KitchenAid mixer. So we actually just got Autumn because Autumn's birthday was last month. The kids just bought her. I think it was Eli that got her this. He got her a little hand mixer, like one of those deals that's got the little two guys right there. We have this the mixing stand, which is great because I actually like to bake. I like to bake myself. I also like to bake with the kids now. It's super fun. And so we got like a little hand mixer deal. Oh my gosh, that's so fun. Is there anything more satisfying than putting batter in a bowl? It could be whatever. I don't care. It doesn't matter. Bread, pancakes, waffles, whatever. Daddy's chicken. Maybe not Daddy's chicken. But you get some batter in the bowl and you mix it up with that hand mixer. Oh my gosh, just to like see the folds and see the swirls. It's very soothing. Very, very soothing. Again, you get that going, you get a little Sarah McLachlan on, and then you're really getting some things done. And so, but I appreciate you there, Base 8. Appreciate you very much. Man, I see you guys in the chat. I can't get to all you guys. Vicky Zags is here. Joel James is here. Ranch is here. Man, Flub is in the house. Man, look at you guys. I appreciate you guys, but I gotta run. I appreciate you guys so very much. If I can ever help you guys with anything, please shoot me an email. I am jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Hello, Tim Knight, and it is a new week, and it is a surprisingly good day. I've mentioned before that the best days are never the ones you think are going to be the best. Usually they're the ones that are either blasé or you actually think are going to be bad. This doesn't qualify because it's not a best day, but my goodness, it's a lot better than I thought it would be. And you know, I don't know if they include these little prefaces in the YouTube anymore. Sometimes they do, sometimes they don't. But lucky you, you're live. We're going to just do it. Then we'll get into the charts in a bit. As you know, we got Taco this weekend, as usual. This on-again, off-again war has been happening for 4 months now. And in the back of my mind, I kind of expected it, which seems odd since I was so short. But you may recall when I saw you last on Friday and we looked at the NQ, I think the exact words I used were, we're at the cusp of support. And I also said this might be a great time to go long, who knows? And that was true for a little while because we were at support. And he did taco, just like that's what the A in taco is always. And we rallied. And that's not a good feeling because I was very, very, very short, 43 different positions. And we gapped higher and really didn't look back. And right up until, like 4 a.m, it was just high as it could be. It's like, well, brace yourselves, see how wretched this day's going to turn out to be. No, didn't turn out bad at all. 43 shorts, I got stopped out of two. And we're going to look at some of the charts in a bit, but the cold fact of the matter is that a slight plurality of all these positions are actually in the red, which is good because I'm a bear. And the good news is you can only taco once. It's not like the man's going to taco every single night. And so the benefit from that, this spike we got, it's done. It's done. The white flag can only go up once. And so now we can deal with the meat of this week, which is a tidal wave of earnings from big companies and Kevin Warsh on Wednesday, which, if he has a lick of sense, will be an interest rate hike. So it's going to be a really cool week. Sadly, like any celebration, it's going to end at some point. So this really cool week will pass, and it'll be boring again because the earnings will be gone, and we'll just have tweets to drag the market around. But let's try to live in the moment and enjoy this week for what it is. We've got extra time today too, because we just do. You get almost twice the time that you normally do today. So we're gonna run long and strong. So let's jump into the charts and thumb through this surprisingly cool day. Beginning with the spider. The spider essentially opened at its high, and it fell nicely. We are still up. We are green on the screen everywhere except the NQ, which is down just a little bit. But again, I was so bracing myself for a horrid day that I will cheerfully take being up 0.06%. That'll do. Fine. Lifetime high was way back here. We've never violated this gap. And you know what? The potential for bad news is much, much, much bigger than the potential for good news. We're at the tail of a how long has it been now? Lost track. 18-year bull run. Valuations never higher, and the whole stock market is basically SpaceX. When it IPO'd, it's just insane valuations. So I will happily take this pipsqueak rally that we've got on our hands right now, because it wasn't that long ago that the white flag going up would have caused 2,000 points on the Dow. These days, it's just like, yeah, okay, whatever. We'll be bombing again in 2 days. Whatevs, get out of my face. So it's not effective anymore. They probably got out of their calls when the open happened, and then we all move on. So the diamonds, DIA, these, the gap was very, very tight. That was filled and big time. That's gone now. The resistance on this, I believe, is essentially based on this shooting star right here. We got right up to it and fell away. Again, we are up. And this one about 0.5%. This was one of the two items I mentioned that I got stopped out of. And this is a big position, the diamonds. Got stopped right out of there. And I ain't going back because this is not as clean a chart as some of the others. The tech stocks tend to be the cleanest ones right now. I came into the day short XLK. That did not get stopped out, and I added to that today. We have a right triangle pattern on our hands here. Now XLK is kind of like the cubes. It's composed somewhat differently because for whatever reason, it's somewhat stronger than the cubes recently. We have not completed the right triangle pattern. Here's the base of that right now. It's close. I got very, very close here, and I got within pennies of it here. It hasn't completed it yet. Gee, I would love for it to do so. That'd make things even easier. But as it is now, we are down on this about 0.75%, and I'm remaining short this. This is one of, I'm short a handful of ETFs right now. XLK being one, FXI, SMH by way of puts, and SPY by way of puts. But the big old ETFs positions I was in, I got out of because, as I said, I came into the day very heavily committed, like a little over 200% committed. That is all cash and a whole bunch of margin. And I've scaled that back to about 133% because I'd rather not endure the anxiety I did overnight about this insane market we're in right now, particularly as these giant earnings come our way. And I'll talk a bit more about a specific example of that in a second. You can see the demolition of tech stocks in an exaggerated fashion by way of KORU, which is the triple leveraged South Korean ETF, which 6 months ago nobody cared about, and now everybody trades it. This has reversed hard away from around 65 down to about 15. It's got a portion of its value left, but it's lost like 75% because it's leveraged. And so it peaked right here when everybody in South Korea decided to become a trader. And down here, everyone's deciding to go back to whatever they used to do, dropping milk off on the porch or sewing hymns, God knows what. But, you ain't traders. And this is not easy money. It's an easy way to get a margin call. So this is, and I think there's plenty more to go in terms of semiconductors, memory chips, and the whole South Korean market. I think there's plenty downside to go. But I have been taking profits here and there. I'll mention that a little bit later. SOXS, which is the bearish leverage fund, is doing just fine. And what's really cool about this is that leverage funds need a trend, a fairly steady trend, if they don't want to get just chopped into hamburger. And this one's doing just that. We bottomed on this some time ago, like at the end of June. And it's been messy, but on the whole, it has been strengthening. So we've gone from the low 30s up to, we're into the mid 50s now. And it's in fits and starts, and it takes a certain amount of insouciance about your position to just hang on to it, but it's working because the entire AI trade, be it from the financial side, semiconductors, anything to do with hyperscaling, has just been getting chopped to pieces. I walked my dogs yesterday, as I so often do, and there was Tim Cook walking in. Who are the people in your neighborhood? There he was. He lives near me, but I've never seen the man in person before, but there he was. I wanted to stop him and say, thank you for being a genius about not getting the hyperscaling, but you know what? I just want to leave the poor man alone because he was talking to a fellow and I thought I would just leave them be. But Apple has been the superstar in this whole thing. They didn't bother. And I'm sure there were heated debates about this, but again, business case studies will be written about just like how did they dodge this bullet that everybody else was leaping in front of, and they came out smelling like a dozen roses from this whole thing. So they just keep leaping at lifetime highs every day. They look so good because they basically make really profitable products that people love, and they don't sink $1 trillion into like gambles. So good for Apple. Speaking of gambles. Spot the trend if you can. Here's SpaceX. What 2 words do I love usually that can be applied to this every day, but I don't really like to say them with this one? Lifetime lows. Every single day. Lifetime lows. So Elon's reputation as an infallible business god has been dragged through the mud. Tesla is a disaster. SpaceX is a disaster. And I've seen a lot of the more popular tweets these days have to do with like promises Elon's broken or things that have never come true. Like they're long lists. There will not be a Martian colony, by the way, in case you're wondering. They report their earnings for the first time next Tuesday. And the lockups release beginning on, I think, the 11th of August. And I guess eventually it'll be okay. It's been a disaster so far. I'm not selling any myself, but yeah, it's ugly. It could be a very long time before this thing recaptures its IPO price. Years, maybe, certainly months. But it's interesting to watch in a sort of gallows humor kind of way. I can tell you this though, the fever about getting to IPOs, Gone, gone. This is VCX, Fundrise Innovation. Now you can have a part of the IPOs before everybody. No, nobody cares anymore. No one wants to get in on the ground floor of Anthropic or Databricks or OpenAI or anything like that because they've seen the results. So this is just plunging. What is it down today? 28%, heading toward a lifetime low close. IPOs, mega IPOs, dead. DEAD, dead. Something really positive has to happen to reinvigorate it. And I wouldn't be surprised if Anthropic's like, you know what, we're not going to go public this year. Never mind, because this is getting to be a chilly environment. And we're like 1% off lifetime highs or something. And there's this like ice storm going on, like no interest. But as I say, Apple, which reports on Thursday afternoon, they have been the superstar in this. Although, I wouldn't dare buy the thing at these levels. $5 trillion company. There it is. I guess they're just trying to squeeze a little more juice out of that lemon. But it is, for those who have held on through the years, God bless them. This is like generational wealth maker. But the broad theme that I've been obsessed with, and that even with tacoing and even with white flags being hoisted, is the hyperscaling efforts just collapsing. We're seeing, this is, like in the Big Short timetable, this is sort of the 2006 feel to it. It's not obvious what's really happening, but there's signs that things are amiss. And so, here's just a Whitman sampler of the kind of stocks and what they're doing. CoreWeave, big into hyperscaling, continuing to sink. Nebius, for those of you in the San Francisco Bay Area, as well as I do, hop in your car, drive up and down 101. Because I've traveled from time to time, and I'll go to some places, like Philadelphia or something like that, and you see 100 billboards, and 98 of them will be personal injury lawyers. And I'm like, gross. I don't want to live here. Just all ambulance chasers. Come to the Bay Area, you look at 100 billboards, my hand to God, 99 will be AI, and not consumer oriented. It's not like, come to Facebook and use AI. It's like really deep tech stuff. And these are on billboards, but like Nebius. And I've been involved in technology since 1979, and a lot of the words I don't understand. So it's very arcane and very bizarre, and certainly reminds you of 1999, when all the billboards were internet companies that do not exist anymore. But yeah, Nebius is one of those. Caterpillar, as I've said, I've got puts on this. And it's taken a tumble today, very much in the AI space, weirdly. And Nvidia, I made mention this on the morning show, that I saw a headline about them wanting to financially back $250 billion in financing for OpenAI to build out their data centers. Market's not really smiling about that idea. And I think that's what helped take semiconductors down almost 5% on this. Ugly, messy chart. I have no position on this, although I appreciate the help on SMH, which is here. Now, let's take a moment to cogitate on SMH. This is one of those items I trim back on today just because this market makes me nervous. I have September puts on this. I have sold 40% of them today at a nice profit. That is probably a mistake. They will probably be worth a lot more before they expire in September. Almost certainly an error on my part, but I want to breathe a little easier. The support is right here. If we can get below today's lows, that will complete a very handsome topping pattern, and I think would send this thing into a free fall. We peaked on this. This is when there was no worry on anybody's brow back on June 22nd. And since June 22nd, things have bit by bit fractured. But in some cases, like this one, it's not done yet. There needs to be more selling. So we'll see. But it's going to be a big week. And this could be plunging before this week is over. It really depends, especially on the 4 of the Mag 7 stocks that are announcing this week. And I've done a video yesterday about the Mag 7 that we'll be releasing probably between today and tomorrow. Some of the individual items in that realm that are continuing to fall, you have Applied Materials, which has fallen from the 700s down to the lower 500s. AMD, which is relatively robust, but it is falling today by almost 5%. We've got Corning, which has just been a calamitous fall. It has dropped from around 270 down to around 140 or so. So we're approaching these are approaching 50% loss levels. Micron, MU, this also peaked late in June. Its pattern is also not complete, but we're getting there. It might complete, might. The low that we want to break is right there, that bar. And if it does complete, it's a very nice head and shoulders top right there. But a pattern that's not done isn't done. You can't count on it to do anything except be a possibility, maybe even a probability. But it's not done yet. Vishay Interactive also down and also short this. One of the newer faces here, I didn't even know the stock existed a week ago, but I'm short it now. AAOI. This is also down over 2%. Got a few more specific examples here. Sienna, CIE, and this has definitely completed its pattern. We had a nice price gap here and broke this level here, and this became a range. Bang, 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 bang. Then broke that. And now we're beneath that. So support became resistance. Support became resistance. And so now we could probably get away with throwing another line down there as the new support, like so. Something like that. I'll make it nice little green there to kind of emphasize this roll. So that's what's happening with the Sienna. Credo, CRDO. This one's slip sliding away slowly but surely. SanDisk, SNDK. Wow, look at this. So the storage ones really getting hit. Down 10%. And this is nominally very expensive. This is a $140 plus drop. So on this one, we've fallen from $2,500 down to about half that level. And it was not that long ago, back here, when it's just how high can this go? It just keeps lunging forward. These were the kinds of stocks that had 4,000% gains in the span of a year and incredible PEs. Well, now we have our answer. We see how high it could go. It's not going high anymore. It's how low can it go now? One specific example, which kind of goes back to my theme of trimming back risk to some degree, is this fella here, Seagate. Weeks ago, I wouldn't even dare short this thing. And I did start to short it, and it went well. And then last week, I went completely off my rocker. Here, I bought a put, singular, because these are very expensive. So I bought a put on it. And let's say it was $15,000. And on Friday, the stock fell, and the put went up. And today, the stock fell, and the put went up. But I sold for a profit. Why? Well, a couple of reasons. One, this was a September put, and for me, that's too close for comfort. I want lots and lots and lots of time. And two, they report tomorrow after the close. And I did not want to watch and see it up $200 or something like that. What's probably going to happen is the stock gets creamed on Tuesday, and I will be counting what the profits would have been. But the volatility on this is very high, and I would just, in this case, I'd rather just take the profits and be done with it. So that worked out, but I will not participate in STX on Tuesday by way of an options position. Little too crazy even for me. WDC, I'm short this one also, and this is also down $21, a little more than 4%. So all in all, things heading in the right direction. As far as crude oil goes, what with the war and such, this is down really hard. I don't have any energy positions, nor do I intend to. This is getting repelled very fiercely. I compared this trend line this morning to sort of a rubber band because we pushed against it on Thursday. It stretched up. Friday, even before taco happened, we were repelled. So in a way, crude oil kind of gave the heads up that there ain't going to be no big action, because it's funny, if there's one tell in this whole thing is whenever they talk about, because there's always talk of war, but whenever it's like, we're going to end civilization, or this is going to be the biggest one yet, weapons like you've never seen before, when it reaches 11 on the bluster scale, then everything's going to get shut to zero. It'll just nothing's going to happen. That's precisely what took place over the weekend. Because heading into at the end of Friday, it was just like, boy, oh boy, oh boy, is it going to be big. It's like, okay, well, they're just going to say, they're going to turn it off. We're going to get tacoed. That's exactly what happened. And the crude oil market kind of knew that. That's what the red bar is all about. And today it's getting hurled lower. My dumb guess is this is going to go flying over the trend line again. My dumb guess is that we are going to go blasting back into the triple digits on oil. For the moment, with that delicious taco and cheese sprinkled on top, we are briefly down, but won't be long, I don't think. And I'm not talking my book here, as I say, no energy positions in either direction. As far as the NQ goes, this is kind of cool because we have today, finally, for the first time, broken support. Now, at the moment, we are just like I saw you on Friday, right at the cusp of support, but we're a little below it right now. And the lows today pierced it very firmly. I mean, Friday it pierced by a penny or two. Today was just like clearly below it. But there's a counter trend at the moment, but I think the damage is done. And I think it's entirely likely that before this week is out, we're going to see the fruits of this demolition of the support, and you're going to see this thing take a hard tumble. And if it does, especially if it's really vivacious, I will cover more aggressively and wait for a retrace back to this same line. As things stand now, as I said, about 133%, not bug-eyed bearish like on Friday, a little more sensible, counting my blessings on the day that it worked out, but a little less crazy. So 133%, like I said. But this is going to be a very interesting week in that respect. And in closing, on the ES, you can plainly see the ES has not been as weak as the NQ. But it's got its own support line. And it's got its own prospect for failure, which is that line right there. And so we've been above that line ever since June 12. Went ripping above it. And since then, bang, did a bang. All in this upper, it's not exactly half, but it's roughly the upper half of this range. And that is the level we need to pierce. It'll take some doing. But if it does so, I think it'll be simultaneous with the failure of the aforementioned NQ support. So, I think lessons learned here regarding my own experience over the past 22 hours is twofold. One, to trust the charts and to use the stop loss levels and the drawn objects, the truth the chart reveals as your North Star instead of emotions. And the other thing has to do with timeline, because all my angst was really based on a moment by moment concern. And I got to tell you, and I said the same thing this morning, that every close I've made in the past few weeks, every diminishment of risk, I've regretted. And I'll regret these too, I bet you. So trust the charts, trust the breakdowns, trust the big picture. I think we have some exciting times ahead. And I think this day has been just one morsel of that. So it's nice to spend extra time with you. I will say fare thee well. And we're going to head into the meat of this week. It's going to be cool. So I'll see you tomorrow. Take care. Bye-bye.
What is theta? Options lose part of their value over time as they get closer to expiration. That's why they're called wasting assets. Theta is how fast the option's value changes in a day, not taking any other factors into account. Way far out, an option's price doesn't change as much as time passes. But at about 60 days till expiration, the time part of the option's price starts falling, and at around 45 days to expirations, it starts dropping much faster. If you bought an option, you'll feel time decay pushing down on that option's price. If you sold the option, though, time is on your side, and keeping the credit from the opening trade becomes more likely. Even though options lose their value over time, Tasty mechanics say to exit the trade near 21 days till expiration. Remember, gamma risk gets stronger in the last several days, and stock movements will have more of an effect on options prices. Again, theta is just the rate at which options lose part of their value. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
We're back. Final 17 minutes of the trading day here. A little bit of an abbreviated last call. Taking it solo. I'm your host, Chris Vecchio. You're watching Tasty Live. These final 16 minutes of the trading day here, defined by a market that is proving a little resilient, bouncing back ever so slightly, but maybe the damage is done. We can go right to the charts. S&P 500, 74.48.5. It's still barely up, not even a full point right now. We can call it 1 point here today, 74.47 right now. Not too great. The Nasdaq is off the lows. It was up 1.3, 1.4% earlier. It was down a little bit more than that. It's now back only off 100 points, 0.35% to the downside. The Dow is up by 0.5%, and your Russell 2000 is up by 0.2% here. Volatility, of course, over the course of the day has come off the highs, but is still well elevated from the gap open lower that we had at the start of the trading session here. We opened up at 1762, settling pretty close to that Friday close of 1858 right now, trading 1881. Vol futures themselves are up across the curve here today. You could see that the VIX August expiry is in at 1910. We can go over to the U26, for example. That's in here at 1982. So, it's interesting little bit of a twist there. Curve getting a touch flatter. Where are the winners and losers in today's session? Winners, they're few and far between, but there are a few specs of them. We can go to XRT, the retail ETF of all places. This is your top performing sector ETF thus far in this Monday session. What's driving this move so far? Believe it or not, the top holdings, it's a fairly, just in terms of distribution, not many assets are overweighted compared to others. Groupon is the highest weighted stock, for example, in the XRT ETF at 1.78%. The real is next at 1.75%. So these aren't a lot of like the names that people would look to here. I think Bath and Body Works, Warby Parker, Maple Bear, but obviously very consumer facing, and those are still performing well. You also have the discretionary ETF performing a little bit better here today, which again, likewise a surprise considering this constituents here. Amazon, Tesla, Home Depot, McDonald's are your top four constituents. So Amazon being the primary portion of that, down by 0.22%. Tesla, likewise, off by 1.37%. Question for the chat, are you guys still trying to buy the dip here in Tesla? 14.5% fall around its earnings the other day. It's finding follow through here today. I saw something really interesting. Maybe other people are partial to this, and it's a view that Mike Butler's been sharing here on air for a few weeks' time. It's the idea that people's attention is now split between Tesla and SpaceX. Before, if you wanted to play SpaceX, you effectively had to buy Tesla. Now, the folks who are interested in Musk for his space odyssey, for his electric vehicle and robotics machinations, their attention's divided. And so there's not enough of a crowd to prop up both names. Is that a concern for you if you're a bull? Or it doesn't even matter? I have seen some names try to play some trades here across the session. Earnings are coming up next week on August 4th. So if you're looking out for a potential SpaceX earnings trade, you're probably looking at 11 days to expiration, maybe a little bit too soon to put that kind of trade on, especially if you're trading earnings this week with the whole slew of big names that are coming up, your Microsoft, your Meta, your Amazon, your Apple. But right now, if you're just going out to the bottom of the expected range here, you're on the trading tab here on the platform. You look to that top right in your IVX, you see that number in parentheses, $22.45 in either direction. Here on the actual platform, when you're looking amongst the strikes, it's going to be that brown bar. So we're doing the short strike just at that brown bar, long strike $1 or $2 wide. Probably not worth it just yet. And I say that because our typical mechanics around here when we're looking to do something like sell volatility, which in this name quite elevated, 104 IVR, coupled with that 155% raw implied volatility, you bought about a third of the strike of the width for here on the credit. And it's only 22 cents, 22%. So $1 wide, not nearly enough. We'll probably keep this in our pocket and look out next week. But that does bring me to the attention of what's happening this week here, because earnings are going to be picking up after hours if you're trading Nucor, Welltower, or Cadence Design Systems, which I don't think many people would be. Those are after hours here today. But some things are coming out tomorrow, and I suppose we should start with the stuff that's coming out early in the morning. We do have our Coca-Cola, for example. Coke trading up 2.17% here today. Nice day for some of these staple names, as it were. 80 IVR right now, but when you look at the raw volatility, it's pretty light in the mid-20s. Nevertheless, the goal here is to find a trade. So if we're looking at 80.81, we're going up to 87.88, just on the outside of the expected move. It's $1 wide. You're getting about 30 cents of credit here. It actually fits pretty well. I'm going to send it. Risking $71 to make $29, 65% probability of profit. There might be something to do in Coke, and Coke's not a semiconductor, so looking for like a 10 or 15% swing I don't think is necessarily the risk that I'm too concerned about right now. We've seen that with the hyperscalers, what have you. Boeing, likewise, out tomorrow morning. They are expecting a 34-cent loss in their earnings per share, believe it or not. We take a look at the trade tab for the 4 days to expiration. Are we getting any juice out here? Again, we could go wrapped around the one standard deviation move, which just sits outside the expected barrier. What are we looking at? On $2.50 wide strike, you're looking at about 81 cents a credit, which is pretty good. That's basically where you want to be. Ideally, 83 cents a credit if you're going to go for a third. But hey, it's actually there right now. So let's pump this up. Let's see if we can get filled today. 85 cents of credit on that short iron condor here in Boeing. So look, some of these tomorrow, they're not the sexy names, right? At least in the morning, your Coca-Cola, your Boeing, they're not the ones that are going to set the narrative or the broader trend for the market. But there's still some decent vol, and moreover, there's decent pricing for risk to reward when you actually take a look to grab an opportunity there. Elsewhere besides Boeing, there's S&P Global, SPGI, which, taking a look again, 4 days to expiration. Where do we sit right on the outside of that expected move? $2.50 wide, 71 cents of credit. That juice may not be worth the squeeze, and surely a 70 IVR with a 58 implied volatility. We don't really need to look there. Three more tomorrow morning that might draw interest. Corning, which has been a real runner here, both to the upside and to the downside in recent weeks. It's given back all of its gains since now April. So April to the high that we had here on the last day of June, the stock doubles, and it's basically given up that here henceforth. But it's an 87 IVR, and unlike what we just saw with SPGI, there is really implied high volatility on the board right now. Much like what we're seeing here, 4 days to expiration, going out $1 wide just for the sake of this conversation. Can we go fishing and see anything? We're going to have to change this because of how the strikes are staggered down here. Let's go 5 wide for the sake of this. 122. So $5 wide strike, ideally looking for $1.67 of credit. We're pulling in $1.70 of one at the one standard deviation move, 64% probability of profit, risking 327 to make 171, a clean 2-to-1. Gotta send it. Fits the mechanics, fits the criteria. Filled, done. And then Glasgow Perkins, GSK. Let's see here, ADR. Not a lot of vol, and we'll go 50 cents. We'll go $1 wide, folks. What does that look like? 38 cents a credit, $1 wide strikes. Fits the criteria, 62 for 38, 59% probability of profit. Okay, so there we go. We have some earnings things to do for the morning tomorrow. Visa, CLAC, and STX are in the afternoon. So while you'll see them on your earnings scorecard for tomorrow, those are trades that can be put on, I think, during the day, saving the capital for what we just used today, roll them over into CLAC, STX, and Visa. And certainly for CLAC and STX being some of the semiconductor names in a tape like this today, they are feeling a little bit more heat. May have a better chance to find the strikes that you want that are more appropriate for the earnings as we get closer to the date here. But for the sake of this conversation, I look at CLAC right now. I'm looking at it 25 days. There are no 4 days here. So if you're playing these earnings, you got to give yourself a little bit more time. You still treat it like an earnings trade. If you're doing a short vol trade, will it work right away? Probably not. As TP, as Liz, as Jermal, as Mike often point out, if you're looking for vol crush, there's a reason why you trade the earnings on the shorter expiration cycles. The vol gets crushed in that cycle. At 25 days, there's a lot that still can happen out here. But for the sake of this, you're going $2 wide on these strikes right at the expected move, $1.90 and $2 wide. I mean, you're getting paid. You're certainly getting paid to take the risk. Whether or not that's something that you want to do is a different story here, and I might be leaning a little bit to the downside than the upside right now. Same thing for STX, by the way. Similar setup here. Unfortunately, you can go to 4 days to expiration, but you can see with STX at that 4-day strike, you go $5 wide at the expected move, and you are getting paid quite handsomely because of all the risk in here. 170% volatility, $5 wide credit collecting $2.90. Or $5 wide strike collecting $2.90 in credit. That's pretty spicy. That's a lot. You're getting paid better than half, more than 50%. Almost, yeah. Pretty good, almost 60% there. But I'm not going to take these right now. I don't see any reason to do them right now. If you're just tuning in, though, hey, production team, we might as well go to refer a friend while we're here. You notice that I'm doing the show alone. It is often the case that you find yourself trading by yourself, but it can be better. Find yourself a friend to trade with. Go to tastytrade.com/refer a friend, tastytrade.com/refer a friend. $100 for you, $100 for your friend. Refer and referee, they both get $100. tastytrade.com/refer a friend. Thankfully, Ilya will be here at the top of the hour for overtime, so it's not just straight 45 minutes of me, and I appreciate you still tuning in. We can go back to those slides, back to the charts here as we wind down these final 6 minutes or so of the trading session. Again, we just talked about the earnings reports that are coming up tomorrow. In the morning, Coca-Cola, Boeing, SPGI, Corning, GSK, and then finally the last one, UPS here, which is one of the morning reports which we have not covered. It's down 1.4% today, in line, by the way, with the broader transportation ETF IYT, which is having its own little bit of a breakdown here in this session. Just to keep it simple, we will then move that here and you there. And you can see how we're breaking up trends and former swing lows, and really no matter how many times you try to slice and dice this to make yourself feel comfortable if you're a bull like I've been. Today feels like a little bit more of a down day here. So keeping in mind that structural weakness in the broader structure, we can head back over to UPS, which is falling back to its 1 month and hasn't really done much of anything against there. 4 days to expiration, 78 volatility. We'll go $1 wide to see what we can price with. Not bad. Not bad at all, in fact. 47 cents a credit on $1 wide strike at 4 days to expiration. We get a little bit more breathing room here. 43 cents a credit on $1 wide strike. You got to do it. When the market's going to give it to you, you got to play the game. So there we have it. We swing back to our indexes here. We have an S&P 500 down 1.5 points now, folks. We've lost another half a point since I popped on air here. It's a market that's been really pinned since that early morning U.S. sell-off. A morning sell-off that started right at the U.S. Open. We were happy as a clam going through the pre-market today. Nothing was bothering us. Oil prices have continued lower most of the session, and yet stocks still decided to come off. So there you have it. The market here getting a little antsy ahead of a Fed rate decision on Wednesday, ahead of the Meta, the Microsoft, the Amazon, the Apple earnings, the big four this week that could really just decide the whole ball game for everyone. But what are we looking for right now for these earnings? I mean, I think what we've seen here is that we have to prove that earnings strength can broaden out with another CapEx scare at this point in time. Every time one of these companies announces they're spending more money than previously expected, the market's been punishing their stock. If it's been an Alphabet, if it's been a Tesla, look across the board in recent cycles. So, yeah, the Fed gets the final word of sorts on Wednesday, but the market also wants to know that there's some fiscal discipline, some budgetary discipline going on here, that they're not just building bridges to nowhere right now. I think you got to stay tactical, but maybe somewhat constructive in this tape, depending upon where you're finding your opportunity. The Russell, to me, is the most interesting part of this whole thing because it is holding up and it tends to be a little bit more growth sensitive than everything else. So while Ilya and I bicker about the fact that we have problems in AI and valuations, if this was more growth related, I would be of the mindset that the small caps would be down a little bit more. So keeping that in mind here, expiration coming up at the end of this week. We were looking at a short put spread here in the Russell, 28.75, 28.50. It's now at 25 days to expiration, so it could be taken off for a very small gain right now. At this point in time, the market is still holding the level, 29.30 or so. It's a swing that you have from June 17th. It's now your 50-day moving average. It's where the market bottomed out Thursday, Friday last week. If you break 29.30, we'll call it, Russell has a problem. If you're not breaking 29.30, then sitting with short strikes below the 50-day, as uncomfortable it may have been for the past week or two as this thing has kind of just ground to the downside a little bit, it can still work. Still working, technically speaking. So I'm going to ride that out as well. Russell's also not a tech name this week, so I'm not really too worried about the Wednesday, Thursday episode here. Could the Fed disrupt this all? Yeah, the Fed could derail this all. Is Kevin Warsh the kind of guy to hike rates because of a crisis? I'm going to take the under. Has anyone actually looked up Kevin Warsh's biography, how he got here? It's not that impressive. It's an interesting path. He's Fed chair, so I'm not gonna slight him that much. But in terms of actual policy experience when he was Fed governor, and you look at the records of those meetings throughout the 2000s, during the global financial crisis and thereafter, Warsh missed the crisis. He has one of the worst track records of any Fed official in recent history over the past 30 years or so in terms of projecting crises and figuring out how to work around them. So if the mantra for the Fed is they're always fighting the last war, they're always late, Warsh seems like the kind of guy who's going to look through this inflation right now and not hike rates. So yeah, there's a 40% chance that the Fed hikes this Wednesday. I'm going to call nonsense on that. If you go back in time, since the start of the available data series for Fed funds futures, the Federal Reserve has not surprised the market to that degree. If there is an excess of 55% odds the day of a Fed meeting for a move, it has happened 100% of the time. So right now at 60%, it's good as gold. If we get to 53.47, we have a different conversation on hand. But as it stands here, if we go into the market meeting on Wednesday with this pricing, we're probably not looking at a Fed hike. So how do we play that? Fed here has done this thing where when they don't hike, when the market thinks they need it, or they loosen more than the market feels is necessary, the long end of the yield curve tends to blow out. Last week, we had the push down through 111 in that long put spread that TP and I were in. Today, got out of the one that was sitting here on 25 days to expiration. Why? Because the market had bounced back, and we're back to the neckline of a breakdown point. So if oil keeps falling, this can bounce back. Maybe it sets up a sell opportunity here. That's where I'll be looking at the long end of the curve. But, we're here in stocks for an end-of-day close that brings us just back above what are 66 points higher on today's session as we go into that close, 74.54. The Nasdaq is only down by 0.2%, but that does not tell the whole story because it was up by 1.4 earlier in the day. Oil prices, they continue their plunge. They're down 8.3%, and they continue to slide here into the close, so worth noting, perhaps giving stocks a little bit of a kick up. We are done here on Last Call, though. A little bit of a solo episode here today. Thanks, everyone, for tuning in. We're going to take a brief break here on Tasty Live. Thankfully, though, the solo show ends, and my partner in crime, Ilya Spivak, will be here. Overtime coming up next. See you there.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Oil plunges, so obviously stocks were up, right? Right? It's still Monday, July 27th, 2026. This is Overtime. I'm your host, Chris Vecchio in New York. He's your co-host, Ilya Spivak in San Francisco. We're here for the next 27 minutes as we wind down what was spastic, jumpy, name it, Ilya, two-faced trading day, where we start the session up with a gap open higher thanks to the weekend news. Trump's threat to present Iran with a bomb it had never seen before, of course, was met with an actual ceasefire because apparently we ran out of those kind of bombs already. Ilya, the market sees oil gap open to the downside and continue to run, basically closing at session lows here. We're at $81.97. We're just about 4 or 5 cents off the session lows. So it's an 8.21% loss. So when oil is down 5% earlier, stocks were on their highs. It was good news. S&P up 0.8%. Nasdaq up 1.4%. So naturally, oil being down 8% today, Ilya, stocks must have had a fantastic day. Must have been up like 3% or so, right?
Oh yeah.
What does President Trump like to say? Wrong, because that's wrong. Nasdaq here.
Fake news. I'm sorry.
Yeah. Oh, you have a pretty good Trump. I've never heard you do that before. 0.33% to the downside for the Nasdaq, off from the 1.4 gain. The S&P 500 basically flat, 0.02, after being up, 50 odd points or so. Ilya, I thought today was going to be, when I said that I felt like Monday was a day where things would be calm, there'd be no catalyst in the market, would just basically be pinned. I figured it would be pinned at like the gap open higher. Not that it'd be pinned at flat for the day.
No.
So kind of right?
Markets would at least take their good news and go, right, okay, good news. Now stop and wait for the big earnings and the Fed.
I guess not. I mean, tomorrow we have earnings that are coming out. There's a slew of them. We just ran through them on last call and put on a whole bunch of trades related to them. Some of them got filled, some didn't. So, take what you can get. Other than that, though, Ilya, it's really Wednesday. That's the day here this week. But what surprises you the most about this move lower this morning? I was thinking there had to be a catalyst. There had to be a headline of something that was driving this. And yet today was not a day with any sort of catalyst or headline beyond the news of the weekend.
There really wasn't. You could look at the abysmal durable goods data if you wanted to. And abysmal it was.
Market reacted an hour after it came out?
Yeah. 0.3% versus 2.5% expected for the headline. 0.6% for the core excluding transport. And the GDP now forecast gets revised down to 1.6%. So the leak in GDP continues.
Yeah, I mean, you say durable goods. This is the 8:30 Eastern candle here when the data were released. I don't even think we talked about it on the morning show because it was just so unremarkable in terms of
nobody
reaction.
cared. Nobody cared.
No one cared. So you get this then spillover as soon as the U.S. market opens up. As soon as the U.S. market opens up. But then we kind of just stay there all day. And so, okay, we washed out of we closed the gap from the oil spike. Further evidence to your point that the war trade is dead as we knew it from March, April, May. Right? If the war trade was alive, oil being down this much should have sent gold skyrocketing, should have sent the dollar plunging, should have sent stocks to the moon, should have sent yields spiraling lower, and none of those damn things happened.
Nope.
So
market is thinking about other things.
Yeah, no, to your credit and to your point, I mean, like, that's when back in May, Ilya, when I was screaming, the war is over. The bombs may be flying, but as long as Trump's calling them loves taps, the war is over. This is even further to that point. Like, the market is, thank you for the catalyst. We reacted to it. We have bigger fish, which is crazy to say, when right now 10% of the world's oil supply is just like permanently offline, thanks to the
and that's just oil, by the way. We're not even talking about all the other things that are trapped in Hormuz.
Right. And yet the market is
of which there is a lot.
Could not care.
No. Doesn't matter. Doesn't matter. And in my mind, this is even more ominous.
Oh, for sure.
Because they go, you know what? We're not going to have an inflation problem because of a commodity shock. What commodity shock if there's no demand? And you go, wait a minute, why would there not be? Oh. Yeah. What if the Fed has to cut next? Oh, yeah. That's a whole other thing, right? You're not afraid of an oil price spike if there's disinflation because the economy has fallen off a cliff. And if you look at the Atlanta Fed's GDP Now forecast, we get GDP this week, by the way. 1.6. The data's this week. We're close. This actually matters now.
It matters now. Ilya, I'm trying to reconcile something with an important anecdote I saw earlier today. Last Thursday, July 23rd, 2026, there were 153,359 commercial flights worldwide, according to Flight Radar.
Okay.
Why does that matter? That was the busiest day for commercial air travel ever. So it makes me think that, oil prices are coming in. Maybe this little turn here in some of these airlines is worth playing. But I'm trying to square this. That is not a sign of recession globally.
No.
People don't. The economy's never like, well, we're about to teeter in recession. Let's get all of our travel in quickly. No one panic travels like this on a worldwide basis. So,
right.
Work through this to me. Like, I see more like stagnation, potentially high inflation with low growth because of AI, more so than recession risk. When I'm seeing things like this happen, when I get these data points across my screen. So square this with me.
Yeah.
Obviously, I'm going to be looking long some airlines tomorrow, which, funny how Thursday last week marked the bottom in the airlines when we get this big travel day.
Yeah.
What's the read through for the global economy then? I mean, like, how can you square those two facts?
I don't know that you necessarily have to square them. I don't think you necessarily have a story here in this one data point. It is certainly worth watching. I would say you look at the issue as it presents itself in the aggregate, and the GDP number looks like it's going to be weaker. And the real question is going to be, why is it going to be weaker? Because the first quarter, and I've been pounding the table on this for months, the biggest scare wasn't that GDP only came back halfway from the government shutdown, right? Before the government shutdown, the economy was growing at give or take 4%, second quarter, third quarter of last year. Once we kind of shook off the tariff spook in the first quarter. Then we get the government shutdown in the fourth. Growth almost stops. Almost, not quite. We come back in the first quarter about halfway, 2.1%. That's half of 4. Fine, whatever. That's not the part that's scary. The part that's scary is that the consumer did almost nothing to give us that 2%. It was almost completely in the investment side of the GDP calculus. And that's not sustainable. It's not sustainable because it's only 14% of the economy. And if it's generating inflation, like we see real rates tell us it's generating inflation, because they've been surging, as you and I have been talking about, since the hyperscalers made their CapEx ideas known in April. Since then, real rates have been shooting higher.
Shooting higher.
Then you look at that and you go, well,
Ilya, you talk about
what is kryptonite for the economy? Real rates.
Real rates, but like this is to me one of the more alarming charts that I've come across today. The 3-2-1 crack spread here.
Yeah.
Okay.
From our good friends at Macro Micro, whose charts I use a lot.
Right. So the 3-2-1 crack spread, just as taking a step back here, it approximates the gross margin from turning 3 barrels of WTI into 2 barrels of gas and 1 barrel of distillate. Okay. When refined products cost more when the crack spreads are blowing out, basically. All right. That's one way to think about it. So why do we look at this here? Yes, oil has come in, but we go over to gasoline, which is clearly not coming in. We go over to heating oil.
In fact, anywhere you go into distillates, anywhere you go into the product part of the energy mix, anywhere, it looks terrible.
Looks terrible. It looks terrible. So you could buy the gas crack, which is long RB, short CL. You could buy the distillate crack, which is long heating oil, short CL. But when we think about the inflation pressures in the system, Ilya, I mean, it's that spread. It's this 3-2-1 crack spread here that just underscores this serious problem that we're facing with respect to inflation for the next few months, where the Fed hikes, the Fed doesn't hike. It's embedded in the economy at this point in time.
Well, you kind of get into an interesting headspace. I mean, you're absolutely right. You kind of get into this interesting headspace where if you're Kevin Warsh, you go, how do I navigate markets that want inflation compensation and a president that wants lower rates? I announce a bunch of task forces that expire at the end of the year, and then I don't do anything and wait for the economy to do its own thing.
Well, Ilya, if we're looking at these crack spreads widening out and staying out, there are 3 names that you could probably use to look into this basket. VLO, Valero, for example, which, go over to like a Chevron here. Definitely a different looking chart than a Chevron or an ExxonMobil, right? So you have your Valero, which marching higher. You could go to MPC, to Marathon Petroleum. That looks a lot like the last chart here. A lot like the last chart here because it's a 3-2-1 crack spread play. You could also go to PSX, Phillips 66, which you don't need to hear me say it again. It looks like the last chart here. The point is, if this is the story right now, right, the play isn't necessarily to be long oil per se. It's that because of the pressure and our lack of inventories right now and what we've had to do in order to bridge the gap for the global economy. And if we see commercial airline flights are at their highs ever last Thursday, the demand for the distillates, for the refined products, is clearly going to stay intact right now in the short term.
Well, yeah.
And maybe so.
People want jet fuel, and there's not much jet fuel. I mean, in simple terms.
That's really all it comes down to right now. So I mean, tomorrow,
like, people want the jet fuel, not that much jet fuel. I mean, I'm going to be getting on a plane tomorrow.
VLO has earnings this week, for what it's worth.
Yeah.
The earnings here, when we just take a quick look, July 30th, so they're coming up on Thursday. But for the end of this week, just on the outside of the expected move, we could go $5 wide around there. It's not as appealing as I hoped it would be. But maybe this is just a short put, because I wouldn't mind getting assigned shares in Valero down at like for $10, $2.70.
Wouldn't be the worst.
Wouldn't be the worst. And that's kind of, but this is one of the things that has flashed across. So jet demand for airline, for commercial air flights, is right now at its highest ever, basically.
Yeah.
Oil supply is disrupted. The 3-2-1 crack spread is blowing out. Short term, maybe the consumer's a little bit healthier. Maybe the global economy is a little bit more resilient. But my goodness, does that mean there may still be opportunity ahead for some of these refiners?
I mean, yeah, there's a lot here because you could mark things up if you're one of these refiners fairly substantially in this kind of an environment.
So easily understandable too.
Yeah, well, I mean, hey, this is like selling snow cones on a hot day.
So yeah, you could do it through the equity. The equity is going to give you a bunch of other problems, right, Ilya? You have operating costs, maintenance, blah, 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 blah. So sure, you could just do long RB, short oil, long HO, short oil. But this is, this is the one that I think we should be paying attention to as we consider the fact that, yes, oil's down 6, 7, 8%, today. 8.5%, we'll call it. Fed hike odds did not retreat.
No. And as we've been saying, I am increasingly of the mind that it could be that this run-up in rate hike odds is a signal onto itself, and that signal is telling you that actually it isn't oil that we need to be worried about. Because if it was, maybe we wouldn't have the run-up in rate hike odds. Because what in the world is the Fed supposed to do? What, they're going to hike rates and all of a sudden Tehran and Washington are going to go, well, listen, Kevin Warsh increased rates by 25 basis points. We got to wrap this thing up. Really? No. What would you have to do to beat inflation that way? Well, you'd have to hike rates to a point where you'd crush the economy and destroy oil demand, crash the price, and yeah, okay, you'll beat inflation. That's a bit like your head itches, so you cut it off. There's not exactly a workable process there. So okay, why does the market think there's going to be rate hikes? Either it thinks the oil inflation is going to get packed into core, or something else is driving up core. Neither one of these things is a good idea to carry around in your head as an investor. And when you see that the market has already done the tightening, again, looking at real rates, highest since the bond panic of last year.
Fun.
Yeah, so if you look at that and you go, why is the market running up real rates like this? Because break-even rates are not going up. They were with oil. This most recent run-up in oil, break-even rates couldn't care less. They're lower now than they were at the start of the year. Why? Because the bond market doesn't see inflation from the oil spike. It sees inflation from AM. And it's already done the tightening. And since it's already done the tightening, we might very well be to the other side of it, where the tightening has an effect. Hence the falling GDP.
It's possible. Hey, Ilya, I got hit with a question here.
Yeah?
What does the market do after these kind of gaps? It's a good tweet. I actually got somewhat serendipitously, Alphatica just put out their report, a statistical study. I just got a copy of this. What happens when the market does what it does today? So it did a full gap and fade round trip. The entire gap was given back. The high to low reversal was 1.3%. Not usual, fairly uncommon, in fact. So of the 25 years of look back, so 5,755 S&P 500 sessions. The criteria was an opening gap of 0.6 to 1.05%, peak gap of 0.7 to 1.2, close within 0.2% of prior close, high to low reversal -1% to -1.7. So just kind of like giving a range for similar occurrences. 14 times has this happened before. The forward returns next day down 0.3%, lower 71.4% of the time. A week out, 1.16% higher 71.4% of the time. 10 days out, 1.71% higher 78% of the time. 3 weeks out, 2.7% higher 71% of the time. Closest analogs are June 11th, 2019 and August 28th, 2009. So the base rate from history, the conclusion of this note is short-term weakness the following session, then modest recovery over the next 1 to 3 weeks. The tendency has been fairly consistent. I don't know if I trust this study here. Not that I like Alphatica and what they do here. And when you look back through 5,755 sessions, I think is that greater than 30?
It's
that is
a
greater than 30.
meaningful sample size. It's nothing to sneeze at.
None of these were in front of hyperscaler earnings.
Well, there's that.
or a Fed meeting.
Or a Fed meeting.
Or both at the same time.
Or in the middle of a war.
Or in the middle of a war. So, yeah, no, these are really
certainly
interesting
none
stats.
of these were all of those things at the same time.
No, and so these are interesting stats, and that does give, the statistician who likes to curve fit inside of me is like, oh, good, we're safe. But reality is that I'm not leaning against what did the Knicks what did Knicks forward Josh Hart say? Analytics are like a lamppost when you're drunk. You can lean on them all you want, but they're not taking you home.
That's a good one. Now, that's a good one. I'm going to have to put that in the filing cabinet and use later. One of the sort of striking things here, of course, and you know this as a fan of seasonality. Seasonality is important. It also only takes you so far. You cannot place a trade on the basis of just seasonality.
Did it work this month?
Negative.
How about July up 11 for the past 11? Best month of the year for stocks since 1928. How could you be bearish?
I'm gonna set down my Celsius so that I can do my shrug.
Yeah.
This is I'm saying this is the kind of thing that I'm talking about when we talk about seasonality, and I say, you're right. And there's got to be confirmation on this kind of stuff, and when the price action doesn't confirm, you got to believe the price action. The same way that you might have, I certainly might have, all kinds of woolly macro theories about all kinds of things. And when the price action tells me, listen here, dummy, you're on the wrong side of this thing for today. You might be right next year. You got to listen.
Okay, so what's the plan for tomorrow? If you were there on last call, we went through a few of these earnings trades. Some of them went through, some did not. Coca-Cola, for example, they have earnings tomorrow morning. Ilya, I'm sitting short the 25 days to expiration. That's not the right strike. This is the right strike, 80.78. This was not an earnings play. It was the market had pulled back into the 1 month, 50-day moving average envelope here recently. It's a bottom left to top right chart. So when we see dips into the broader trend, what do? I'm a momentum person. I look to buy the dip. So I got the dip a few days ago. I tried to get on a short iron condor position before the close. Maybe other people got filled in it at 4 days to expiration, because if you were just pinching the expected move and the 1 standard deviation move, you were looking at 29 cents or so of credit. I think it was 30 cents of credit on a $1 wide strike, which in consideration here, Ilya, right? What are we thinking about? That's pretty close to 33%. Okay, so that was something we were taking a look at. We were looking at Boeing, for example, as well. That one didn't get filled, unfortunately, but right at the expected move, $2.50 wide. These are all in the morning, so you will wake up and see them. This was 91 cents of credit on $2.50 wide strike. That's great. North of 87 cents, kind of where you want to be. I couldn't get filled, unfortunately. We should probably try to put those on a little bit earlier. What else were we talking about here? Where did my Nasdaq earnings page go? There you are. SPGI is not interesting, but Corning, this did get filled. Ilya, Corning. 127, 122 short put spread, 160, 165 short iron short call spread. That makes your short iron condor. On $5 wide strike, it was close to the credit that we were looking to receive, around a third of the width, risking 2 to make 1, basically on the nose at a 60-odd% probability of profit. Was happy to take that. We were looking at GSK as well, which the strikes 4 days to expiration. They weren't really fantastic out here. You're going $1 wide on one end, $1 on the other. 35 cents. You know what? Actually, it's pretty good. It's aftermarket. But these are all in the morning. So if the ship sailed, the ship sailed. But there were some decent plays in here. And I think that's one of the ways that I'm conceptualizing the market this week. There's two buckets. There's AI, and then there's everything else. And in the everything else bucket, I am more than content to find opportunities to play for the expected move. In a name like a Coca-Cola or like a Procter & Gamble, for example. This thing's been doing diddly for months right now. And so looking for, the volatility is up a little bit. It's not a ton of raw volatility, but if something's unlikely to move, I would say it's going to be this one. More so than an Amazon or a Meta. Like we saw Tesla last week. If you played for the expected move like I did, you got your teeth kicked in because it fell 14% on like a 5.6% expected move. So I'm more than comfortable playing the earnings that way this week. Just within the expected move, vol crush for the non-AI stuff. The AI stuff, we'll take it day by day and see where we're at, how we're feeling.
I think that makes sense. I'm kind of looking at it, of course, from this is going to shock you, I'm sure, from a macro lens. And so I'm less interested in individual names. I'm more so interested in this interplay that we're getting between bonds and gold and the dollar and the stock market, and thinking, okay, where are we going to land on a narrative here? And my sense is there's a couple things out of whack if we're going to land on some sort of narrative that is going to see the rate hikes that we have on the board get baked out of the cake, or at least reduced based on what the Fed does. And if that happens at the same time that the hyperscalers do like Google, release big numbers and fall, that's going to make an interesting sort of backdrop. And I think probably the biggest thing that's mispriced there is the dollar. And I know you're long, but I know you're also going to flip this thing the moment it does something untoward. I don't know if I'm so worried about the dollar, even with the Fed doing this. Have you taken a look at dollar Swiss recently? Yes. Glen gave us a nice little report today, seeing lots of people talking about this as the new carry trade. Nice little, we've opened below Friday's close. Friday's low, and then we close above the Friday high there for what it's worth. This looks like it's bottoming. Switzerland, really interesting. Unlike Japan, they don't have an inflation problem. They have low rates. They're telling the world if the currency gets too strong, we're going to intervene. So if there is a currency where I feel comfortable about buying a dip right now, dollar Swiss pulls off on Wednesday. Mm-hmm. Come to Papa. Happy to take you in. Could be. So I don't have my long exposure here. It's the euro, it's the Canadian dollar, it's the British pound. British pound here, Ilya, one of the trades that I set off today. That's a nice little engulfing candle. Move below the Friday low after moving above the Friday high. So short the 39 days to expiration, 134, 135 here. We'll just see how it rides. But hey, you know what? You have a lot more to discuss as well because this is a really big, important macro week. So macro money's coming up next year. And I'm going to be gone after today until August 11th because I'm going on vacation. So everybody's about to hear all the stuff that's going to happen for the rest of this week and maybe next week all in one shot.
Interesting. Fed week, earnings week. The market goes down and you're not here. I'm going to blame you. And you won't be able to defend yourself. So overtime's out of time. Yes,
please. I'll be on Twitter gloating.
Overtime's out of time. We'll be back tomorrow, same time, same place, 4 Eastern, 3 Central. Rest of the week, rotating cast of characters, so be sure to tune in. For Ilya Spivak, I'm Chris Vecchio. Good luck trading. Stick around. Macro Money up next after a brief break. You're watching Tasty Live.
See you there, everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
How many trades must a man roll down before you say that he's afraid? How many times must we be stopped out before our portfolio's decayed? Yes, and how many times will our positions get too big before our minds can be forever swayed? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade. Yes, and how many days to expiration is best? And do I have the right chart? What's the right number of trades to put on to make my probabilities be smart? Yes, and how many episodes will it take before I know where do I start? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to Nasdaq, all CME one click.
Let's go. Turn up, turn up. A 5, 4, 3, 2, stop. I'm designer, they wanna buy me, baby, I'm too pricey. Yeah, I'm cherry, I'm nice things, I'm ice cream, I'm melting. Well, I'm high speed, wanna bet, look at me, I'm on it. Yeah, my talent is reflex. Got a mean whip, let her rip, everybody count to 3. Okay, you wanna see? I'm on the runway, telling them, tell me something. Said I love it, I'm working, I'm perfect, and you know I know I'm worth it. Well, I'm high speed, wanna bet, look at me, I'm on it. Yeah, my talent is reflex. Got a mean whip, let her rip, everybody count to 3. Okay, you wanna see? See? Turn it up. A 5, 4, 3, 2, stop. I got a good feeling. I got a good feeling. Yeah, I love this life and I'm living it up. You can't stop this dreamer. I'm a mad, mad hatter. Call me one of a kind. I'm a true believer. I got a good, good feeling. I got a good, good feeling. I got
Well, the stock market didn't like the news today, which is, of course, an interesting thing considering crude oil is down sharply. And apparently, we're not going to bomb Iran into civilizational destruction. So, what is it that the markets don't like? And what is the price action setting up then to tell us before an action-packed week of event risk? That's what we're going to try to figure out here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And as ever, we're going to start with the price action to tell us what we think might be going on here. But the question, because this is a packed week, must begin with what is it that the markets fear more? Is it the Fed or is it these hyperscaler earnings that are in front of us? So let's see if we can't figure that out, because clearly the markets are afraid of something. Looking at the S&P 500 here, we have a leaking lower. We can take a look at the technical structure here, and we can see we tried our best, but we got, nevertheless, through the range that we've been holding in for the better part of a month. And on the way back today, even with the good news, notice we had an upside gap here today because, of course, crude oil cratered over the weekend. But we cannot undo last week's damage. We continue to get pushed down, and on a retest of the underside of this range that we were holding in, we fail ultimately. Note also, it is an even more dramatic story in the Nasdaq, where we're trying, it seems, not only to break through the more recent range, we're trying to break through the swing lows on the last major downswing off the June high. So we're attempting to break this right here. And again, we got an upside gap. Last Friday, looking at some shorter term charts, let's say a 4-hour chart, we made the break. And so if we look at then how all of this comes together, the view from stock markets is hardly encouraging. I mean, at this point, we've, on the Nasdaq at least, come back basically to where we were in the first half of June. If we look at the S&P, we've come back to about the same area. So it doesn't look big. And certainly in the case of the Nasdaq, it looks a little bit bigger than it does elsewhere. But the market being this heavy, of course, raises a question necessarily. Why suddenly? What changed? What was the news? What was the catalyst? What was the change of weather that's got the markets in this space? And perhaps the most interesting part of it is the news hasn't been bad, as it were, for the main narrative in play, the AI narrative. Much of this damage, the break here, especially through these key levels, happens against the backdrop of Alphabet's earnings last week, which were by no means bad as such. Headline EPS beat by more than 200% relative to forecasts, $9 versus about $2.90 expected. They even went out and said, we're going to do even more capital expenditure to build AI capacity, which April, May would have been news the markets would have loved and held close. Needless to say, that was this whole rally. And yet, not so much anymore. In fact, the market actually punishes Alphabet the day after the report. They reported after the bell. The stock fell immediately in after hours action. And then the next day, it really got taken to the woodshed. And the interesting thing about it is the news wasn't the kind of thing that you would think would be a bad thing. And yet, there was the response. And so we look at this situation then and say, okay, well, what does all this mean? Why? Especially on a day like today, where you get some ostensibly good news. If the war trade were still alive, as we sort of have come to know it, this kind of aggressive decline in crude oil might have been a much better story for stock markets than this ended up being. Why then don't we get a more positive response? Well, perhaps because the war trade as we know it is not the bogey that we thought it was anymore. Perhaps there's something else that's going on here. And of course, we've been teasing out what that might be for a couple of weeks here. Looking at the bonds, we get a little bit of a pop in the bonds today. They don't quite make it back over, but they are trying to show some kind of signs of life here today. But maybe the more interesting thing is gold. And this maybe has been the tell of tells. Because since the beginning of July, gold has pointedly stopped falling. Now, you can see here the response that gold has had since the beginning of the year. It's been an utter sell-off. Here's the start of the Iran war here. Not surprising, really, that gold sells off in this environment. Everybody, of course, starts running around going, well, how come gold sells off? It's a safe haven. Well, it's not a safe haven. It's just another asset. Whether something is or isn't a safe haven depends on circumstances. Because it depends what you're looking for a haven for and what you're fleeing from. And when the risk is a spike in oil gives you an inflation story, yields go up and the dollar goes up, an anti-fiat instrument that yields nothing isn't very much of a haven from anything at all. Just think back to when interest rates went up in 2022 and gold fell with stocks. Why? Some safe haven that was. So gold starts coming down because interest rates go up, because the dollar goes up as a consequence of this war. Now, that makes this price action here particularly interesting because here we are, it's the beginning of July, gold is idle. What's happening at the same time? Well, here's the beginning of July. Crude oil surges. You'd think that's the war trade back. That should be higher rates. That should be gold cracking sharply lower. That's not what happens. It doesn't go anywhere. It's a similar story in the US dollar. Sure, it pops a little, but it's still within this consolidative range that it's been occupying basically since the earlier part of June. By contrast, here's how it reacted to the war trade initially, and then subsequently. So it's not like the dollar is shy about rallying in this environment, but it can't be bothered, not unlike gold, to have anything close to what's going on here. Why? That is the interesting question, of course, that we've been wrestling with for a while. And the answer seems to be, in a sense, hiding in plain sight. And perhaps this week, we're going to find out just how much potency there is in that answer. So, why this week? The economic data is heavy duty. And so we start here with a relatively slow open to the week. We get a little bit of a soggy durable goods orders report, but it doesn't really move the needle considering what else we have coming up. We're going to get some Australian inflation numbers later. That should be interesting to look at in the grand scheme of things. But the big story here is not that. The big story here comes by way of a whole other catalyst. And easily sort of the most interesting item on the board from that perspective is, of course, the monetary policy announcement from the Fed. And in that, we are going to get apparently something of substance because Kevin Warsh spent all that time in the last press conference telling us that we are not going to have a press conference unless there is something to say. And then last week, pointedly, the Fed issued a press release that says, "Hear ye, there will be a press conference after this Fed meeting." So must be something to say. And if we look at where the markets are positioning for this, it's a pretty solid chance that we get a rate hike at this meeting. It's not the majority opinion. 62% probability that we're going to get no change. 37, almost 38% that we're going to get a hike. And that's, of course, very interesting indeed, because it means that whoever is wrong is going to be wrong by a meaningful margin. And there's going to be things to do in the market to adjust. These people that think there's a 40% chance that the Fed is going to hike, they imply positioning that were the Fed not to hike, it's going to have to move around and change. And so we're looking at the possibility for meaningful response from the price action to whatever happens. Now, of course, on top of all this, we are also going to get some big earnings announcements from three hyperscalers, 4 Mag 7 companies, Microsoft, Meta, Apple, Amazon, all reporting this week. And of course, if the playbook for this is anything like what happened with Alphabet, that would be an ominous sign, because then we'd get all the stratospheric numbers that we might be used to, and then the market would look at those and go, yeah, we don't like these anymore. And that perhaps is the glue that binds this inflation and AI stories together. The market has been focused on inflation and rate hikes as a function of the rise in oil, the Iran war, the knock-on from that. But what in the world is the Fed supposed to do with a rate hike unless it hikes rates so dramatically as to crush the economy and destroy energy demand about an energy shock? What are they going to do with a 25 basis point rate hike to fix that issue? Probably not a whole lot. So why would the Fed hike rates on that basis? Maybe they don't. And if we look at then the entire layout here, okay, maybe they don't this time, but by September, it's 91% chance that we're going to get a rate hike. By December, 75% chance we're going to get a second one. If we look at the layout for the year, we've got 40 basis points on the menu before year end. That's very much leaning in the direction of 2 hikes. More better than even chances. Now, the pressure from the oil story does make sense. The Strait of Hormuz is effectively closed. No ships are going through. Shipping costs are back higher, and frankly, at this point, are higher than they were during the initial war trade scare. So, if anything, this situation has gotten worse. But if we look at what what that means for inflation expectations, we find they're not rising. Which is not to say that they weren't rising before. They were. When we started the year, crude oil started creeping higher. Break-even inflation expectations baked into the bond market started rising right alongside. Well, no longer. Now they're pinned basically at levels at or even slightly below the year-to-date lows. Meanwhile, crude oil is, of course, still net up from the July spike, even though, of course, it's erased a good bit of it today. Maybe something on the order of 40%-ish, 30. So what is it that's going on here? Well, it seems like the AI and the sort of vigor of its build-out is an inflation story unto itself. Let's consider here. Here's the S&P 500. Here's the start of the Iran war. The war trade takes stock markets down. Here we are, late March, early April. We get the first ceasefire. Markets go, hey, this is good news. And they rally. And this is a rally you see across markets. Here is where it is in the bonds, right here. Here is where it is in gold, right here. So the market is paying attention. It hears the ceasefire. But then something interesting happens. Right here, once we fully erase the war trade and come back, right around here, there's divergence. And it happens right as the hyperscalers come out in the last reporting season and tell us we're going to spend a mountain of money to build more AI. $750 billion this year. Now, of course, stocks hear this and go, hey, that's good news. And we get that chip stock melt up here, which has been idling since May. But that's a pretty big divergence versus what we see in stocks and then what we subsequently see in the bonds, which have a very shallow bounce and then keep going down. That is to say, rates keep going up. Same thing happens in gold. It's a shallow bounce. Gold keeps going down. Function of rates going up. The dollar has a shallow pullback, keeps going up. Rates keep going up. Okay, so why does the market think rates are going up? Is it because it is trading the war? Meanwhile, stocks are off on their adventure in chip stocks? Maybe. That's certainly been the dominant narrative. Or maybe, actually, the narrative changed for all these markets at the same time, and the new narrative actually had them diverge. And it was a different read for a different market environment. Now, why would there be a different market environment right around here? Well, consider what real interest rates have done since then. This is a weekly chart now. Here is the start of the Iran war. As we can see, rates initially go higher. This is real interest rates. This is the TIP or TIPS ETF. It's a basket of inflation-protected treasury securities as an ETF. And what this is telling us is essentially where interest rates net of inflation are going. In fact, that's how you arrive at those break-even rates, is you take the difference between nominal and real interest rates, and you say, well, here's the inflation adjustment to get from the one to the other. So, what is it that we are actually looking at here? Well, if you consider what this is saying, it seems to be suggesting that right as the hyperscalers announced all of those big numbers, real interest rates start shooting higher. And they are now at the highest level since all the way back to the bond market panic when the Trump administration rolled out their tariffs in April of last year. Quote unquote, Liberation Day. So what is this about? Well, If the hyperscalers tell you that they're going to drop $750 billion on an economy, which has this business investment sector so white hot that it's growing at over 10% annualized in the first quarter, what's the market going to say? Well, all this money sloshing around is going to be inflationary in the extreme. We want inflation compensation for all of this. And so real rates surge. Now, if real rates surge, what would you expect? Well, the stock market's just like the spending, but then bonds are going to go down because rates are going to go up, nominal rates. The gold is going to go down. The dollar is going to go up. All of those things that look like the war trade, because it is an inflation response, but it's not necessarily a response to oil. It's a response to the kind of inflation that the Fed might actually do something about. Because while the Fed can't necessarily stop a geopolitical crisis with a 25 basis point rate hike, they sure can put the brakes on an investment boom with a tightening cycle. And what seems to be going on here is the market is doing that tightening for the central bank. Now, a rise in the real cost of money, net of inflation, first or second page of any macroeconomics textbook. That's kryptonite for growth because it makes everything, all economic activity, more expensive. Well, what have you had since then? We've seen that the Atlanta Fed GDP now, this model that approximates where GDP is going to be on the basis of incoming economic data, has been sinking like a rock. In fact, it fell more today after those soft durable goods number. 1.6% is what we're expecting now for the second quarter, down from 2.1% because these higher rates are already squeezing the economy. And perhaps that's why inflation expectations won't budge, because the market is already moving on. That's perhaps why gold won't budge, and looking very much like those inflation expectations. Because the markets are saying, we already had the inflation scare. It was the AI inflation scare. Real rates have already done the tightening to address it. They've already squeezed the economy. The next thing the Fed might have to do is actually cut, because the economy is already weakening under the surface, having essentially overheated at low growth. Because the AI boob was burning so hot that it generated all of this inflation that beckoned all these higher real rates as a response. So let's say we get these hyperscalers come and say, oh, we're going to do so much more CAPEX. What's the market going to read that as? Oh, goody, more inflationary impetus. That's not good news. This was last week, thanks to Alphabet. Another big run-up in real rates. And let's say the Fed at the same time dithers. Well, it reinforces the situation further. So, positioning-wise, I'm still long gold. I'm short the dollar. I'm a little bit long Bitcoin still via this call vertical on IBIT. I'm at this point selling a whole lot of call verticals in Nasdaq as it leaks lower, and a bunch more in S&P as that comes down. And I'm a little bit long silver. All of it on the idea that what we're looking at is a transition where rate hikes start to fall out of the forecast because GDP numbers say that growth is slowing, because the inflation risk is already being addressed by the market's own dynamics, and the Fed can afford to dither and say, you know what, we don't need to do anything. Not yet. And then maybe by the time we get to next year, the conversation actually becomes one about rate cuts. And that should be altogether positive for bonds, positive for gold, positive for silver, negative for the dollar, and definitely negative for stocks. And that is macro money for today. We're going to be offline here until August the 11th. I'm going to take a little bit of a break. I'll be back next month. In the meantime, enjoy all of the Tasty Live programming in front of you, and macro money will return next month. In the meantime, happy trading.